Good morning everyone. Selamat pagi, salam sejahtera. Thank you for choosing to spend an hour of your Saturday morning with us on this panel event with InvestSmart Fest 2021. What's up with retirement planning amidst the pandemic and its future? That's the title for this morning's panel discussion. My name is Husaini and I'm with PPA Malaysia, the Central Administrator of PRS, Private Retirement Schemes. It is my privilege to welcome my two distinguished guests who are joining me on this panel. They are Puan Nik Amniza Muhammad, the CEO of QUAP, and Raman Tang, the Chairperson of MEM. Okay, each speaker, including myself, will have about 10 minutes to present our materials. So I will let the two panelists explain what QUAP and MEM mean in their respective presentation. After the third presentation, I will moderate the discussion on today's topic. So I also welcome questions from the floor. So if you have any burning question or anything like that, please write the question through the tool that has been provided, and I'll do my best to go through them. Yeah. Okay. Without further ado, I will start my presentation first. Yeah. This is about industry update for private retirement schemes. Next screen, please. Okay. PRS was launched in October 2012, and since then we are recording annual growth of 33% per year for total members. And as at close of September last month, we are having almost 510,000 members, more than 500,000 members. I think that this is a very good achievement for voluntary retirement schemes. This is not mandatory, this is voluntary. It's up to members or up to contributors to contribute for their own retirement savings. And then on the right, that's the chart for AUM, asset under management. At the close of September, we have 5.21 billion ringgit in total savings. And I'm very happy to share that annually we are recording almost 50% growth annually. That's pretty amazing in my view for a voluntary scheme. Okay, next. This is something I'm very excited to share. There are 3 years of data beginning with 2019, 2020, and 2021. 2020, as you know, we started our lockdown on the 18th of March, if I'm not mistaken. And then we have essentially been in the lockdown since. It's just all different type of name and SOPs and all that. Okay, so 2019, we had total new enrollment. The chart shows new enrollment for the whole year of almost 28,000 members. But in 2020, with March being the first lockdown month, we actually recorded 25% more of new members or new contributors into PRS. And if you can see for each month, beginning with light blue on the left, yellow, and then dark blue on the right, you can see 2021 is looking pretty good. In fact, is for the first 6 months is exceeding the same month for 2020. But we are looking a bit of decline in July and August, but September we are picking up again. So I'm very excited to see the full picture for 2021. This slide, I also like to share that for PRS, I think mostly because of the benefit of the tax relief, we are seeing more transactions coming in the last quarter of the year, especially in the last month. For example, if you look at December 2020 versus December 2019, it's double for 2020 in 2019. So in a way, the pandemic has been good for PRS in the sense that people are aware that they need to save more, and they are doing it. They are showing it by more enrollment coming into PRS. So this is something I'm very excited to share. Next screen. Okay, a bit of background in case some of you are not familiar with PRS. We have providers. I'm going to talk about that. These are the fund managers or the fund manufacturer, and similar to unit trust, PRS and unit trusts are part of the collective investment scheme. So we have the agents, we have the fund managers, and then we have you as the investors, or here we call PRS members. So whatever you contribute into the funds managed by the PRS providers, the returns will be then recorded or saved into the same funds, which are broken or categorized into two sub-accounts, which is similar to the mandatory scheme as well, where 70% goes into what we call sub-account A and 30% goes into sub-account B. So sub-account A will remain with you until the age of 55, and you are allowed to withdraw for any reasons for up to 30% for sub-account B. But I will have one more slides that will show what event you can actually withdraw your savings from PRS before you reach the age of 55. Okay, one thing good about PRS is that you don't need to know everything about the structure of the funds in order to start savings. For those who are in the know, you can do self-selected funds, meaning you choose your own funds, or if you don't want to be too cumbersome by that, you can use default funds. Next screen, please. Default funds on the right, meaning based on your age, if you're below 45, you can see that you can be assigned to growth fund. If you are between 45 to 54, moderate, and then conservative. Yeah. Or if you choose your own funds, you can go if you want to non-core, like for example, all equity or all bonds or REITs, which is a real estate investment trust and something like that. So it's up to you. You can be adventurous, so to speak, depending on your risk appetite, or you can leave it to your age group to be assigned the correct or the right funds for you. Yeah. On the left, these are the 8 PRS providers that I mentioned previously. 5 of them are from the banking industry, which you're very familiar. 2 are from the insurance industry, and 1 is from the investment house. And we have up to 58 funds that you can choose. A mixture of conventional and Sharia. Yeah? Next funds, please. Next slide, please. So this is how the auto glide works, just to show when you hit the age, let's say if you choose for default fund, once you hit the age of 45, then the provider will move your balance slowly within the next 5 years to the next category of funds. Similarly, when you hit the age of 55, you will be moved to conservative within the next 5 years. So this way, there is no sudden move, like say the minute you hit your 45 birthday, everything goes to moderate. No, this will take 5 years to move, so that it is done slowly, so that there is no total surprise. Yeah, when you see, hey, how come my fund now is moderate 100%, something like that. So this is for those who choose default fund. So this is something we make it easy for those who want to save for retirement without having to know the exact nature of the funds that they want to invest in. Yeah? But obviously, if you do, then when we go to the next screen, please, then you can analyze the fund performance and all that. Yeah? This is something I'm also very excited to share. Since this is showing the fund performance in the last 5 years, which we have analyzed for the red one, which is the average, and the light green is the top performer, yeah? The top most performing funds in PRS. So as you can see, mostly are doing pretty well. Even for conservative, we are recording on average 3.26, but the top performing is almost 4.5%. And if you go to the higher risk funds on the non-core side, you can see both conventional and I is for Islamic are doing pretty well, above 10%. Yeah? This is something option for you. So essentially, you can choose the higher risk funds where it tend to be more volatile, but it also has a higher chance of performing better. Or you go with moderate, which is more balanced, a mixture of both equity and fixed incomes. That's where you can see a more moderate fluctuations in a sense. Huh? Okay, but for year to date, as you know, our market has not been very good. So in fact, there's the non-core Islamic is actually almost minus 1% in that sense. But essentially, these are the short-term valuation, short-term fluctuation or market movement. So that's why for private retirement scheme, because we are savings for long term, we try not to be too infatuated with the short-term fluctuation of the market. Maybe I can explain better in the next screen, please. Okay, this is based on actual record of one fund up to October last year. On the left is the full year from 2012 to 2020 October. As you can see, funds tend to grow in the long term, but throughout the year, there are some low period. For example, in 2020, if you look at the right chart, I marked the X, Y, and Z, and then A and B. A at the beginning of the year, B is the end of October 2020. So the fund performance is calculated based on B minus A. But throughout the year, and true for any capital market products like PRS, the investment or the saving is marked to market. So it's not just 1 ringgit, but it's based on what you purchase, what's the unit price of the day that you save. So if you come in at Y point, which is the lowest of the year, you will gain more when the fund is valuated at point B. But if you come in at X or Z, then you have less. These are all unrealized, of course, because these are gain on paper. It will become realized when you start to withdraw from turn into cash. So that's why in PRS we also encourage regular savings, just like when you do saving through the mandatory one where it's deducted from your salary. We also encourage our members or investors to also save regularly on a monthly basis. Unlike unit trust, where you tend to put in a big lump sum to gain short-term gain, for example, for private retirement scheme, this is saving for your long-term, for your retirement. So in that sense, you don't want you want to ensure that you save on a monthly basis regularly, so that you can ride out the market fluctuations and gain through what we call it ringgit cost averaging. So in for whatever that the market fluctuates during the year, you just put in your savings at a regular interval. In the most instances, the market will get better as we go along. Yeah? Next screen, please. All right, this is just to give you highlights of withdrawals. Although there is a lock-in period for up to 55 for account A, there are other ways to withdraw should you need it. For example, when you decide to move to another country, or you suffer from some serious disease, or you want to buy a house or things like that, there are options available to you. So it's not all about that, voluntary savings are being locked in until the age of 55. Obviously, this is designed for retirement, so there is that lock-in feature, but we do allow, or options are available to you to make withdrawal for the right reason to enjoy 0% tax penalty. Next. Okay, can you just, all right. So there are also options available. For example, if you don't like one fund of the same provider, you can move to another fund. That's called switching. And most providers allow a number of switching done for the year without any fee. Or if you want to move to another provider, you can do so from one fund of provider one to another fund of provider two. That is called transfer. And this is also done. There is some fees involved, but this depends. Some provider may waive that. So talk to the providers first, or talk to PA. We are able to help you in that manner, yeah, in that sense. All right. This is also to illustrate that, while this is designed for retirement and there's a lock-in period, but you can take charge of where you want to save your savings, or you park your savings in order to make the most gain depending on the type of markets or the type of funds that you are saving in. Yeah? All right, next. Next screen, please. All right. So this is the reasons why you want to save in PRS. Okay, one is, I keep on saying this is designed for retirement. So in a way, this is not something that you want to touch regularly. So if you know, or maybe Mr. Raymond will talk about financial planning later on, there are different buckets that you assign in terms of savings. One for short term, or for example, for emergency needs, and one for long term, for example, for retirement. But some long term can also be savings for your children's education, or savings for your holiday, for example, that may happen within the next 5 years, something like that. So there is one bucket for retirement, which you don't want to be touching it unless it is absolutely necessary. So that's why this feature is built into PRS, where the age is 55. But if you require touching your retirement savings, there are options available to make withdrawal for healthcare, for example, or for home ownership. Next is affordable. You can go through PPA's own PRS online website, where you can start with as low as 100 ringgit. You can also talk to an agent, authorized agent, make sure they are licensed through FIMM, Federation of Investment Managers Malaysia, and this is to ensure that you don't get scammed. In fact, this is not a scam because the schemes is regulated by Securities Commission, which is the bottom right. So, and is the safeguarded through authorized scheme trustees. So there are 4 players in PRS. One is obviously the regulator, Securities Commission, and then we have PPA as the central administrator. We are supervised by the SC, and then we have private retirement PRS providers. These are also approved and licensed by the SC and regulated by the SC. And then we have the agents. This is the 4th stakeholder, or the 4th player in PRS. The agents or consultants, they can be individual working with a company, or you can be talking to a company itself, whether they are CPRA, a corporate advisor, or IPRA, institutional advisor. So these are all licensed. So if you're worried about whether this is a scam or not, when you talk to them, insist on seeing proof of their license, so they will be able to show you. Yeah, all right. And as I mentioned, there are 8 PRS providers that you can talk to, whether they are from the banks or insurance industry or investment. Yeah? And PRS tax relief. This is something people mostly look forward to before the end of the year, where you put in up to 3,000, you will get to be able to deduct this from your taxable income. And for now, it's available until 2025. Yeah? But as I keep on mentioning, PRS is designed for retirement. So save extra, because it will be for your own, it will go into your own savings, and which you will be able to enjoy when you reach your retirement age, yeah? Whether it's 55 or 60. Yeah? This is essentially to complement and to top up whatever savings you have out there for retirement, either from mandatory or through other means. Yeah? And PPA, as the central administrator, I've said a few times in the past, I've also said that we have our own PRS online for 2 things. One, you can come in to look at your account, or you can come in to do top up, or for new members or for new applicants, you can also come in to start savings into PRS. We have plenty of data or reading materials on the web under continuous retirement education. You can go through yourself, or you can talk to any agents to explain to you. We also have retirement calculator, where it can help you plan how much you need to put every month, for example, in order to reach a certain target. As for example, if you want to have $500,000 by the time you retire, so how much you need to put in now, in addition to what you have in your mandatory funds. Yeah? We also have our own member services call center, which can, well, obviously we cater to all the major languages, Bahasa Melayu, English, Tamil, as well as Chinese. So just give us a call, or you can write to us as well. And we are currently running some marketing campaign for PRS Online. You have a chance to win some treats. Yeah, so go check out to our website www.ppa.my. We also collaborate with some stakeholders. Like today, we are collaborating with the InvestSmart to help disseminate the awareness of PRS and awareness of saving more for retirement. Okay, I think that's the last of my presentation. Thank you. All right. So now is my pleasure to call the next speaker, Kuan Nick, to do the presentation. Over to you, Kuan Nick.
Thank you very much, Encik Saini. A very good morning to you, our Mr. Moderator, as well as my esteemed fellow panelists, Mr. Raymond, and to all of you who are tuning in this morning. First and foremost, I'd like to thank the Speakers Commission for having me here today. Before I go further into the topic of this session, I would like to share a little bit of background on Co-op to give a bit of perspective and context in terms of what we do. As you can see on the screen, we were established in 2007, so a relatively young organization under the Retirement Fund Act 2007, with the role to manage the fund in achieving optimum returns on our investments to assist the federal government in financing the pension liability. And we have three core functions as stated on the screen. First is to manage, to collect and manage contributions from the federal government, state bodies, local authorities and other agencies. Second is to basically manage and invest the fund in the asset classes as permitted by our Act. This would include the traditional asset classes, which are the listed equity, the fixed income, as well as the non-traditional ones that include property and private equity. The third core function that we have is a relatively new function that has been entrusted upon us since 2016, which is to manage the payment payout of the pension benefits to the retired civil servants and beneficiaries in Malaysia. The next slide, please. This slide shows the mandatory pension landscape in Malaysia. As you can see, Co-op covers the whole value chain of the pension scheme, pension system in Malaysia, except for the policy setting side, which is under the purview of JPA and Treasury. As you can see there that we have two other groups. The second one is the armed forces, which is covered by LTAT, and the one that we are most familiar with, EPF, who covers the private sector as well as the non-pensionable civil servants. Generally, for the Malaysian civil servants to retire and receive pension benefits, they have to meet three main requirements. The first one is they need to basically be granted the pensionable status after being in service for more than 3 years. Second, they need to be over 40 years old, and last but not least, they need to be at least be in service for 10 years. Next slide, please. So within the Malaysian pension system, there are three types of pension schemes. The first is defined benefit, right in the middle there, where Co-op is highlighted there, whereby it is basically the funding by the employers only, with retirement payouts based on a set formula that takes into consideration the last drawn salary as well as the tenure of service. So for Malaysian civil servants, this is their scheme that they have to be adopting, DB scheme, we call it. The second type is on the left-hand side, which is a defined contribution. This is the fixed contribution plan, basically contributions made by both the employer and the employee, which is different from the defined benefits, as I mentioned earlier, which is contributed only by the employer. This DC scheme is adopted by EPF. And last but not least, on the right, which is some scheme that is less familiar to many of us. This is a hybrid contributory defined benefit scheme, which is based on two contribution schemes differentiated by the different ranks of the employee. So LTAT manages the hybrid scheme. Based on a study done recently on the top 300 global pension funds in the world, EPF is currently ranked at number 12 largest in the world with 248 billion US dollars. And QUAP is ranked at number 149 in the world with 36.6 billion dollars. In terms of type of assets, globally, DB or defined benefit accounts for about 63% of total asset under management globally, and with the DC scheme accounting for about 24% of the asset under management. Can we move on to the next slide, please? In terms of statistic, as at August this year, we managed a total of 745,000 pension recipients. 74% of them are the pensioners themselves, and the balance 26% are the derivative recipients, meaning the children and the widows of the pensioners who have passed on. The most common pension payout is between 1,000 to 2,000 ringgit per month currently. Next slide, please. So according to a study by AKPK, it was reported that in-service government employees scored the highest in terms of the financial well-being and retirement planning. So they do have good savings behavior, but they also form the highest percentage in terms of personal loan borrowers. So that becomes a bit of a challenge that we have to tackle upon their retirement. Next slide, please. In general, as we all know, civil servants are blessed to receive a monthly, the previous slide, please. Civil servants are basically blessed to receive monthly pension payment with an annual 2% increase every year, but it may not be enough in the future when we take into account factors such as inflation and increase in terms of lifespan. So it is imperative for one to adjust the lifestyle accordingly upon reaching retirement, to ensure that also gratuity and savings to be invested properly for the rainy days, and also to supplement the monthly pension should it be insufficient in the future. So perhaps towards the last 10 years towards retirement, it is good to explore different types of investments, such as those shared by Cik Usaini earlier. For those who are a bit more conservative, they can go for the balanced fund. And for those who have riskier appetite, of course, can go towards the listed equity funds. But exposure to such investments, I would advise to do via a fund that provides you with diversification strategy, as well as these funds are managed by professionals at a reasonable cost. And it is very easy to liquidate if the need arises anyways. But of course, post-retirement, we would strongly recommend for you to go towards the conservative fund as recommended by Cik Husaini earlier. We had done a study together with My Aging of UPM on retirement preparedness and productive aging among government employees and retirees in the Klang Valley. What we found is that 18% of respondents still had outstanding debts well into the retirement. And what we saw was that, for example, after 11 years into retirement, a total of 13% of them still had a large outstanding loan balance that averaged around 75,000. So this for us is indeed startling numbers when we discuss about the quality of retirement for the pensioners. Next slide, please. In terms of the financial and debt management, what we found also 30% of our respondents in the study chose to have a second career after retirement. And what is interesting is that 40% of them who have retired for more than 4 years stated that they do so because of the requirement for more money to support their livelihoods. So meaning that what they think is sufficient early on is no longer sufficient upon their retirement. Next slide, please. And furthermore to that, as you can see, with the rise of scams worldwide, pensioners have been kind of an easy target for some of these scammers. For example, in the Macau scheme, recently, a total of 61 victims out of 130 were actually pensioners. So typically they would target the gratuity that the pensioners receive at the end of their career. So there is no such thing as get rich fast. So please do check against SC's investors alert list on their website for updates on unauthorized websites, investment products, companies, and individuals. This is a very resourceful platform that can avoid many more getting scammed in the future. Next slide, please. On the topic of civil servants taking into account their respective commitments to loans, koperasi, angkasa, and many others, what they're left with at the end of the day may not be much. So where possible, do avoid committing to long-term debt and ensure all debts are cleared before retirement. It is never too early to plan for your retirement. So next slide, please. In terms of our, go back. In terms of our initiatives, we have conducted various programs on financial planning and healthy lifestyle in your retirement years for our would-be pensioners. In 2019 and 2020, we had around 28 financial planning awareness sessions for over 4,000 participants. This was done back then via the physical venues that was pre-pandemic, but of course virtually after the outbreak. And prior to that also in 2018, 2019, we hosted Carnival Rasa Sayang. This is a weekend festival which was designed based on 5 main areas that covers financial, health, environment, psychology, as well as the social aspect. The pandemic also had caused us to pivot to virtual platforms to reach out to our stakeholders via online programs through a lifestyle series. For example, we introduced Sembang My Pesara, as well as a continuation of online awareness on our SOCMED platforms. We also have My Pesara mobile app, which everyone can download. Next, please. Sembang My Pesara sessions are actually open to public. You may tune in via the Bahagian Pasca Facebook page, where it is regularly updated every month with new content. And please do check out as well our IG, QUAP on Instagram and YouTube pages, where we have many more retirement-related content. We will also welcome the public to download My Pesara app. It is completely free, and you will be able to receive news and updates via the app. But do note that there are certain functions in the app that are only applicable to the pensioners or the civil servants. But other than that, you're most welcome to enjoy the other features available on the app. So there will be a lot of sharing in terms of knowledge sharing, in terms of financial planning, in terms of retirement planning, and so forth. So with that, thank you, Cik Husani, back to you.
Sorry, I've been on mute. Okay, now last but not least, Mr. Raymond, please.
Thank you, Encik Husani. Thank you for inviting me and Point Nick to this timely session. We talk about retirement planning. I'd like to thank the Securities Commission as well, and nice seeing Point Nick, who's been a veteran in the industry as long as I have. Now, I'll be talking about the topic of retirement planning amidst the pandemic. What's the future? Maybe just 30 seconds about MAM. You've never heard about MAM. MAM is an association of about 26 asset managers in the country. And collectively, we manage about over 300 billion in assets. Now, what does MAM do? MAM works to promote higher standards, high quality standards within the industry. And we work with the Securities Commission and other government bodies in terms of promoting the industry and legislation which may or may not affect the industry. So that is what we are. And let's move on to the topic today. Now, how has income been impacted in this pandemic? The next slide. The next slide will show that the changes in income from 1919 to 2020. So that you can see, if you look from the, there's one down arrow that says mean, which means there's an average. So the minus 10.3 there, if you see somewhere in the left side of the middle, it means that on average in 2020, income has fell 10.3% across the whole country, right? So, and if you go down there, if you go down all the blue bars, you can see that some states are affected more than others. The least affected is Putrajaya, which is down about only 4%, compared to, I think, the worst affected is on the right side, Sarawak, which is down 14.6%. This shows the disparity and the impact on pandemic on different states and in general. And you can see that there are some states which are, I would say that if you look at it, are more exposed, let's say, to tourism, Sarawak, Sabah, and Penang, which are in double digits decline. So I think that that's where we need to focus on. The next slide will show the impact. We heard about that a lot of people that say that T20, M40, what is that? Now, this is the Department of Statistics Malaysia classification of what is B40, the bottom 40 wage earners, and how much is the median of the income from 1,929, which is the lowest category, to about 4,387, right? So in that sense, most new graduates will probably start at B40, right? So, and moving up to M40 is 5,300 to a top of about 9,006. And about T20, the top 20, you earn any four-figure income. Now, if we look at the chart on the right, this shows that the pandemic in 2020 impact has moved a lot of the income of people. Now, that's reflecting 2020, and as 2021 is not over yet. So what we're looking at is, if you look at the top numbers, 53.8, it just means that 53.8% of the M40 incomes was affected by the pandemic. They suffered a decline in income. And of that 53.8, 20% of them have actually become B40. Now, this is very worrying, okay? Not only that, the B40 component, if you look at 30.8%, a lot of them have moved down. If you are B4, you probably move to B3 and B3 to B2. So you can read all the data on your own because the slides are available. Now, it not only affects the B40 and M40, even the T20 is affected. 34.9% of the T20 has reported a drop in income. And of that, 12.8% of the T20 actually moved to become M40. So it is affecting a broad spectrum in society, not just on the middle class and the lower class. So what do we do in this environment? The next slide, the environment has changed, but excuse me, the game plan remains the same. Now, if you have not done any savings plan, if you've not done any retirement planning, you've not looked at your own finances, it's time to relook at it again. And it's always good to relook at your savings plan. Now, a hard look at discretionary spending. Discretionary spending means that spending which you can go without. Say, for example, changing to a new car, upgrading to the new iPhone 13. Those is what we call discretionary spending, right? There's a difference between a need and a want. You need a handphone, but you want the iPhone 13, right? Where you can make with an iPhone 6 or iPhone 8. Now, the challenge is also to spend less to save more, right? It's never too late to start. In fact, you can start now, and we look to restart again. And for those who have the income or savings has been depleted the last 2 years because of the pandemic, you need to restart again. It's painful, but you need to restart. And the first thing you need to look at is the changing of a lifestyle, the discretionary spending to be cash flow positive every month, right? The other matrix we will need to look for is to aim to be debt-free at least 5 years before retirement. As what Poinik says, it's very worrying that a lot of pensioners still carry debt into retirement. So I think that if you have an extended family to look after you, you don't have to pay rent, you get pocket money from your children, that's good. But we cannot assume that will happen, right? So in order to plan for retirement, we need to basically focus that we need to spend less and save more. That means adjusting your lifestyle. If your lifestyle is, let's say, as an individual or as a family, is, let's say, 8,000 ringgit a month, right? And you probably need to adjust to 6,000 ringgit a month and save 2,000 ringgit a month. That's an example. Health costs. Health costs is something which is always, I would say, neglected or overlooked by a lot of people. Most people will say that, oh, I have, my company pays for my medical costs. But unless you are a civil servant, which then guarantees that your medical costs are borne by the government even into retirement, most of us who are private sector, the moment you retire or stop working, the company benefits also stop. And if that at that point in time when you are 55 or 60, you start to look at to buy medical insurance for yourself, it's very, very expensive, right? Let's just say normal, you want to buy, let's say, $1 million worth of medical insurance to last from, let's say, 60 up to 80. 1 million may seem a lot, but with medical expenses now going up so high, you've seen the WhatsApp pictures of the COVID expenses in medical expenses. So it may not be sufficient. So start young, right? If you buy young for your children, you buy, let's say, $1 million coverage, it probably costs you about 100 ringgit a month, right? So you start young. And that's the same for saving. This saving for medical insurance, savings for retirement also starts young. And it all comes down to discipline, right? Be it mutual funds, PRS schemes are great. So you need to look for a pool of funds or something to help you to invest. And as Poinik says, beware of get-rich-quick schemes. Anytime they say that sure make money one, I can guarantee you 10%, 20% per annum, or even 10 or 20% a month. So if you are making money, if you are in that scheme, you can be making money, but it's at expense of somebody else, right? That's why we say in our line, there's no free lunch. There's a winner, there's a loser. So the overall scheme is basically take a hard look at yourselves, have a hard look at your spending, and basically look at where you can cut, what are your needs and what are your wants. What about crypto? I don't understand cryptocurrency, Bitcoin or whatever, right? Because they are not based on fundamentals. There are no fundamentals behind it. It's just based on supply and demand, which is basically something I cannot forecast, right? So how has this pandemic changed from the compared to history? If you move on to the next slide, can you save again? You can, because it has happened before, right? Next slide. History has repeated itself. the situation now is very similar to 1998 financial crisis. For those of you who are as old as I am, you can remember then it was also very distressing. GDP then fell 6.7%, unemployment 3.9%. The ringgit fell from 2.5 to US dollar to 4 point something. It took 2 years for the economy to recover after 1999. In 2020, GDP dropped 5.6%, employment 4.5%. I believe that this round recovery should be faster because the banking system is intact now. Compared to then, we need dana modal, dana harta to come in to rescue the banks. And there's no currency crisis. Yes, there's some volatility in the ringgit, but we're not seeing the drop to the extent that what we faced in 1998. And now there's a problem of too much demand that the factories cannot cope. It's a question of reopening up the system again. And I believe that when we move to phase 3 or phase 4 in the MCOs, we will get back there. Now, is there a silver lining in all this? Winston Churchill said in the next slide, never let a good crisis go to waste. Now, what does this mean? This is a good time for those who have been just starting to come up to work or been working for the last 5-7 years, who think that we've never seen a crisis, who've never seen an economic impact on themselves, on their family, or on even their friends. That to know that good times doesn't last forever, and there are things that can happen which is you cannot forecast. So with that, it formulates risk management in the worker's mind that, look, if I don't save now, I've seen my friends or families or even shops which I go to close down for bankrupt and go bankrupt and close down the business. I will need to save up more. And this is what it means. Never good a crisis go to waste. Those of you who have children, this is a good time to start their education in financial literacy in this sense. And with that, I end my presentation. Over back to you, Jay Hussaini.
Thank you so much, Wendy and Mr. Raymond. A lot of interesting data, a lot of good advice. And we are down to the last 13 minutes of our session. 1 hour show is going to run very fast. I've seen some questions coming through. Let me just go through it quickly, mostly about PRS. Any plans to introduce more PRS providers? Yes. One is coming, and we are also, if you follow the CMP3, Capital Market Plan 3, Master Plan 3, SC is also opening up to some digital investment managers. So we'll see more of that in the next 2 to 3 years, for example. And then PRS funds, do you have any that invest in the tech space globally? For the particular fund, no, we don't have a specific tech space or global tech space yet, because those are fairly, I would say, risky, I would say, yeah. And especially if you follow what's happening in China at the moment. But whether some components are into the non-core, I'm not sure. But specific to tech space, none at the moment. Next question, will the PPA be looking at increasing the income tax relief? Obviously, every time we want to propose, we always consider that, but anything extra means less income for the government, so MOF will have to weigh that. For now, the current tax rate will expire in December 2025, so we will look at what is our strategy in proposing for the tax relief for the next round. Yeah? There's a question about the gig economy and how they contribute to EPF, so I will leave that. I think there was some announcement already in the news recently with SOXO and EPF, so I won't go into that. All right, Mr. Raymond, you have a lot of advice for how Malaysians should handle during the pandemic. What about advice to young Malaysians who are just entering the workforce? You mentioned about if they're staying with parents and all that, but you know, what's a common one? What's a quick advice for them in terms of getting ready for retirement?
I think that especially for young people who are coming out into the workforce, it's always good to start saving early, right? It can be, I mean, there are schemes now, even PRS, you can start with 100 ringgit, right? It's just become a discipline that you save 100 ringgit a month. When your salary move up, you can move it to 200 or 500 ringgit. So when you get into that habit, you breed that in the next 30 years, you'll be probably saving probably $1 million or two. Right? So that, I think starting young is the key to instilling that discipline.
Right, thank you. Puan Nick, as someone who leads co-op, a pension entity, what's your own retirement plan? What do you look forward to doing?
There'll be two. The first would be doing exactly what I'm doing right now, still assisting in where possible, on assisting in giving advice on how that people can manage their money better, their finances better. And the second one is, of course, to do social work, which has always been close to my heart. But can I add a bit, Cik Usaini, based on what Mr. Raymond replied just now? The power of compounding. I think that is an absolutely free for all kind of magic that works when you actually do small bits of savings, but in a disciplined manner, as well as to do it continuously. I think Zaini also mentioned earlier, right? You contribute, you invest, or you save every month, just a small bit.
Yeah.
You will not be subjected to the vagaries of the market, because over time it will all kind of normalize. So, and that's how the 100 ringgit a month can turn up to be a 1 million ringgit upon your retirement. And I think for my, also perhaps just a quick advice for the young ones out there, three things. Basically, the first one is to know what you want to have at the end of retirement. Plan early, as what Mr. Raymond mentioned just now. And if once you know how much you need to have in your savings account, then you can work backwards. For example, for civil servants, if you think you're just going to get 2,000 ringgit a month, that means if you think your expenses will be about 3,000, you need to save additional 1,000, right? So on the back of the envelope kind of calculation, if you need to get 3,000, that means you have to save about 720,000 upon your retirement. And if you invest that amount and you just withdraw on a monthly basis, you have some very good, still handsome change left in your fund. And last but not least, also to plan kind of, if you need, this is kind of an insurance, should you need to have that second career, think about that early on and try to start building your skill set or whatever resources that you need in order for you to have that second career post-retirement, if you require that.
Thank you so much. And I don't think I have the chance to ask more questions because we need to go to the next session, which is the pop quiz. Right? How are we going to do that? Okay. So the message is that I will just wrap up. I will thank Puan Nick from Quap and also Mr. Raymond for spending your Saturday morning with us. I'm excited to see all the interesting data, but scary, but interesting, and good advice about saving. It's all about saving as much as you can or as little as you can, but make it regular. Start as young, start as early as possible, and the power of compounding will definitely help in the long run. Thank you so much, and thank you to everyone who's listening in. Have a good weekend ahead. Thank you. Bye-bye. Stay safe.
You.
Very good morning. First, I would like to thank SC for giving me this opportunity to share some of the view on what analysts' role in this the so-called new world. The new world is meaning to the so-called post-COVID. When we say post-COVID, actually it will be more like with COVID. And although the title can be sounds a little bit more provocating in the sense that are analysts still relevant? But definitely, I would think that it is very important, especially nowadays. Everybody knows that it is very important when you do your investment. You need to have a very well informed situation before you can make your decision. And of course, in the past, analysts play a very significant role. But with the internet world, that's the question that how much contribution can analysts provide you for your investment? Now, I mean, as usual, as we are a licensed individual and entity as well, there's always a disclaimer to share that actually what we are providing with you at this moment is just a very general information and it shouldn't be construed as any recommendation. Now, today I will split into three sessions. One is that we have a look back of what do analysts do. Then the second part I will discuss with you on the so-called the epistemic coup. And of course, lastly, back to the very original question of are analysts still relevant? Now, first, let's look back. What do analysts do? And of course, analysts, normally for most of you who are more familiar, are the analysts who work for the stockbroking houses, right? Which normally, in a sense that we call it sell-side analysts. And in reality, they are also we call the buy-side analysts who work in the fund management company or mutual fund or unit trust company, which actually we use the term quite interchangeably. Actually, they are those in the buy side. They are providing the analysis to the fund managers. Although once in a while, they may also surface and doing some presentation for the clients. But most of the time, when we talk about analysts, it's more on the stockbroking side analyst. We call it the sell side analyst. And essentially, they cover, of course, individual companies. They need to understand the industry and also they need to understand the economy. And in the current context, compared to 20, 30 years ago, they have to know not only Malaysia economy, but also globally because we are in a globalization world. And normally, analysts, although you can see that they have a certain fixed coverage, we call it universe, and normally they will be expertise in a certain industry. Although sometimes they may cross over a few industry. For example, an analyst that covers, let's say, property sectors, sometimes they may also covering the so-called construction sector and even extend to infrastructure because some of these are actually quite interrelated and of course ultimately based on the analysis. Now again, this analysis I will share with you later, but based on the analysis, then they will come out with an opinion of whether they will recommend a company or stocks as a buy, sell, or sometimes they call it hold. Now, bearing in mind that for analysts, right, under SC best practice, right, they are supposed to be independent, which means that, they shouldn't be influenced by, let's say, the dealers or remisers because the clients say that they like this company. Can you write a positive report on this company? Which definitely is a no-no, right? I mean, they have to be very independent. They have to do their own analysis and come out conclusion from their own analysis, not because that is a very big client, important client. Since he's interested, I must write some positive news or positive report, which definitely is a breach. It's a breach of the independence. And of course, if something happened, SC will definitely go after the analyst or even the company. So essentially, first, to be a good analyst, an analyst that most of the clients will prefer to read his report, he must maintain a very high standard of ethics, because ethics is very important, which actually links back to the SC best practice in a sense that he must know, right, the current existing laws. When we say laws, of course, it's not limited to the financial industry, right? I mean, although normally we'll say the laws, rules, and regulations normally cover what analysts should do. But bearing in mind that when analyst is covering sector or companies, they need to know the laws within the companies that is the companies is operating. Like for example, let's say now they need to know, let's say, is there any export restriction? For a while, there has been some issues and news on the labor situation and all this. So analysts cannot be ignorant on that. And they must maintain an ethics, not because that they recommended a stocks, right, as a buy, and then they realize that in fact, there may be some breach of the laws, and most of the time, sometimes it's related with international laws, then they just ignore it, the possible consequences until the news pop up, which is definitely is incorrect. They have to be very aware of the laws within the sector they are covering, not only local laws, but also internationally. And of course, I always stress it is very important to maintain independence and also very objective, right? To ensure that his view, right, are based on facts. And of course, we don't know the future, and analysts need to have some future view. But this future view must based on certain reasoning. Not like in the morning, I wake up, the sky is blue, I feel very happy, so I think things should be good, and therefore I recommend a buy. Of course, this is not the case, right? It has to be very objective based on what they know, right? All the information. Okay, maybe it's a bit misleading to say all the information based on the information that analysts are able to secure, because we can't know all the information in the world, right? Until we are in the AI world, which I will share with you later. Then he will come out with a view on based on some of this and a certain justifiable assumption. That's why he recommend a buy, sell, or a hold, right? And of course, there's no way that the analyst can misrepresent anything, any facts, right? You can't hide away some facts that go against your view. That's the reason that it's very important when you want to identify between a good and bad. Maybe it's not a good word to say good and bad, a good and an average analyst, right? You must see whether they'll mention certain facts that, yes, I'm aware of this. There's some of this issue, but let's say, but based on my analysis, I think it is not that significant. Not to say that he never mentioned about some possible issues or risks, which even market participants are already aware of, but it may not happen, becomes so-called negatively affect the company and the share price. Misconduct is very clear. I mean, this one, I don't have to go through so details because for those who are interested, you're always welcome to go and read the SC regulations. I mean, there are a lot of insider trading and so on and so forth, which is actually linked to the material non-public information. Because on and off, they may have some non-public information, and they cannot use that to be in the report. Although, I mean, we have one term, we call it mosaic theory, because based on all the information, publicly available information that you gather, actually it may come to a conclusion that may be similar to the non-public, which actually is fine. So long as all these are available, publicly available information, and then you come out, realize that something is not right, and only later the company announce it. Okay, then of course, definitely they can't do market manipulation, right? You can't tell your client, your favorite client first to buy the stock, then only tell other clients so that they can move the share price first. And then of course, you need to have a very fair dealing with all your clients, equal dissemination of information. When recommendation, this one is a very challenging on the equity side. But if you are an analyst that looking at unit trust and all this, you must also look at the suitability of the client risk profile, whether the product is suitable for him or not. And of course, performance presentation also is more towards the buy side rather than the stockbroking. So I couldn't go in details. And of course, preservation of confidentiality, which is actually quite linked to the so-called non-public information. Or sometimes it's that you know that some big clients are buying it, you shouldn't share with other clients. Hey, I know certain big insti is buying the shares, you should look into it. These are very confidential and you should not share with your other clients as well. Right? Of course, ultimately, whatever you do, you must have a duty and reasonable basis. Now, when we talk about analysts, there are three types of analysis that analysts can perform. In general, of course, in actual, there may be even some subdivided into it, but broadly, we have the so-called fundamental analysis, which is essentially analyze a company, looking at the financial statement, doing financial analysis, constructing a financial model, forecasting the earnings, which is the normal, very usual way of analysts doing their analyst report, right? Then, of course, you have another very familiar, I think for most of the retailers, some of you also will use the technical analysis, which is essentially, right, looking at the chart, to identify the buy and sell timing, and sometimes, what is the floor price, what is the ceiling price, like the so-called support resistance, and to determine whether what further action or the next action you should take. Then another one, which is not that common in Malaysia, is we call it the quantitative analysis. This quantitative analysis essentially is trying to understand the price movement or the price action, which is slightly different from technical analysis when you look at the chart. This one is trying to understand the price movement and, of course, ultimately to forecast, right, the price, the future price, using mathematical models or mathematical equations, right? Some of the very common one, the simplest method actually is not much different from fundamental analysis in a sense that they look at the valuation. Like, for example, you try to identify stocks with the best dividend yield, but instead of doing your own dividend forecast, you may base on the market consensus. That means consensus of all analysts, right? That is the very simplest way of doing some quantitative analysis. Then, of course, you have a little bit more complicated one. This is what we call so-called multi-factor analysis, right? I mean, knowing that share price is not only affected by, let's say, just dividend yield alone, right? It may also affected by the price to book, PE, and sometimes earnings momentum, and so on and so forth. So this is where they try to build a mathematical model, including all this into a formula. And then towards the more sophisticated and complicated quantitative analysis, you really have some complicated mathematical models. Some of you may not be familiar, but for those who are with engineering background, I presume you all have heard of terms like Fourier transformation. So sometimes they may use Fourier analysis, try to predict the share price. So this is what we call quantitative analysis. Now, the type of report that normally churn out, like say, if it's a fundamental report, I black out the rating and target price because today's presentation is not supposed to meant for recommending any stocks, and market may move, our view may have changed. So, just for you have a general idea, right? Fundamental analysis, essentially we look at the, let's say in this, we have some key bullet points. We look at the position of the company, right? In this case, it's the Burma's Auto within the auto industry, and how will it be affected by the so-called global semiconductor shortage, and so on and so forth. So these are the so-called very common fundamental analysis, right? Then, of course, technical analysis is very clear. I think you all know very well already, so I don't need to elaborate so much on this. Then another one, the quantitative analysis. Now, this is very interesting. We do provide some research on this, but our research actually is on the one of the ETF that is listed in Bursa, which is called the Trade Plus DWA Malaysia Quantum Tracker. This quantum momentum tracker essentially is a quantitative analysis, and of course we use another approach trying to identify or trying to understand whether this quantitative approach on the momentum whether it really follow the trend, and that's where we come up to a conclusion whether we think that this quantitative momentum at this moment is really following the uptrend or downtrend. So this is something that is interesting. If you are interested, can go to Bursa Marketplace, and there are plenty of ETF reports up there. Now, let's go back. Like I say, most of the time at this moment in Malaysia, most of the analysts are doing the fundamental reports, right? So when they're doing the fundamental reports, essentially, of course, the content of the report, they'll look at the industry, right? Understanding the competitors, the trends, and then, of course, understand the management, how they manage the company, what is their view towards the industry. Of course, look at the financial result historically, and then do a forecast, right, based on certain assumption. And then from that forecast, they'll do the valuation on whether the company is overpriced or underpriced. Let's say there are various approaches on that, whether the simplest is, of course, price to earnings, the so-called commonly used PE ratio. Then, of course, even on the valuation, the PE ratio, it can be on an absolute basis. That means based on the company itself and its historical or relative to its peers and all this. Then from there, the analyst will come to a conclusion whether the stock currently is undervalued, overvalued, and therefore he will put up his own recommendation. Now, again, fundamental analysis, and one of the reasons, again, let me just put it this way, in investment world, as everybody knows, it is more an art than a science. So there's no absolute method. And we are trying to actually forecasting the future. And we are all not God. So essentially, we don't have a crystal ball. So there's no such thing to say that fundamental is absolutely better than technical or quantitative and vice versa. Each have their own strength and weaknesses, right? We are just trying to understand the future price movement only, right? So there are times that you are right, sometimes there are times you are wrong, but you must have a basis. And if your model is good enough, probably it gives you more than 60-70% probability that most of your forecast or we call it call, your recommendation should be relatively, in a sense, quote unquote, I will use accurate, right? So, I mean, of course, to do all this, first you must understand that the world is very complicated. And this is already a very simplified, first to understand the economy. Although sometimes you'll say the economist is the one that doing it, but in a normal research company, even economists doesn't work alone. Because if you look at here, right, of course, like the GDP and all these, economists normally will have his own model. But even then, when you look at GDP, part of it is on the export-import. This export-import, sometimes analysts may have a better information, right? Because they are covering the industry, they are covering the so-called the companies that you may know whether it will affect the import or export. For example, if you are covering semiconductor, you know exactly, whether the demand is picking up or not, even before the macro data are being released, because if you follow it closely, right? So that is something that even, for example, right, corporate profits, which is on the right-hand side of this flow, right? This is where you have both the analyst view and sometimes you have the macro view. So this is where you need to work together so that everybody try to fine-tune their own model, right? And then CPI also, sometimes the information may actually come from the individual company to saying that, oh, because of the certain costs are rising, we can't absorb it. We probably need to transfer the cost to the end consumer, and that will affect the CPI, that will affect the economist macro view as well. So it's not an isolated situation. Both economists and analysts actually work side by side, and each one trying to fine-tune, in a sense, call it iteration of the macro and micro model, right? This is exactly where it is, right? At the center of it, I put the word as asset, which is actually the company, the stocks, right? Then you have the industry, then you have the macro. So normally you have to take both top-down and bottom-up, because analysts are analysts, right? They can't, right? Very rare. I mean, very rare. I have to use the word. And not to say that they totally cannot, but it's very rare that an analyst can have also becomes a very good economist as well, although there are some, right? So you need to work both sides from the bottom up. Analysts look at the company industry, feedback to the macro economists look from the macro, feedback to the industry, and then to the company. And then from there, like I say, through the iteration that you can come out to somewhere is the most likely scenario, right? I mean, in a very simple example, let's say now everybody, to a certain extent, we know that energy prices has gone up, but again, there will always an argument, let's say how far the crude oil prices will go up, right? Whether it's $140 or whatsoever, but even let's say it goes up to $140, will it just stabilize there? Or because when it go up to $140, economies start to slow down, demand become less, and therefore supply-demand equation will shift the oil price down. When oil price down to a certain level, demand pick up again, then it will push up the oil price, right? So these are the iteration that somewhere I mean, when analysts, economists both are working with each other, exchanging information and fine-tune it, that's where you find a so-called equilibrium point that you form your forecast, let's say for next year or 2023, right? And another thing is that people have a lot of misconception, believing that, again, I'm not saying that they are not good or whatsoever, but always have a believing that accountants normally can be a good analyst, which I would say that it's not necessarily true to a certain extent, because the workflow is totally opposite. Of course, accountants have all the knowledge. It's easier for them, right? But they also need to adjust themselves, because when you are an accountant, it's very easy, right? You are moving from the left to the right, the blue arrow, right? You are asking, the company to provide you all the business transaction. That means the invoice or whatever. From there, you construct the financial statement, right? You check the journal entries, or you do it, and then you ultimately summarize it and present it as a financial statement. But unfortunately, even you are an accountant, when you become an analyst, that means you already left the company you have been working with and becomes a sell-side analyst. Now, your workflow actually is opposite of what you used to be, right? Analysts look at the financial statement that is already summarized by the accountant. From there, they're trying to understand, what are the actual transactions that's moved within the company. So, in a sense, it's a reverse engineering. So, yes, accountant will have a better feeling of it, but to do a reverse engineering, also it is quite challenging. That's why I say that the perception that accountants are always better is not necessarily true, right? Because they must be able to do reverse engineering as well, right? It's just like an engineer can build a good car, but to repair the car, sometimes mechanics is better. So similarly, in terms of financial analysis, so whoever can do a good reverse engineering, including accountants, normally will become an above average analyst, where their reports normally were able to identify the risk that the company may have into the future, even though at this moment it doesn't seem to able to identify it easily, right? So now, beside financial statement analysis, right? What else? Analysts first must essentially, right, doing some so-called intelligence gathering. Of course, here I use the word creative intelligence gathering in the sense that in Malaysia term, we either call it busybody or KPC, right? In elsewhere, so that you get some information. Again, make sure that it's a public information that can help in your decision making, that can enhance the understanding of the company, right? It's just like, for example, let's say a company come up with a new product. The easiest normally we'll say it's consumer products. Let's say potato chips, right? So will these chips be a hit product for the company? Of course, you will talk to the company will tell you this is why they come up with a new product, where is the difference, how the taste has different, and so on and so forth. Now, is that as what the company want it to be, right? Of course, the company has done a lot of research, a lot of market survey and all this. That's why they are very confident. But at the same time, analysts normally will also go out, right? Try to, let's say, look at the supermarket, don't worry. Head of research normally is very understanding, right? If you're covering consumer, you spend half a day in the supermarket. It's not that you're wanting your job, right? Knowing that you are trying to do some market research, look at it. Let's say, of all the people who visited the supermarket, buying potato chips, how many are taking the new products, and so on and so forth. And then, of course, sometimes you can be busybody, chit-chatting with the guy and asking, why you like this, because of the taste, and then from there, you get a better understanding. And sometimes it gives you some idea, right? Whether, if the company is going to launch another product, you think that it's going to be successful and all this, it gives you more confidence in your so-called recommendation of the company, right? This is what we call it. And of course, needless to say, there are plenty of sources of information, right? But nowadays, of course, under COVID, there are a lot of times we can't move out. But having said that, even internet now accounts for a big part of the information sources. Analysts still need to go out to talk, because certain products you can't just imagine from your own table on your own drawing board and say how it is to be like that. Of course, again, most of the time it's easier to say than do it, because certain products you just can't see, right? You just can't see, right? If let's say a company that is providing components inside the handphone, you just can't see it, right? So you need to go out, talk to some people like trade association, industry, and all this to understand it. Okay, so until now, this is what the analysts do. But like I say in the last slide, right, internet now accounts for a big chunk of information, right? Although kick the tire is still important, but there are also a lot of information, right? Like I say, in the past, you may just go to the supermarket, look at it, how many, take the new potato chips and all this. But nowadays, that through Twitters, WhatsApp, Facebook, all sorts of SNS, people will spread around to say whether I like this product, I don't like this product, I like it, but when I open up, there's something shouldn't be inside, it's there, so we don't want to buy it, and then it just spread like wildfire, and so on and so forth. So it makes the analyst work becomes more challenging. And this is what I call the so-called epistemic coup, right? The so-called information coup. Okay? So, this is what it is. This is from Google.com. It's telling you that every 60 seconds, how much information is in the internet, right? Of course, Netflix. Nowadays, people have to, right? Because you can't go out. Some of your spare leisure time will end up in Netflix. But what we are trying to say here is that if you look into it, right, you have a lot of things like on the lower part, you have more than 15 new reviews every second on anything, right? And then there are plenty of files being uploaded. Some are for public information, and then 3.8 million searches on Google, and so on and so forth. So this is what is telling you that there are plenty of information that flowing on the internet, that some of it can be useful for analysts doing his analysis, right? So that's why, and now it has changed the world, the way that analysts work, the way that the sell side position the analysts, right? This is where I call it the epistemic coup. Epistemic technically is a term used as a knowledge, right? The knowledge coup, because in the past, only certain group of people have access to certain information, and that becomes their knowledge. But now, right, because of digitalization, right, because of internet, a lot of information are easily, and in fact, a lot of them are free, right, accessible to all users, right, through internet, right? So, which means that information that used to be only belongs to a certain group of people becomes very easily accessible. Let me just put it a very simple, when we look back, right, in the 1980s, up to even 1980s, I think around 1990s, right, let's say if you want to do an analysis on the company, you need to look at the annual financial statement, the so-called annual report. How can you get it? It's not easy, right? Right? Analysts, of course, they can, because it's provided in the Bursa. They can go to the Bursa, and then they can collect it, or sometimes company will send to the sell side, to the stockbroker on the annual report. But if you are not a shareholder, it's not easy for you to get an annual report, right? You need to write to the company, wait for it, and all this. But now, at the moment, the annual report is being published, right? Essentially, it is also uploaded. It's also uploaded onto the Bursa web page, and you can get it immediately. So, I mean, you have the information at the same time as the analyst. So, if you know how to do analysis, then it goes back to the question of, do you need analysts? Or rather to say, from the stockbroking side, that do I need to employ analysts, right? This is what we call it the so-called epistemic coup. So what it means and the implication is that at this moment, I mean, from the analyst's point of view, right, your customer is also your biggest competitor, because what you have, they also have, right? So do they have an incentive to support you? If what you are doing, they can also do, right? So it all depends on how much value add. That's where we use the word, right? Whether you get disintermediated depends on your distance from the marginal cost. Now, this speed of disintermediation and distance from marginal cost is exactly when the information marginal cost close to zero. Of course, right? Everybody is the same. But if it's further from that and it start moving down to zero, right, you will get disintermediated very fast, right? So, will that happen? That's where the importance of how an analyst can add value in the future in this so-called digital and internet world, or using the topic I use is in the world of knowledge and information democratization world, which means that information are being democratized, right? Everybody can access to it, right? So now analysts have to move a step beyond, right? Not only knowing financial knowledge, they need to work with some of the IT people, right? One is, of course, we have been talking, the world has been talking about AI and all this, right? First is that you must be fast enough. So you may get AI or automated to read the earnings transcript, and immediately you don't need to transfer the data, and even you can assess the management tone in the world when they describe the outlook and all this, right? And then, of course, we so-called that you can use AI. Again, this is mathematical model, which is closer to quantitative on the so-called relationship mapping between, right, the stocks and the market indicators. And these market indicators can be anything. And then another one is, of course, alternative data sets, right? Like, for example, tracking the ship movement, tracking the now everybody knows about the Google movement and all this to find out, whether things have moved or not. I mean, one very simple example that is being always cited, if you are covering retails. Malaysia, I think it's a little more challenging because most of our shopping mall parking is so-called indoor. It's inside the building. But in US and all this, you want to know whether there's a change in the consumer shopping behavior. The easiest way, because there is open air parking, you just look at the satellite photo. Look at the satellite photo, right? I mean, a satellite photo will tell you, right, whether the car park is empty or not. Then you know, right? And then you know exactly how to forecast the company's earnings, because from this type of alternative data set, right, you can find some relationship mapping between, let's say, number of cars, over a certain period, and also the quarterly revenue and earnings of the companies, right? Because when there are more cars, presumably, right, the sales should go up. So that is where you can do a better revenue forecast, fine-tuning, right? Your recommendation, if you initially are very positive, but somewhere down the road, you realize for some reasons that the car park is always, 2/3 to 3/4 empty. You need to revise down your earnings. You need to downgrade the company. Or it can be vice versa. These are the examples, right? These are an example. Then even for macroeconomy, sometimes, and to a certain extent, I mean, again, some of this information are not necessarily free already. That is where I think even in this so-called epistemic coup, or in the world of information democratization, right? Certain information are still not free. That where is where the analysts are still a little bit, are still relevant. Because another example is the satellite photo, the night satellite photo, right? Why is it significant? By looking at the lights, right? Certain factory, of course, you can argue that some factories has no light, right? In China, they call it the dark factory because it's fully automated. But then again, when it's outside, they still need to have some lighting, and it depends. If it's a heavy industry, right? Normally you can see all the lights are there, like the steel industry, oil refinery, petrochem industry, and all these, right? So by looking at the lights, right, the satellite night photo, the light at certain area depends on how high the resolution. You can also understand, right, the so-called capacity utilization to a certain extent, right? These are the future. It's not, I can't use the word future, but this is what is happening in the analyst world, analyst space at this moment. Although it is not common in Malaysia yet, but it's getting more and more common in elsewhere. But because now it's a transition stage, there's an argument of, the groundwork, kick the tire, is not necessarily that inferior at this moment. But looking forward, it will become a very big question mark, right? So, putting this way in a sense that, I use the word droidonomics because looking at now, we are already half in the world of the droidonomics, where a lot of, because we know that professional services, including analysts, are essentially problem solving. I mean, analysts in a sense is problem solving also, right? Looking at the historical financial performance, try to understand the future and give a view, right? A problem solving to the what is the future outlook or a solution, right? So with AI, with the internet, so it is actually much easier on a certain thing because, right, computer can process information much faster than human being, right? So this also, in a sense, like I say, is a democratization that will be a very challenging for analysts if analysts themselves doesn't know how to transform. And this is a very interesting survey just done recently by the CFA Institute, right? Some of you may be familiar. And you look into it, you can see that, the question is, how is AI or alternative data being used for analysis, right? You can see that at this moment, most of them are still not using it. I mean, if you look at the left side, it says that most of it, right, AI alternative data, one is, of course, scrapping scrapping third-party website, right, including regulator site, right, to know what are the new regulation, and then third-party website to know whether there's some new product launch and so on. Then 14% are using AI alternative data on that. And then on the natural language processing, right, essentially to extract text, like say, understand the financial statement and all this automatically rather than analysts spend time reading it, right? These are the main. Then looking into future, what they want to do, right? Another one is try to look into individual data, social media, blogs, right? Product reviews and all this. That is important, right? Because nowadays there's plenty of, SNS, circulating on certain things and all this that, can be also certain extent self-fulfilling, affecting the company products and all this. So these are very important. But all in all, you can see that, using AI at this moment, only 25%, right? On the left side, you can see 75% are still not there yet. And then for the alternative data, right, it's still, about 56% are doing that, but remaining 44% are still not there. So, which put it another way that now it's still all right. It's still not too late for the analysts to start understand that, right? But also it means that even for individual investor, if you know how to do it, you are also more or less can catch up with analysts. So lastly, are analysts still relevant? Now, that is one part that, again, it doesn't mean that individual can't do that. It doesn't mean that if you're not analyst, you can't do that. But the fact is, first we must understand in the information world, especially in the SNS world, in the internet world, there is a term called filter bubble. What does it mean is that this is a very human instinct, human nature, that you will only look at the information that you like. So sometimes you ignore or you unconsciously filter away information that you don't like. That will make your analysis very biased. So unless you can overcome this filter bubble, right? Otherwise, even you use AI or whatsoever, SNS, you don't get a full picture of it. So analysts normally are better on that, right? And then what it is, right? What the internet is hiding from you, you may not know. Unless you are very independent, you look at both sides of the stories, right? You don't just go for the news that you like to hear only, okay? So, I mean, because of all this, I mean, now there are some actually are prohibited, but you can't 100% prevent that. So what I'm trying to say here is that because of the filter bubble, right? Sometimes because of the big data, some big, especially tech company, right, can personalize the price. I mean, one very simple one, I think some of you probably, you know, after 1.5 years of this MCO, everybody start want to travel. And I think you will know. I mean, if you want to try out, you will know. Let's say you go to an airline website. The first round, you look at the price. It quote you an X price. But at that moment, let's say you are still very undecisive. 2 days later, you go into that. Probably it will become Y price, slightly higher. Then if you're still not decisive, the third round you go for it, it becomes Z price, which is much higher. Essentially, they are trying to understand your behavior so that they can quote the price, knowing that ultimately it seems that you want to go, and quote the price to tell you that if you don't book now, you are going to pay a higher price. Okay, so this is what we call the so-called information filter bubble and also price discrimination based on big data. But this is useful if analysts how to use, you know, I mean, the so-called big data analysis, AI and all this, they can identify. I mean, I have to say this is a gray zone. I don't know how SC ultimately will look into it, because anything that, frankly speaking, I have to make this statement. Anything that is floating, moving around on the internet, right, can always be deciphered. It can always be deciphered, right? A lot of people don't think so, but the fact is it can. It can, right? Legal or not, I leave it aside, but whoever deciphers that, they will have some competitive advantage in terms when it comes to this financial market investment. Again, does that construe to insider trading? I have to leave it to the regulator, because when it comes to this, it is a different way of defining insider trading already, right? But at this moment, I have to say that those who have the technology, they can do it. They can do it. So, I mean, example of filter bubble, you ask yourself, right? Here, I put an example. This is a bit outdated already. It's 2012, right? I mean, if you look into it, you ask yourself, how many times that actually you defriend, you may not remove him directly, but after a while, you leave him alone. You don't follow his news, whether on the WhatsApp, Twitter, or whatsoever, social media, because his view seems like go against what you like. Right? For example, let's say, we just put this traveling. I mean, there are people who like to travel to A country. There are people who like to travel to B country, saying that B is better than A. After a while, you may not bother about friends that are talking about B countries because it's not of your interest. And for some reason, you just don't like it. Don't like B country, maybe of your bitter experience when you travel there. And that is where, then you keep on getting positive information on the A country. And if you are analyst, you always think that A country will have the highest tourist arrival, therefore the macro is good, the hotel industry there is good, and so on. By ignorantly unaware that actually B country is gaining market share and so on and so forth. This is one of the very typical filter bubble that we talk about. Right? And another one is fake news. I mean, in this COVID world, I think we all know there are plenty of fake news. So that is another way that analysts need to be very cautious and need to double check, right? Remember, SC required. This one actually is irrelevant of whether internet or not internet. SC requiring you to have a strong basis, right? You must sure that it's factual. You did the fact check. And when I say fake news, sometimes it's not really fake. It's just that sometimes the information may be incorrect for some reason, right? This is something that sometimes people are wondering, right? And of course, fake news, you have all the so-called AI robots that send out all the news and all this that make people think that this is news that go wild, and then it really sounds real and so on and so forth. So, although epistemic democratization is good for everybody, but at the same time, it also can create chaos. If, again, I leave it to regulator to identify those who intentionally, like profit-driven algo creating fake news, or the corrupted information that is partially correct, right, to drive the market. That one, I mean, as an analyst, that is where his role to come in to ensure that news are correct, right? So the next one, of course, in the new world, another one is ESG, which need a lot more thorough analysis, right? It involves environmental issue, social issue, and governance issue, right? So, I mean, ESG analysis currently, it has to be done, right, by analysts or follow some provider, right, that include exclusionary screening or best in class. Now, this is where it is. Looking in the future, there is some part that most people still can't handle it, is that the lower part of it, right, you need to have your own ESG knowledge and incorporate into your valuation. Top is the normal one, right? So looking forward, this is very important. So analysts ultimately have to forecast what is the best that can happen. Now we are at this green area. Into the future, we need to know, right? Predictive modeling and also optimization. So what it means that analysts into the future must have all this knowledge, right? Partially computer science, even like machine language, right? And traditional, and you have to go beyond traditional software like Excel, and then know your own industry that you are covering, like doing traditional research and also able to construct mathematical models like the quantitative side, and then the knowledge of data science as well. So these are the things, and even including into the future, the so-called quantum algorithm, right? And like I say, it's not necessarily fake news. Sometimes the news can be misleading. This is a Wall Street Journal, just cite you an example, right? It says that Pfizer has reduced their production to 50 million. But actually, Pfizer as a company has been talking of 50 million, right, on 10th of November. But the news by the Wall Street actually is not is a little bit misleading, right? But on the 15th, the Pfizer already say that. Okay, so I mean, just notice that, right? Even JP Morgan now, they are recruiting quantum computing scientists to do all the financial analysis. This is IBM quantum computer. We are also trying to work into it, but it's still at a very primitive level. Okay, so with this, thank you very much. And I think there's only one question saying that nowadays there are so many so-called non-licensed people giving so-called webinar session and all this, but how come don't see investment advisor doing the same? Now, it's not that investment advisor are not doing it. Investment advisor, again, they have to ensure that what they say is factual and all this. Then they need to get the clearance from the compliance and all this. So it may not be as frequent as what you see others, whether legal or not. Others that are not investment advisor, I will leave it to SC maybe to throw some light to you all. Okay, with this, thank you very much.
Assalamualaikum and good afternoon, everyone. Welcome to today's session titled Trading on Regulated Digital Asset Exchange, to do or not to do. My name is Aimi and I'll be your moderator for this session today. So we will be discussing about this digital asset trading in Malaysia in terms of key consideration regarding investing in digital assets, the market trends, and how investors can tap on investment opportunities on registered digital asset exchange. So before we begin, I would like to inform that at the end of the session, the viewers can participate in pop quiz and stand a chance to win online vouchers. And for this fireside chat, feel free to drop us your question for the speakers and we will take the questions while going through the major discussion points. So to begin, in 2019, the SC has released a framework to regulate digital asset exchange, or also known as DEX. So this is part of the SC's effort to promote innovation while ensuring investor protection in the trading of digital assets. So joining us today, we have 4 speakers from the registered DEX. We have David Loh, the General Manager for Luno Malaysia, and we have Edgar Joby Gasper, the Chief Operating Officer for Synergy Technologies. And we have Hani Rosli, Chief Operating Officer for Tokenized Technology, and Datuk Fazli Shah Anwar, the CEO of MX Global. How's everyone today? I hope everyone's doing well. Great. On that positive note, so let us start the session with some questions to paint a picture about the digital asset trading in Malaysia. So the well-regarded first cryptocurrency in the world was is Bitcoin, which was created in 2009, and that was about more than 10 years ago. And overall, and now the market has grown so much bigger, and the overall market cap for the cryptocurrencies industry is around 2 trillion. So can you share your thoughts on people's acceptance of digital asset in Malaysia? And can we have David and Hani? And we can start with David first for the question.
Thanks, Aimi. It's a good question. In fact, we have been in the market long enough to observe that while the price has gone quite high, we think that the acceptance, level of acceptance and awareness is still at a pretty nascent stage. We have actually done a recent survey on Malaysians. We've got 1,000 Malaysians, doing the survey, and we were trying to assess what's the level of comfortableness that Malaysians have on digital assets. And surprisingly, we found out that 62% of Malaysians are actually open to invest in cryptocurrency. And that development is a positive surprise to us, which is also a good thing, because I think when we did a similar survey a year ago, the number was certainly not even close to 50%. So Malaysians are definitely open to invest in cryptocurrency, but having said that, the level of awareness on what it does is still pretty low, which is why I think education is very important from our perspective.
Mm-hmm. So how about Hani? What is your take on this based on your experience?
Yeah, based on our observations and surveys that we conducted, especially from social medias like Facebook groups and other social medias on digital asset trading, Malaysians actually have long been exposed to digital asset. It's just that with it being newly regulated in Malaysia, so it definitely attracts more Malaysians to explore this new type of investment. Or trading, especially millennials and Gen Y. And apart from that, we also see interest from Gen Z. So there's definitely an increase in people's acceptance, but continuous education and awareness is still crucial to increase people's acceptance and educate them about what digital asset is.
Great, wonderful. That is interesting to hear that, Malaysians are open to invest in cryptocurrency. So that is as a regulator, that is a good sign to know that the regulation in place has attract more interest towards this new investment asset class. So adding on that, which has been mentioned. So Joby, can you describe the client's profile that you have seen on your platform? Like, are they more on the the younger side? Are they skewed towards the urban area, or you have more on the all over Malaysia?
For us, we do find that obviously the millennials are one of our bigger buckets, right? And of course, the younger you get, the more familiar you are with using things like e-wallets and things like that. So the concept of adopting something digital is not foreign to the younger crowd. We do find the 20 plus to the 40 range to be where most of the bulk of folks are comfortable with in terms of accepting this. But I think, as they have pointed out, right, majority, as Hani and David has pointed out, while a lot of the people coming in and getting comfortable with cryptocurrencies are aware of it, but many of them are still needing an education. I would say needing to get familiar on how it works and things like that, because they would come in more on the hype, really, these days. So yeah, education is going to be key. But yes, younger millennials, that kind of range is where we're at. The older folks, not so much. But we do see a lot more of the elder generations, I would say above 50, slowly coming in as they try and expand their traditional portfolios to include a little bit of digital assets.
How about David? What's your take on that? What do you see in your market?
Yep, I think Joby is spot on there. The first search of investors are always the millennials, the youngest, those in the range of 20 to 30s. And I think as age moves up, you start seeing these numbers trickling down. But again, rightly pointed by Joby, we have a lot of richer investors as well, above the age of 40 and 50s, who traditionally have been investing in traditional asset class such as stocks or bonds. They are starting to look into this space. In fact, what some of them actually do is to allocate 1 or 2% of their portfolio into cryptocurrency as an alternative investment. And from their view, the more sophisticated ones feel that putting that small percentage allows them the opportunity to potentially double or triple their returns in the next 5 years.
Okay. So we're talking about digital assets, of trading in digital assets. Of course, we must talk about the nature of digital assets. And Datuk Fazli, can you describe a bit on that? And based on your this opinion, who would be suitable to invest in digital assets?
Thanks, Amy. I think it's definitely a new and exciting asset class. I do encourage, and we do encourage at MX for anyone who wants to get into the scene to kind of really understand what's the underlying technology behind what we call digital assets and crypto coins, right, or cryptocurrencies. I think a lot of the emphasis has been around, the buzz has been around the fact that the currency portion of that term, but really it is the crypto part that brings all the magic, right? So kind of like how they use blockchain technology to kind of basically decentralize data, and some of that's obviously represented in some sort of monetary value, right? In Malaysia, I believe, the SC has been quite clear that these are treated as securities. So they are similar to how you would engage in shares, but I think it is very important for investors to know that they are not shares of a company, and so they have different dynamics of what we call in the industry tokenomics. The white papers are always, I think, the best starting points, right? So on our side, and I know like in Malaysia, we the whitelisted coins are really the 5, which are Bitcoin and Ethereum, which between the two of them make up like over 60-70% of the daily trading volume across the globe. And of course, there's Ripple, Litecoin, and Bitcoin Cash also allowed in Malaysia. So for all of these, the white papers are publicly available. And I think if you read into those, you may become a fan of what they do and what they hope to empower or realize. And I think that's where the main difference is. These are not shares in companies. These are really a participation within that network that some of these technologies are trying to birth. And I think that's really what's quite exciting moving into the future.
Okay, interesting. So for Joby, what do you think for these assets? Like, what kind of risk appetite that investors have? Like, what is it a high risk appetite or lower risk appetite? Is it more suitable for investor with more risk taker, or what is it in your opinion?
I guess there's a bit of both, right? You do have different strategies that you can take. Obviously, there are those that are more conservative that will be, buying and hodling or holding. I'm so used to that term being called hodling these days, but yeah. So there's a lot that would just buy and accumulate over time. I think conservative ways of doing it is like dollar cost averaging a little bit into cryptos for the long term. Then you also do get a bit more professional traders into the space that do things like simple arbitrage and other market making strategies, right, to take advantage of the spread of the market among the different exchanges and things like that. Yes, there's also more risky things to look into, but I think when you're starting to explore, we do know that there are Malaysians that participate in leverage trading and things like that, but that is not under, it's not currently regulated under our space. So obviously they have to participate in those types of investments outside of the regulated platform, and that includes, that increases the risks exponentially. But I think depending on where you are on the spectrum, you will have something for your risk appetite. But that being said, do your homework before, and don't just blindly, go in because somebody else is. So.
Yeah. So how does digital assets like fit in investor portfolio? David or Rani? Can have David. Yes.
Sure. I think at the end of the day, we first need to recognize the nature of cryptocurrency and what stage of maturity it is at compared to other asset class. So for example, we know stocks and bonds has been here for a long time. However, cryptocurrency is only 10 years old, right? 10 years might be a long time, but it's actually only 10 years old. It's very nascent compared to other asset class. What that also means is that the level of awareness and adoption hasn't really hit the mass market. As a result, price can be volatile, especially when the cryptocurrency is built to be limited in supply. So understand that price volatility is part of the equation. And if you factor that into consideration, then I think if you're looking to invest in crypto, you should always put a small sum as part of your overall portfolio in investing, right? So as I mentioned previously, a lot of investors that we see and we speak to, they usually only allocate 1 to 2% of their overall portfolio into crypto. Some who has a larger risk appetite will probably put 5 to 10%. We've seen some putting 50%, which we don't really advise to do so. But again, understanding the technology and where it is at, comparing it to other asset class, I think will allow investors to make a much better decision in allocating the percentage, of money they have in their investing portfolio.
Yeah, I agree that when investors, personally, I think they really need to understand the nature of this digital asset before investing in digital assets, because it's really different than the traditional asset classes. Yeah. So going back to Hani, so in this digital asset space, what kind of investment trend or investors' behavior do you observe in your market?
Well, I would say both long-term and short-term, right? In fact, the fact is not everyone can be a trader. Not everyone knows how to read chart or predict prices. So that's why it's important to do your research before you put your money in anything. So for digital asset, yes, it is volatile, but yes, the price changes unpredictably. But if we study the long-term movement, right, crypto assets have always been in an uptrend. So like take Bitcoin as an example, right? A year ago, the price per unit was just 40,000 ringgit. Today it's 200,000. So in between those times, yes, the changes in prices are volatile. It changes a lot, but crypto market has always been in an uptrend. So we can see a mix of both long-term and short-term in crypto trading among our investors.
Understood. So does COVID-19 changes, of course, we have to talk about COVID-19. We're in a pandemic right now. So does that changes the investor behavior? Like, what do you observe like pre-COVID and now? Is there any difference, or people it's the same as before? Honey.
Yeah, well, from my observation, right, investors significantly increase their trading activities as the COVID-19 pandemic unfolds. So the pandemic actually makes investors and the public aware of the fact that natural disasters can cause economic damage on an unknown scale. So even studies show that 1 year into the pandemic and crypto market actually grew, right? Like I mentioned earlier, a year ago the price was 40,000 and today it's 200,000 for Bitcoin. So the fact that cryptocurrencies are decentralized and can be traded from anywhere in the world alleviates to some extent potential liquidity constraints that can arise if local governments restrict trading activities as part of lockdowns. So as a result, crypto become more attractive compared to other assets class. So investors fear that the pandemic will lead central banks or political actors to interfere in the market so they tend to switch their investments into the decentralized crypto market. So because crypto are not managed by a central entity but rather operate automatically, so these enable investors to hedge some of the political risks and become more attractive. So yeah, so there's definitely an increase, especially post-COVID.
What do you think about that, David, in your market for Luno?
Yep. So when we look at how Malaysians invest over the past 1 year, pre and post pandemic, and we compare it to the behavior globally, I think there are some level of correlation that when the pandemic has hit Malaysia and around the world as well, crypto activity has surged. But at the same time, I think Malaysia, when we speak to customers on the ground, right, most of them actually just look into crypto global movement, right, outside Malaysia. So I'm not necessarily sure that people increase their trading activity into crypto simply because there was a pandemic. I think Malaysians in general definitely look into what's happening outside, and that basically dictates their risk appetite and their spend or investment into crypto in general.
Okay, so we do have a couple of questions from the audience. So maybe Datuk Fazli, there's a question from the audience like that. Does it true digital assets like crypto price only the price action only based on supply and demand without having any fundamental behind it? What is your opinion on that, Datuk Fazli?
Yeah, sorry, the line was breaking up a little bit, but I think I kind of made sense of the question. So if the price action is entirely determined by supply and demand, I think that there's really two ways of looking at it. Number one, we are as regulated exchanges, there's obviously a supply and demand element within the trading community or population within each of these DEXs. But I think exactly as David pointed out, there are a lot of these things that happen outside the DEXs and in the greater kind of crypto scene. And this is why one of these asset classes is quite unique in that sense, right? You could have a tweet coming out from Elon Musk. You could have kind of like a country's position on cryptocurrency as what China has announced recently, right? And different kind of whales, if you will, in the crypto scene announcing that they're backing certain coins or where they kind of favor things going. Especially with large investors, which because a lot of the blockchain projects are quite open and you could actually explore the chains, you could really see that they're not just saying that they're going to back it, they really are doing it. Like billions are being poured into some of these projects. So I think there's really two things for every investor to consider. Like on the DEX that you're trading, yes, definitely on a transaction level, there is a buy and sell, a supply and demand kind of relationship happening, yes. But I think in the more global, wider movement of each of these blockchain projects, that there are kind of like more micro factors or like things that happen globally that kind of affect the movement. Now, having said that, I think what I would, even though we only support 5 coins in Malaysia, right? And hopefully in the future we'll support more. I think it would be unfair to all of these coins to say that they're all about the same, but they just have a different name and a different logo, right? Again, the underlying applications of them are very different. Bitcoin is very, very different than Ethereum. right? And what that technology enables to do. So, but what we've seen so far is definitely because I think it's going into this kind of like towards a mass kind of adoption, and some large institutions are started picking up and being very vocal about it. That at least in the last couple of years, we see that a lot of what has been reported in the news and sensationalized, especially over social media, has a more definitive correlation with the price movement and kind of the base technologies themselves. Although of course they lend a hand there.
Yeah, I agree with that. I mean, for example, like Ethereum, I mean, it's not entirely, without any fundamental, because the technology behind Ethereum or Bitcoin, for example, blockchain, affects the price of the digital assets. For example, when there's the London upgrade, it affects the price of Ethereum. So it's not entirely, for me, in my opinion, entirely is not that. It's not like, out of thin air. Yeah. So we have a question also. This is from the audience, like David, when you can take this answer. What is the right time to enter in the cryptocurrency market?
My personal advice will always be there's never a right time to enter this space. And I think Hani, Aimee, Jovi, and Dr. Fazli can also say to that. I think you should look into cryptocurrency as a nascent technology that's finally taking shape, being adopted globally for different use cases, the same way as how people perceive internet to be in the 90s, right? It is a very interesting technology. It's created a lot of different use cases that's currently being tested and scaled globally. So if you take that view to it, and if you understand the volatility that comes with it, then I think it doesn't matter when you invest, as long as you take a long-term view to investing in the potential of the technology, you should be fine. So if right now price is at what, about above 55 or 54K BTC in US dollars, don't wait for it to drop until 25K before you enter, because I don't think that will happen. Price is consistently appreciated because of demand. As long as I think you understand what is your risk appetite, what is the money that you're willing to put inside, that you're willing to lose as well, even though that's not the best way to say it, then I think you're fine, right? Today, tomorrow, next day, next month, it doesn't really matter. Take a long-term approach, invest now, hodl for 3 years, and obviously take your costs out when price appreciate. Over the next few years would be great.
That is true. I mean, I would just reiterate what has been informed by many famous traders, that you first of all, don't put all your eggs in one basket, and of course, only invest in what you're willing to lose. That is the way to put it. Yeah. And we have another questions about these.
Actually, I mean, can I just add to what David shared just now, because
yes.
Hani also kind of shared, like I think long term is on the uptrend, right? So of course, some investors and traders will have a short term strategy. They might be looking for arbitrage. They might be looking for kind of like to kind of ride like the peaks and troughs. But I think a lot of the short term things are really just noise, right? Like there's a lot of volatility. I think volatility, like David shared. But if you take a wider view and then you kind of plot this on a logarithmic scale, you'll see, because when you plot things on a logarithmic scale, like it minimizes all of that noise, right, that happens in the shorter frequencies. And you'll see that for most of what I would say is like the top 50, top 100 cryptocurrencies, even globally, the uptrend is definitely there. It's very clear, right, that there is it moves from adoption base to adoption base, and I do agree that I think long term, most of these legitimate cryptocurrencies will appreciate in value, right? Of course, nothing's a guarantee. Anything could happen in the future, but the data is very clear over the last few years that everything kind of goes up, and I really believe it's because it's a function of the adoption expanding more than anything else. So I guess if there was a question, the question asked is now, when's the best time to invest in crypto? Probably yesterday, right? Because I remember having a conversation when they said, Bitcoin is like in Malaysian ringgit, like 50,000. It's just too expensive. And today it's at 200,000, right? I'm pretty sure today we'll have the conversation where 200,000, that seems quite expensive. Who knows what the number is that's going to be like discussed at next year's conference, right? So I think the best time is always yesterday. But of course, be educated and like understand what you're buying into.
Thank you. Thank you very much for that. So great. Now, I think we were set to paint a picture and set the scene about trading in digital assets. Let's move to the next question. I mean, so for question for Joby. So why should investor trade via registered platform opposed to unregistered platform? Like how are these registered platforms different from the unregulated ones?
I think one of the bigger reasons obviously would be peace of mind, right? Being regulated of my colleagues here, my peers here would be able to attest to that. It's not easy to make sure that we meet the guidelines. We always have to ensure things like custody and things like that. The assets that you invest in, and I wouldn't use the assets that you put into an exchange, right? They do fall under certain criteria, like having custody solutions and making sure that we have BCPs, in order to make sure that any catastrophe comes into place, we have mitigation to make sure that the investors don't lose their assets and things like that. These are just some of the things that you don't have in an unregulated market space. To top it off, you do know that on a regulated exchange, you also get to transact your funds in and out via our banks and things like that, right? And that gives you another layer of security rather than trying to access via an unregulated exchange. You realize whenever it comes to talking about moving or on-ramping or off-ramping ringgit, you're going to run into some scenario where you could easily, be put in a position where you're not going to be able to retrieve your funds. So, I mean, these are just some of the small factors, on top of which we also have the SC can definitely attest to, making sure that cracking the whip to make sure that all our policies are in place to make sure that customers always have an avenue or a recourse to make sure that their investments are secured to the best possible way, right? So I would say that the regulations do come with a lot of safeguards and safety nets. So definitely focus on a regulated exchange.
Yeah, I agree. I mean, that is true. That is one of the purpose and the main reason for regulation to be put in place: investor protection, the safety of their monies and assets. So one of the questions that we got here. So for David, how secure? In your opinion, how secure is regulated exchange compared to unregulated DEX?
So I think this applies to everyone here as well. So feel free to add on if I miss anything. But when we talk about security, we talk about first of all storing your digital assets. How does regulated DEX secure your assets? Now, when you use an unregulated digital asset exchange, you are actually storing your crypto, which itself is an asset class that can be moved anywhere around the world with people who are outside the country. And when things go south, you have no legal recourse. So let's say if you put your money into an overseas exchange, they decided, because they hold the private keys to your wallet, they decided to run off with those assets. You can't run to the police or to the SC and say, "Hey, I lost my money." Obviously the SC will try to do their best to do something, but there's a limitation to how much legal reach they can have overseas. Now, if you compare that with local DEX, four of us who are regulated by the SC, who has to constantly watch our back for SC's whip, we have to make sure that we store your assets in a manner that is acceptable by the SC, right? So on a basic level, that's always storing in multiple layers of wallet. So the hot wallet, the cold wallet, and what that means is we have to make sure that we only store a minimal amount of customers' crypto in the hot wallet just to fuel our order book and exchange. But other sums, most of the funds should be stored in a cold wallet, right? Offline, where hackers cannot access to it. And how we store these assets on the cold wallet it also matters, right? How do we securitize it in a way where even exchanges like us cannot dip our hands into it? And this is something that we take very seriously as well. On top of that, there's also the other side of the coin, right? Your ringgit. When you put your ringgit into any of one of the DEXs, the ringgit actually doesn't sit in our bank account. It sits in a trust company. And for us to process withdrawals, whenever you make any withdrawal requests to your account, we don't do it ourselves. We actually have to send those instructions to a trust company that's appointed, and then they will be the one who performs those transactions after validating that indeed these withdrawals were made by customers. So I think these are just some of the simple examples of why there are benefits to using regulated DEX versus unregulated ones. And this is generally how we look into storing your crypto assets.
Great, great, wonderful. So maybe Dr. Fazli, you want to add something on that point?
You mean like on how we would secure the assets?
Mm-hmm.
Yeah, I think David covered it very well. Like, yeah, definitely, you know, you're not sending it to my account or to MX's own bank account, and I think that's something that investors should be aware of, right? Which is that, by and large, a lot of people are being taken advantage of online and through lots of means where, in fact, we were also very surprised to see really how prevalent this is. You know, you sell a golden opportunity because, like we talked about, like there's a lot of volatility, which means that, you know, the price goes up by X amount of percent. People get very excited, and somebody you know, sends you a DM in Twitter or your Facebook and says, you know, get on this and just send this money to my account. I think that's the first red flag anybody should be looking at. Where are you sending your assets to, especially your fiat? Because I think the fiat is more the easier one to understand, right? Because maybe Bitcoin and Ethereum, yes, there's this whole system of wallets and everything. It might be confusing, especially for the first-time investor. But, you know, if you're sending your ringgit to somebody's bank account, then I think that's a clear red flag for almost anything. So with the regulated access, you definitely do not have that situation. You, for example, whether it's Luno, tokenized, Synergy, or MX, you're going to be sending out to a bank account which is operated by a trust partner on behalf, and exactly as David said, like, we don't actually get to touch that money for anything. We actually don't even get to spend any of that money for our own operations, right? Which is why we have business models built in where we collect fees and transactions and everything. So the way that we have to operate is reliant on kind of like the transactions of our users, and not relying on the deposits that the users put into the trust account directly. So yeah, I think it's not just for crypto, just for generally any investments, I would really strongly discourage from sending directly to some companies, or even worse still, like a personal bank account, right? You definitely want to avoid things like that.
Yeah, definitely. I would like to echo the message that for investors that trade via registered DEX, they will be protected under the Malaysian securities laws, and operating a market without authorization from the SEs and offense under our law. And this is something that investors should bear in mind when choosing the avenue that you want to use. So we have a question from the audience for Hani. So how can you mitigate the risk associated with cryptocurrencies and cross-border transactions?
I'm sorry, I may able.
Sorry, I'm so sorry. Can you repeat that again? You can't hear on our end.
Yeah, sorry. I was saying that I could not hear the question. If you can repeat that.
No worries. So the question from the audience is, how can your platform mitigate the risk associated with cryptocurrencies and cross-border transactions?
Well, I guess it's part of what I can say is part of the requirement for us to have, proper monitoring system in place, especially for digital assets, right? So we have to monitor all of these transactions to make sure that it does not go to any dark web or illicit websites. So, yeah.
I mean, maybe I can add on to that.
Yes, please.
Yeah, so I think there are obviously many risks to cryptocurrency. The beauty of the technology allows the value of crypto to be transferred anywhere around the world for as long as there's internet, right? Which is why I think regulation kicks in. I think DEX, like any financial institutions, we have to perform certain level of due diligence first to understand who is opening an account with us. That's what we call the KYC requirements. And apart from that, we also have to actively monitor all transactions coming in and out through the DEXs, be it in ringgit or in digital assets. Now, obviously, digital assets, the nature of crypto is because there's no middle party that approves the send and receive of cryptocurrencies. What it also means is that a lot of crypto that's always received by us, sent by customers from other platforms into our wallet, cannot be blocked. So what we do at that point in time is always to analyze where the transactions are coming from. I'm sure we have all of us are integrated with some analytics tool as well to allow us to identify what are the high risk wallet addresses globally. So for example, if it's from a dark web or it's from another exchange or even from a private wallet as well, we know that internally in our record, right? And if we deem that these transactions are high risk in nature, then we will obviously commence investigation to make sure that these funds doesn't come from illegal sources, because we don't want illegal funds to come in through our exchange, and that opens up to risks of many different criminal activities. And obviously, if need be, we will also report these transactions to the regulators, and that is also done by a lot of other FIs in the country as well, as part of the regulatory framework.
Okay, great. Thank you so much for that. So we also have a couple of questions I think can combine from the audience. With the questions on cybersecurity and how and what actions to avoid cyber attacks. And also the second question is like, what is the biggest challenges facing the DEXs facing at the moment? So we can have Joby for the questions.
Well, sorry, when you say you're talking about cyber attacks, or I didn't get a full question. So
the question is on cybersecurity and what can be done, what action can be done to avoid the cyber attacks. And the second part of the question is, what are the biggest challenges facing DEXs at the moment? Okay, so well, from a cybersecurity perspective, I guess it's always the case that when we're managing things like cryptocurrency or any assets that's worth money, people are always going to be trying their luck, right? So we do have a lot of things in place. We also do, we also have to make sure that we are reviewed and audited, not only from a business perspective, but from a code perspective as well, right? Our platforms and infrastructure also need to meet a lot of criteria. So a lot of this, it happens also from you guys in the SC, as well as, third-party auditors that are coming in to make sure that we are not exposed to any critical risks. So I think that is always an ongoing process, and being in this space, and this will tie back to the second part of the question, right? Big challenges. We are always, we will, from a technical perspective, we always see attempts, right, to try and break into our system somehow, right? And that is in the world. This is just the regulated DEX, right? But in the world of crypto in general, this is not uncommon. The other part of the challenge is if you're talking about people trying to access other people's funds, is the education part, right? We still get challenging scenarios where customers come in and they come in getting involved in the wrong reasons, right? Whether they are coming on board because they've been promoted something. And what we realize that a challenge that we face on that is that the education level is insufficient. So if you ask us what are the big challenges we are facing in terms of crypto, I would say education, which will drive adoption for us. Right now, I think insufficient education across the board, right? I think we start to see a lot more rural folks starting to come on board into the crypto space, and with that, it also drives in a lot of questions and things like that, which will sort of give us an idea that many people are coming into the space without really understanding what is happening. And I think the more support we can get in driving up education, aside from our own education, which we do conduct. I think that's where one of the challenges we face is to drive up education in general in Malaysia for the purpose of adoption. Thank you very much for that. So relatively, digital asset is a new trading instrument compared to other asset classes. So investor education is a major component to help build knowledge around it. So can we have David and Hani to describe what your platform does for that angle for investor education? We can have David first for the question. Thank you.
Yeah, I think education definitely is a big major part of our strategy in engaging with customers on the ground. So basic stuff, we do have all the materials that you can find on our platform. Outside our platform, we always also recommend reputable websites like CoinGecko, for example, or CoinDesk that any potential investors can look out to get information. But something that we want to also drive a bigger mission towards is actually going back to the previous question, right? Security. What we see in the market right now is a lot of customers losing their funds simply because they didn't put the necessary measures in place to protect their account, in any crypto exchanges or crypto wallet. For example, the simplest way that usually hackers gain illegal access to these accounts is through compromising, investors' own social media account, or even email, right? And because the social media accounts and emails are closely tied to the crypto wallets or crypto exchanges, if they lose access to their emails, that actually allows the scammers or hackers to pretend to be them and try and gain access into our account, right? So our first advice is always, learn to implement strong passwords on any account that you have. It does even in your own social media account. Implement 2FA if that's possible. I personally implement 2FA in my emails, my Facebook, all my social media accounts as well, on top of my crypto wallets. And then also understand that by having strong passwords, with 2FA, how does that secure yourself from external hackers from accessing your account, right? So we want to send this message across a lot more strongly. Hopefully in the next 1 year, even right now we have it on our website, but hopefully in the next 1 year we can start doing a lot more offline events and roadshows and attend events like these to provide this education as well.
Yeah, I actually do want to add in that on the point that David made. Yeah, so that's not the platform cybersecurity question. Now it's about the user's personal infosec, right? How they protect themselves. And David hit on a very key point, because that's where a lot of the problems we face with some customers come from, right? Because it might just be something as simple as you didn't use a strong password. They figure out your email, and then they get into other they leapfrog into other applications that you might have access to. So things like how you store your crypto, your managing of your passwords. It may, you don't use password 123 or things like that, right? You want to consider things like password managers. And if you're a long-term holder, maybe even consider storing your crypto on learning how to use offline hardware wallets or paper wallets and things like that. These are a lot of things that investors coming into the space should take the time and really understand. As what David mentioned, 2FAs are in place not to inconvenience you. Yes, it may be a hassle and all that. It feels like a hassle. Some customers may not really understand why it's there. But once you understand why these measures are in place, you will realize how much more difficult it is for people to access your account just by enabling. Yes, it includes one additional step every time for you to do, but the amount of security it provides is a magnitude more. It's multiple. It makes it leagues more difficult for someone to crack into your account. And those are the kind of education points that need to come through to the market, right? Just to make sure that there's less incidences of scams, which sorry to pull this out, but it ties back to the earlier question. One of the things that has changed since COVID, right? I would say there is more scam attempts these days, not because there are more scammers, but because there are more people who might fall into the bracket that are looking for alternative ways of making some money and investing. And there are more and more folks trying to take advantage of them, right? Or the same amount of folks probably learning that there's a lot more market for them to try and target people who are not fully educated in the space of protecting themselves. So yeah, I just wanted to add that on. That's quite important to us.
That's true. What you said is true. Well, what we commonly see on our websites and social medias as well, scammers trying to fool all these our users or clients by promising immediate return of assets for after they transfer a certain amount of asset to these scammers, they are promised of certain or a higher number of assets. So that's why I think education is still very much important. So for us, we try to educate our clients, our users as much as we can through webinars and articles and fun facts. But I guess it's a team effort as well, right? The bigger, if the more programs or education or webinars that we do, the bigger what do you call it? The bigger audience can be reached, right?
Mm-hmm.
Yeah.
Yeah, that's true. I think in terms of investor education, not only just a platform have to play a role, even for the SC, we have to play a role and have more, events such as InvestSmart to educate people about digital assets and also other assets as well. And invest itself, like as mentioned by David earlier, yeah, they should also look up for articles and writings from reputable platforms such as, publications such as CoinDesk, Cointelegraph, like so many out there. There's so many publications that talks about digital assets now. Even Forbes and even Bloomberg do talk about it. Yeah. So on that note, what is to talk about investors protection, right? Can we talk about like what is the avenue for your clients to seek help or seek redress on your through your platform, Datuk Fazli, and then we can go to Joby. You're on mute, Datuk Fazli.
Sorry. Yeah, so for ours, it's fairly straightforward. We have a dedicated 24/7 customer support line, right? Of course, if users send us an email to support, to the support team, we'll definitely look at that. But we do understand that definitely in this day and age, like as they want more immediacy, we have two hunting lines always open. So at any point, if investors have any queries or they feel that certain transactions, maybe they are worried about those, or they have certain concerns around like maybe what they have just done or has happened on the platform, just call either of our lines, and somebody from our customer success team will definitely be engaging you and working through the entire case. So it is one of our kind of most important KPIs, I guess, internally, that all of these cases get resolved. So far, even though MX has been only in operation for really less than 2 months, we've had a couple of these calls, and I think we're very, very happy and feel quite blessed that we've been able to resolve all those cases. We do understand that I think customers come into this with a certain perception, or preconception of what they believe the experience and the behavior should be. In fact, I think as we were talking about customer education just now, I put this up recently on my own personal Facebook and Twitter, and then actually another friend in the industry, and I would say like quite rightly and succinctly put it up like as a meme, where you have a meme where there's 2 booths and one says, learn about blockchain, and then the line, there's like nobody in the line, and then the next booth says, when to buy and sell, and then there's a huge queue, right? So that's also something that we're taking on board because I think it would be a bit unfair for us to expect our investors to behave in what we think would be the perfect behavior in the market. That's something that we have to kind of be concerned about, and then kind of meet somewhere in the middle, so that we can make investing very simple for them. At the same time, as regulated dexes, we assure them that it is safe and secure, right? So I think as the market develops, we are learning much more about the investors' perceptions and their expectations of the platforms.
Right. Yeah, and I'd agree to that, right? Customers are actually the most important part of any of our businesses, And it should be the same across all the exchanges where we will have on our sites access to for customers to reach out to us, be it either your ticket submission. For Synergy, we have our line, we have our WhatsApp, Telegram, we have a ticketing support system as well as emails open for customers to reach out to us anytime. And I think it wouldn't be different for any of the other exchanges, right? I think all of us take this very seriously, and any cases being raised, I think to put it simply, if we do not attend to you, you are more than open to knock on the SE's door and say, these guys are not doing their job, and go and poke them a little bit for us. Being part of regulated exchanges is all about that, right? So we do make it a big point to focus on the customer as well for the exchanges. Yeah.
Yeah, if I can add, we are not just digital asset exchange, but we are also the users, right? So most of the time we put ourselves in the users' shoes as well, right? If I have concerns about my deposit or my trades, of course I want someone to attend to me immediately. So that's the same thing. That's the things that we try to provide to our users as well. So and access platforms for them to easily get in touch with us whenever they have concerns.
Great. Thank you very much for sharing those. I think this will be a question for all. So this is something that the audience is curious about. So how long does it take to withdraw the fiat currently when needed? Then we can start with David, Hani, Joby, and Dato' Fazli.
So I can go first. It's a quick answer. You can withdraw within banking hours, and I think we usually process those withdrawals within 2 hours. So it's processed by batch. As long as within banking hours, we process them because we are using the banking facilities anyways to process these transactions.
Yeah, we are the same as as well. So normally withdrawals are being processed around within a couple of hours after the request is made. So yep.
Yeah, I think likewise for Synergy as well. Purely based on the banking hours, and the moment it goes through, we get our approvals through. You'll see the funds in your account usually within a few hours.
Yeah, I think on MX, I just want to assure customers that we process your withdrawals as fast as we process your deposits, right? So I think because we're the new kids on the block, we don't have kind of FPX and all integrated as yet, right? So we still process our user deposits also manually through the banking system, and we try to get that done. Our SLAs of similar to everybody else at 2 hours, but we try to get all of that done within 30 minutes of deposits. And similarly, like also when customers process withdrawals, our targets or our SLAs are 2 hours, but typically we've been able to do them within less time than that. So yeah, as long as within banking hours, the banks are our good friends in this case, and I think they process those very quickly on their ends too.
Sounds pretty seamless to me. That is great. So since we are at the end of our session, we can have one more question to take from the audience. So can have David or Hani or Joby or Dato' Fazli, what do you foresee the cryptocurrency trading over the next 5 years? So this will be a popular question to be asked. What's your crystal ball says?
If you don't mind, maybe I'll just chip in first. We wouldn't be in this space if we didn't think that it was going to be going up, right? Right. And from the point of utility, yes, it is definitely going to be, from our perspective anyway, or from my perspective, we haven't even started to see some of the utilities on what digital assets can do. I do believe that within Malaysia, we are aware of where things are going. You can actually see it by the behavior of our regulating bodies as well. Not only have we been talking about digital asset related products like IEOs and things like that coming out, we've also from the SKMM side, I've seen them have conversations about the National Digital ID, which is just one more important factor that will multiply the usage of of the ability to trade digitally and do it securely. On top of that, I think many people would have also seen an SMS come in on their phone in the past few weeks regarding the aplikasi Muda Ale. It's a one central application thing that's coming out. So what that tells me is, I think it's like a one portal national registration or database system. And what it tells me is that the regulators are looking towards a digital economy in the future. And once you are engaging a digital economy, digital assets is a major part of it. So, as that ramps up, the amount of utility that you're going to start to see, be it in whether it's going to come in the form of decentralized finance or crowdfunding projects and things like that, right? Bear in mind that none of this are properly in place yet, and yet we are already seeing the ramp up in the trading volumes. So what happens when all those utilities come into the picture? It's just going to go up, right? From our perspective, I have to put that caveat in, right?
So David.
Yeah. So I think definitely crypto assets will definitely have a lot more applications, and a lot of these applications are already being tested globally. We will see a lot of them start to get tested in Malaysia as well. But just looking over the next 1 year, something I quite look forward to that will change the scene is the IEO regulation, right? The SC has put IEO regulation in place. That actually allows tech companies or even SMEs that looks into technology businesses or services consider it as an alternative means of fundraising in cryptocurrency. Since 2017, businesses around the world have raised millions of funds through cryptocurrencies. That the big plus to that is they can actually market their business to investors globally. And with SC currently right now assessing IEO operators or issuers as well, to see whether they can do this business. I think once we have these IEO operators, new guys coming out into this space, who are experts in fundraising for tech companies to raise funds in crypto, that will really, really change the game for local startups and SMEs to look into. So that's what I look forward to in the next 1-2 years, and hopefully we'll see a lot more growth in the market through this initiative by the SE.
All right, thank you very much. That is a very beautiful way to wrap up the session. So on behalf of the InvestSmart team, I would like to thank our speakers for being part of this session and sharing your inputs on this topic. I hope it has been insightful for our viewers and will assist them to navigate their ways in the digital asset trading via registered DEX. And to our viewers, please feel free to join the pop quiz after the session and you may win online vouchers. Do join us in the next session. Thank you very much.
Assalamualaikum and good afternoon, ladies and gentlemen. My name is Suhana Mokhtar, and I'm SIDRAC's Head of Dispute Resolution and will be moderating today's panel discussion relating to financial consumer or investor protection, resolving disputes in the new norm. Before I introduce the esteemed panel, we would like to say thank you to SC and the event partners of InvestSmart Fest for inviting us today. I do hope this new norm has been keeping us all safe. For SIDRAC and OFS, the new norm has introduced changes to how we operate. And the esteemed panel today would like to impart some brief insights. We wish to also highlight that today's discussion should not be construed as legal advice. Please do reach out to either OFS or SIDRAC for any clarification that you may have. Without further ado, allow me to introduce Ms. Marina Baharudin, the CEO of Ombudsman for Financial Services Malaysia, or OFS. OFS is a non-profit organization and functions as an alternative dispute resolution channel to resolve disputes between the members who are the financial service providers licensed or approved by Bank Negara Malaysia and with the financial consumers. She has over 20 years of experience in dispute resolution, coupled with in-depth and practical understanding of financial consumer protection, especially in areas of banking and financial services. Marina is also an accredited mediator and an affiliate member of the Financial Services Institute of Australasia, or FINSIA. A warm welcome to you, Marina. We also have Ms. Shamila Sharma, the CEO of SIDRAC. SIDRAC is a body approved by the Securities Commission Malaysia to handle capital market-related disputes relating to monetary loss between individuals or sole proprietors and SIDRAC members. Prior to her appointment, Shamila was a head of strategy, mergers and acquisitions of Synergy C Sdn Berhad, a subsidiary of Khazanah Nasional Berhad that invests and develops in renewable energy and energy efficiency projects. She has also worked with Human Rights Commission of Malaysia, Suhakam, and the United Nations High Commissioner for the Refugees. She has over 10 years of experience in sustainable finance and investments. A warm welcome to you, Shamila. Before we start the presentations, welcome. I would like to share that OFS and SIDRAC are the two of only 3 dispute resolution bodies in all of Asia, which deals with financial service-related disputes. The third is Singapore's Financial Industry Disputes Resolution Centre, FIDRAC. So to kick things off, I would like to invite Ms. Shamila to present.
Thank you very much, Suhana. So let me just start with this. Can you see my slides?
I can't see at the moment.
Okay, well, I think my, I think my computer has frozen. Perhaps we can get Marina to start first.
All right, I would like to invite Marina to present first, please.
Thank you, Suhana. Okay, I think I'm good. Oh, okay, all right. Sorry about that, everyone. So thank you again, Suhana. A very good afternoon to all. So first of all, thank you to InvestSmart for inviting SIDRAC to join the many excellent conversations that have taken place and will be taking place in this 3-day event. And a very good afternoon to you too, Marina, and thank you for helping out with that technical glitch just now. To the audience, thank you very much for participating in this webinar and for your time in understanding both OFS and SIDRAC and the services that we offer. So information on SIDRAC is contained in retail product highlight sheets and investment statements. Though this is the state of matters, awareness of SIDRAC among retail investors remains low, as demonstrated by the findings of our 2019 Investor Awareness Survey. We are currently conducting our second Investor Awareness Survey, which may be accessed through our websites or by scanning the QR code in the slides. As of now, findings from this year's Investor Awareness Survey indicate a lower rate of awareness of SIDRAC and our services. To get to the root of this issue and how we may better reach out to retail investors, your input is highly valuable to us. Our aim is to ensure that retail investors are aware that SIDRAC exists should they require assistance before the need for such assistance even arises. As such, through my talk today, I will try and address some of the common questions that are asked of us. I will also share how we are conducting our work in view of the COVID-19 pandemic. So on that note, let's start at the very beginning. What is SIDRAC and what do we do? SIDRAC is an independent and impartial dispute resolution center established by the Securities Commission Malaysia. We were officially launched a little more than 10 years ago to handle monetary disputes between retail investors and financial services providers who are SIDRAC members. Our services are free for retail investors with monetary claims that are below 250,000, while a reasonable fee is charged for retail investors with monetary claims that are above 250,000. Before retail investors can file a claim with SIDRAC, however, they must first have filed their claim directly with their financial service provider. A common question that is asked of us is, why is it necessary for retail investors to file a claim with their financial service provider before coming to SIDRAC? The reason, it is to provide an opportunity for retail investors and their financial service provider to come together to try and resolve the complaint among themselves first. Through this exercise, it is hoped that both parties will understand each other's perspective better, foster better relationships, and smoothen future dealings between themselves. I had mentioned earlier that SIDRAC handle claims between retail investors and financial services providers who are SIDRAC members. So who are they? SIDRAC members include banks, Islamic banks, fund management companies, stockbroking companies, unit trust management companies, and private retirement scheme providers and distributors. We currently have 192 members. You may take a look at the full list of SIDRAC members on our website. Another frequently asked question is whether SIDRAC can handle monetary disputes against a company or entity that is not a SIDRAC member. Unfortunately, the answer is no. We can only handle investment-related monetary disputes involving one of our members. This is why it is so important for retail investors to deal with licensed financial service providers. Your interest as an investor is far better protected that way. You are also less likely to fall prey to a scam. Apart from being able to handle monetary claims that involves a SIDRAC member, SIDRAC is also only able to handle disputes involving certain capital market products and services. These include shares, unit trusts, structured products, derivative products, and private retirement schemes. What SIDRAC can or cannot handle may sound a bit technical, but let me assure you that we are here to help. As such, I would like to stress that any individual investor who believes he or she has an investment-related monetary dispute with their financial service provider, to please feel free to contact us to find out how we may be able to assist you in a particular matter. Now on to another common question. What is the difference between SIDRAC, the court, or other dispute resolution bodies in Malaysia? I would like to highlight two key points here. First, SIDRAC was set up by the SC to ensure that smaller investors have an avenue alternative to the courts for recourse. Our processes are less formal than court proceedings. The dispute resolution process at SIDRAT is also confidential. And as I had mentioned earlier, our services are free for investors who have investment-related monetary claims that are below 250,000. Second, another common question asked of us is regarding the difference between SIDRAT and the Ombudsman for Financial Services, or OFS. Well, the CEO of OFS is here with us today to tell us more about OFS. So let me just give you a general overview. Where SIDRAT is a body approved by the SC to handle monetary disputes relating to investments, OFS is a body approved by Bank Negara Malaysia to handle disputes in banking and in the banking and insurance sector. So how does SIDRAT assist in resolving monetary claims between retail investors and SIDRAT members? I will not go into the details at this juncture, as I would like to share a video with you shortly. But just broadly, SIDRAT provides 3 types of services: case management, mediation, and adjudication. Case management is handled by SIDRAT's in-house case managers. Currently, we have 1 head of dispute resolution and 5 case managers. The majority of our case managers are certified mediators. Mediation and adjudication are handled by SIDRAT's panel of mediators and adjudicators. SIDRAT's panel comprises of senior practitioners in both the legal field and the capital market. Profiles of the current members of the panel may be accessed on our website. So let me just share this short video.
You have suffered financial loss while investing. And you think you're back, broker, fund management company, a unit trust management company, ERS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to see redress. Where do you go? SIDRAT is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with the company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days for their final written reply to come to SIDRAT. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to SIDRAT even though you haven't received a final response. SIDRAT first checks the eligibility of your claim. For example, is it within SIDRAT's claim limit? Is it against a member of SIDRAT? And so forth. If your case is eligible, you begin the dispute resolution process. All information in this process is confidential. We get both you and the member of the claim to sit with us and have a conversation. A documents and information is required from both parties. No lawyers are allowed in the communication process, as we keep the discussions informal and private. Our mediators are impartial and will get both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If both of you agree to a settlement, the agreement is signed, and the mediation process ends successfully. If both you and the member fail to reach a satisfactory resolution, mediation has thus failed. Don't worry. SIDRAT then proceeds to the next stage, adjudication. During adjudication, parties are given a chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. SIDRAT's adjudicator will then make a final decision on the dispute and the monetary claim. Decision is in your favor, it could be a full award or a partial award to your claimant. If the decision is to your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, SIDRAT will simply close the case and exceed other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, SIDRAT will close the case. Select SIDRAT helps start the conversation towards resolution. For more information, Visit sidrec.com.my or call 03 2282 2280.
Okay, so if you're interested to watch the video again, you may watch it on our website. So like most sectors that have had to adapt to operating in new ways to ensure their sustainability in this pandemic time, SIDRAC is no different. When the pandemic struck, like many other sectors, we heavily leveraged technology to conduct our case management, mediation, and adjudication services, either on a hybrid basis or fully online. We moved from conducting our dispute resolution services fully physically to fully virtually in a step-by-step manner over the last 1.5 years. And since June 2021, when the nationwide lockdown was announced, we have been operating fully online. We are now making preparations to begin hybrid mediation sessions and adjudication hearings again, subject to strict standard operating procedures. Let me now share a little bit about the cases we handle at SIDRAC. In 2020, we received 250 claims and inquiries consisting of 103 eligible disputes and 156 general inquiries. As of 30th September 2021, we have received 179 claims and inquiries consisting of 43 eligible disputes. So how does the pandemic years compare with the previous years? The chart shows the number of eligible disputes received throughout SIDRAC's first decade of operations. In 2020, SIDRAC received more than 100 eligible disputes for the first time since its establishment. This was primarily due to the high number of disputes relating to technical glitches on online trading platforms received, reflecting the heightened level of digitization of finance during the pandemic. Eligible disputes are cases that go through SIDRAC's dispute resolution process of case management, mediation, and adjudication. As for the types of eligible disputes that SIDRAC receives, the most common cases usually relate to dealings in shares and unit trusts. I had earlier mentioned that SIDRAC's dispute resolution process comprises case management, mediation, and adjudication. This chart shows that 90% of SIDRAC's cases are resolved either through case management or mediation, with the remaining 10% of cases resolved through adjudication. This means that the majority of our disputes were resolved through both parties coming together and hearing each other out instead of the dispute being resolved through a panel member deciding on the case. Finally, I would like to share some common observations gathered from the disputes that we handle. We hope that this may help you in your investment process. So first of all, always verify that the financial service provider is registered or licensed by the proper authorities such as the SC, Bank Negara, Bursa Malaysia, or the Federation of Investment Managers Malaysia. Then, before investing, understand the product, including its risk, the cost of transaction. In other words, do your homework. Risk exists in all investments. Nothing is guaranteed. Ask your financial service provider all the questions that you need answered. Next, read the terms and conditions governing your relationship with your financial service provider. Do not pre-sign forms. Deposit money directly with your financial service provider. Do not give cash to your agents, such as your remisers, unit trust consultants, or deposit money into an agent's personal account. Upon payment, insist on a payment receipt and check the statement for details of any transactions. For instance, contract note where shares are, where it relates to a share, or daily statement if it's a derivative product, or statement of transaction if it relates to a unit trust product. Recognize the red flags for fraud and aggressive persuasion tactics. So do not be pressured when making an investment decision. And once you have made the investment, be proactive and monitor your investment. The next set of tips or common observations that we have made in our cases relate to trading or investing online. So where trading or investing online is concerned, Do not share your bank account, credit card, or online investment account details with anybody. When investing or trading on an online platform, be sure to look for announcements or clues about technical features or security issues. Have the contact details of your financial services provider readily available in the event you are experiencing a technical glitch or a security issue. Be aware of the features of the online platform. So for instance, when investing in companies listed on Bursa Malaysia and the company happens to be undergoing a share consolidation exercise, note that original shareholdings in the company would be the same right up to the entitlement date, and consolidated shareholding would only be reflected in the accounts of investors after a few days later. Not being aware of this feature of the online platform may lead to the investor overselling shares. So call your financial service provider to inquire about any sudden change to share prices. Look out for announcements on platforms like Bursa Malaysia for corporate exercises that could potentially affect the shareholding of investors. Ensure that your financial services provider has your correct address to send relevant updates or notification. And finally, be aware of investment advice or stock tips aggressively promoted through social media channels by unlicensed investment advisors. So this brings me to the conclusion of my overview of SUDREC. If you need to reach out to us, please do contact us via our email at info@sudrec.com.my or through our phone line 0322822280. We also have an exhibition booth here at InvestSmart Fest. We are relatively active on social media, so please follow us on Facebook, LinkedIn, Instagram, and Twitter. Once again, please help us better reach out to retail investors by participating in our survey. Thank you. And back to you, Suhana.
Thank you, Shamila. I would like to invite Marina for presentation of her slides.
Thank you very much, Suhana. Assalamualaikum and a very good afternoon, ladies and gentlemen, and thank you for joining us in today's fireside chat session. I'd like to thank the Securities Commission for inviting the OFS to be part of the virtual InvestSmart Fest 2021. All right, let me just share my. Okay. Can you see the screen? Right. I'll be walking you through the functions and services offered by the Ombudsman for Financial Services and what steps can you take if you have a financial dispute against your bank or insurance company. Basically, all right, who we are. The Ombudsman for Financial Services, or OFS in short, is an alternative dispute resolution body set up with a mandate to resolve disputes between the financial consumers and the financial services providers in an independent, fair, and timely manner. We were formerly known as the Financial Mediation Bureau. And to ensure effective and fair handling of complaints, Bank Negara Malaysia has approved the Financial Ombudsman Scheme pursuant to Section 126 of the Financial Services Act and Section 138 of the Islamic Financial Services Act 2013. Then OFS was then appointed by Bank Negara Malaysia as the operator of the Financial Ombudsman Scheme, and we commenced operations on 1st of October 2016. We're into our 5th year of operation of the Financial Ombudsman Scheme. The Financial Ombudsman Scheme framework was formulated based on the 6 underlying principles. The first principle of independence, where we are subject to the oversight of a board responsible for ensuring integrity and for the operations and the ability of providing independent and effective services to eligible complainants. In terms of fairness, OFS is mandated to deal with the disputes fairly and impartially. On accessibility, we provide affordable access to our services to the eligible complainants. By the way, our services are free for the financial consumers. On accountability purposes, we publish our annual reports and submit to Bank Negara Malaysia the activities of the organization during the financial year, as well as the audited accounts. For transparency, we publish case studies, as well as the manner and reasons for arriving at a decision at our website. And these are for purposes of consumer education. The cases that were published with identities of the disputing parties remaining anonymous. Last but not least, for effectiveness, we must ensure that we have adequate pool of resources to handle disputes in a timely and effective manner. So who are our members? The members of OFS comprises licensed and prescribed institutions as well as approved persons, and they are the licensed commercial banks, development financial institutions, insurance companies, takaful operators, non-bank e-money issuers, insurance and takaful brokers, as well as financial advisors. As of to date, we have a total of 214 members. Now, our eligible complainants are financial consumers who uses financial products or services provided by the financial services providers. Our financial consumers are individuals as well as small businesses or the SMEs. Our eligible complainants need not engage a lawyer to represent them during the dispute resolution process. In addition to the above, our eligible consumers also includes insured persons under group insurance and persons covered under group takaful, third parties making a claim for third-party property damage, guarantors of a credit facility, nominees or beneficiaries under the life policy or family takaful or personal accident policy, and insured persons and beneficiaries covered under the group insurance or takaful certificate. We handle disputes relating to direct financial losses, which falls within the following limits. For banking and insurance products and services, our limit is 250,000, and these cases are typically involves insurance claims such as fire insurance claims, as well as a dispute on excessive interest charges on loans. Secondly, for the motor third-party property damage, our limit is 10,000 ringgit. And for unauthorized transactions relating to the use of credit cards, internet banking, or checks is limited to 25,000 ringgit. Of course, not all types of disputes fall within OFS's jurisdiction. Disputes relating to product features and services, such as the delay in processing a claim, insurance claim, or a loan, that falls outside our jurisdiction. So is the credit decision, such as pricing of the loan, rescheduling and restructuring of the loan, underwriting issues, third-party bodily injury or death claim, and disputes that have been referred to the court or arbitration, or which are time-barred under the Limitation Act or the Limitation Ordinance of Sabah and Sarawak. So, when can you file a dispute at OFS? Firstly, you must file a complaint with the financial services provider. If you're dissatisfied with the outcome of your complaint, you can then refer your claim to the OFS within 6 months from the date the FSPs reject your claim or repudiate your claim, or if you have not received any response after 60 days of your first complaint to the FSPs. In terms of dispute resolution process, basically there are 2 stages at OFS, that is the case management and adjudication stage. Of course, firstly, you must file your complaint to the FSPs for consideration, and if you're dissatisfied with the outcome, you can refer the case to OFS. Upon receiving your complaint, OFS will screen to ensure that your complaint falls within our scope. Once the complaint is within our scope, we will proceed to register the complaint, and the case will be referred to the case manager at the case management stage. Now, at OFS, the case manager will review and investigate into the complaint or claims. And during the process, our case managers will conduct mediation and try and resolve the case amicably. And during the current pandemic situation, our mediation sessions are conducted online or through telephone conference call. When a case is settled at case management, then a settlement agreement will be signed between the parties. And if there is an impasse or if no settlement is achieved, then the case manager will issue a written recommendation to the disputing parties. This written recommendation is not binding against the parties. If either one of the party is dissatisfied with the recommendation, they can refer the matter to the Ombudsman for adjudication. And at the adjudication stage, the Ombudsman will review the dispute independent of the findings of the case manager. The Ombudsman will then issue a final decision based on the facts, the guided and relevant laws and guidelines and the principles of fair and reasonableness. The final decision issued by the Ombudsman is binding on the financial services providers, provided if the complainant accepts the decision. If the complainant rejects the decision, he or she can pursue the matter in court. I would like to share the types of dispute handled at OFS and our caseloads. As you can see from the chart, as at June 2021, we handled a total of 1,329 disputes, which comprises 755 disputes brought forward from 2020 and 574 newly registered disputes. During the period, we disposed of 526 disputes, leaving 803 disputes outstanding. Breakdown by sectors. 51% of the disputes were related to banking and Islamic banking matters. 46% were insurance and takaful matters, and the remaining 3% is underpayment systems. By products, as you can see here, the majority of disputes were related to unauthorized transactions involving the use of credit and debit cards. And most of these cases are related to scams, online scams. This was followed by the life and family takaful disputes, and as well as the motor or takaful motor own damage disputes. Most of our cases are resolved early at the case management stage, as you can see from here, about 71%, and the remaining were referred to the Ombudsman for adjudication. Overall, in terms of manner of disposal, 29% were disposed through amicable settlement, 42% were disposed by way of case manager's recommendations at the case management level, and 29% were disposed of at the adjudication stage by the Ombudsman. Would like to share some cases handled by the OFS. I'd like to put a disclaimer that the names mentioned in these case studies are fictitious, and this is to protect the identity of the complainant. All right, for the first case, we have got a scam, all right? In this case, Sasha, of course not her real name, received a message from on Facebook Messenger, purportedly from her Facebook friend Ziza, requesting for her mobile phone number. So without hesitation, Sasha gave her mobile number to her friend, Ziza. Soon after, Sasha received materials purportedly from Ziza that she's entitled to receive cash reward from an e-commerce company. And in order to claim the reward, she must provide her credit card details. So without checking further, without hesitation, Sasha revealed the credit card details through the message. And subsequently, Sasha received several text messages on her handphone of multiple transactions done from her credit card. And Sasha realized that it's a bit funny, and she contacted Ziza to find out what's happening. And she just discovered that Ziza, she was informed by Ziza that Ziza's Facebook account was hacked, and she never requested for any phone number or credit card details from Sasha. So upon realizing that she has been scammed, Sasha then immediately contacted the bank to block her card. And very unfortunate for her, the bank could not recover the monies or the fraudulent transactions, as they were approved with the authentication of the one-time password sent to Sasha's mobile phone number registered with the bank. Of course, Sasha is not satisfied with the outcome and came to OFS. And from OFS, we conducted the investigation and found that she has revealed her banking credentials, her credit card details, everything, including the OTP. So that would enable the transactions to take place. And the bank had blocked her credit card, and that is to safeguard her from subsequent transactions. So based on the findings, I'm very unfortunate that Sasha's claim was unsuccessful. So the key takeaways from this case is that, financial scams have been very rampant, especially during the pandemic. These scammers use various tactics to convince its victims to reveal their banking credentials. So beware of unsolicited emails or even calls, because these scammers try and obtain confidential banking information, and they can call you on the pretext that they're from some authorities or insurance companies or from the banks. So we cannot stress enough to consumers to be very careful with your banking credentials and not to reveal them to anyone. I move to the second case, and this involves a sham investment scheme. So in this case, Tony participated in a binary option scheme with ABC Capital, an online trading broker located somewhere in Europe. So he invested a large sum of money through staggered deductions from his credit card account maintained with Bank C. Now, after participating in the trades, Tony suffered losses within a short span of time, and he alleged that he was being misled into participating in the trades through the trading software, which was controlled by ABC Capital. Tony realized that he was scammed and filed a complaint with his credit card issuer, that is Bank C, to dispute the transactions and to seek refund of the monies invested through a chargeback process. So unfortunately, the bank was unable to recover whatever monies that has been paid into or invested in ABC Capital through chargeback, and Tony's claim was rejected by the bank. He's not happy. He came to the OFS. We investigated into the complaint, and we are satisfied that the bank or Bank C did attempt to conduct a chargeback upon receiving Tony's complaint in attempt to recover the money. And we found, however, the chargeback was not successful, that because Tony had, on his own volition, signed up for the investment scheme, and he's bound by the terms and conditions set by ABC Capital. In this case, it's very unfortunate. We empathize with Tony's predicament, but we are unable to find in his favor. And this is because Bank C's role here as a card issuer is to facilitate payment authorized by Tony to ABC Capital. And Bank C is not privy to the dealings between Tony and ABC Capital. Moreover, the ABC Capital is not Bank C's merchant, so they do not have direct recourse against ABC Capital. And the key learnings arising from this case is that please, before you do any investments, please verify the background of the firm, whether it is licensed or whether such firms are regulated by the local authorities in Malaysia, such as the Securities Commission Malaysia or even Bank Negara Malaysia. So in the case of Tony, the brokerage firm was not regulated by the SC. So, and also beware of those get-rich-quick scheme, because investments takes time to grow. It just doesn't happen overnight, right? So with that, I come to the end of my presentation. If you need further information, please visit our website or contact us at enquiry@ofs.org.my and follow us on our Facebook page, Instagram, and Twitter. With that, thank you very much for your participation. Over to you, Suhana.
Thank you very much, Marina, for the insightful presentation. Thank you again to Shamila. So some key takeaways of the presentations are, for SIDRAC, please do understand that SIDRAC oversees capital market products and services. So please ensure that prior to making the investment, you have done your due diligence on the product as well as who the financial body is to ensure that the body is duly licensed. Please also ensure that we become a more informed investor and to keep updated with confirmed announcements by your respective agents, or you can just have a look at Bursa Malaysia. With regards to OFS key takeaways, please do be careful to be in line with what InvestSmart is trying to convey. Please be extra careful of scams. As such, do not give personal information, phone number, PIN number, banking, credit card details on social media or just anywhere, as financial scams are really rampant during this pandemic. I too have a personal experience where someone pretended to be my father on his Facebook account. So let's be more alert, let's be more vigilant, and to also always verify the bodies whom we liaise with. Similar takeaways between SIDRAC and OFS. All complaints need to be referred to the respective financial bodies first. If the complaint is unable to be resolved with your financial body, then the complaints may proceed to SIDRAC or OFS. So we have now come to the Q&A session. Allow me to see if there are any questions by the participants. We do have question number 1 here. The roles of OFS and SIDRAC seem similar. Is it a duplication of roles? Please clarify when should consumer approach OFS or SIDRAC for complaint resolution. Perhaps I could allow Shamila to briefly explain what SIDRAC does, and then Marina to briefly explain again what OFS does. Go ahead, Shamila.
Unmute myself, Suhana. Okay, so in terms of SIDRAC, our focus is on handling disputes relating to capital market products. For example, shares, unit trusts, private retirement schemes, derivative products, warrants, structured products, right? We deal with members who are regulated by the Securities Commission of Malaysia.
Okay, over to you, Marina.
Yes, Suhana. All right, as far as OFS is concerned, all right, we deal with disputes relating to direct monetary losses. If you have any, losses against banks and insurance companies. So that's the difference. So we don't handle capital markets, products. If a bank were to sell you a structured product, for example, then this product is regulated by the SC, so you should approach SIDRAC. But of course, if you purchase a product, for example, I can give you an example, floating rate negotiable instrument of deposits, or FRNID in short, short-term FRNID, less than 5 years, these products are regulated by Bank Negara, and you should refer the case to OFS. Thank you.
So, Suhana, can I just add that if a consumer or an investor is not sure, OFS and SIDRAC, we do work very closely with one another. So if it's a case that does not fall into one of our jurisdictions but have accidentally come to us, we will seek permission from the claimant to see whether we can then, refer them to OFS, and likewise OFS will refer them to SIDRAC.
Okay, thank you, Shamila. I hope it's clear. To clarify further, how should a consumer approach OFS and SIDRAC? Like what Shamila has said, you can reach out to either one of us. Do reach out, particularly for SIDREC. If there is any query via email or phone call, there will be a case manager assigned to look into the complaint. And if, let's say, it is under OFS or a joint matter, then SIDREC, like what Shamila said, we will work very closely. So the second question that we have is there an organization like SIDREC functioning in Singapore? Yes. As earlier I've highlighted, SIDREC, OFS in Singapore, or the FIDREC in Singapore are the three bodies in ASEAN. So if you are trading in Singapore, so please do reach out to FIDREC, FIDREC. They are on the website. You can reach out to them as well. So on the third question we have is, participants are interested, is there a successful claimed case that SIDREC and OFS can share? So perhaps I'll go to Shamila first.
Okay, so we do have successful claims where claimants have been, I would say I would give an example of a unit trust misrepresentation. There, in that case, the SIDREC member did not inform or clearly inform the claimant of the transaction costs involved in the purchase of the unit trust, right? So in the initial stages, I think when the claimant found that the actual amount that was invested in the product was less than what was provided, so the claimant came to us to say that she was not informed. In that instance, we found that the agent clearly did not inform the claimant about the transaction costs. However, the claimant also did make subsequent investments in the particular unit trust scheme. So for those, the adjudicator for SIDREC found that in the initial investment, there was no information. But in the subsequent investments made by the claimant should have known about the transaction costs involved in making such investments. So here is where, Suhana, it's so important to understand the investment product that you are investing in, and also to read the terms and conditions of the investment product. Yeah.
Yes. Thank you, Shamila. How about you, Marina? Can you share a successful claim case?
Okay, there were quite a number of successful claims, but what I can think of now is a case of, again, a mis-selling of a financial product. What happened was this complainant went to the bank and wanted to deposit some money in the FDs, but she was introduced into a savings plan with free insurance coverage. So thinking that it was a savings plan, she opened up an account and put in her monthly deposits of X amount. So for every month, the monies were deducted from her account. And little did she know that this money is actually, paid into an investment-linked insurance product. So after 2 years, she went back to the bank and she found that, yes, deductions were made from a savings account, but where are her savings? So only then she discovered that, the product that she purchased was an investment-linked insurance. So she wanted a refund of the full premium, whatever that she has paid to the insurance company, but it was rejected and she was not happy. She came to OFS. So when we look at the documents, we also look at whether she has actually she was paying a price of the terms or in the product disclosure sheet, or whether the you have got a free look period of 15 days, whether that was actually informed to her by the sales representative. So we found that the sales representative, maybe chasing targets, trying to sell this product to her, did not do certain things. But at the same time, she has, the complainant has also signed, the documents, all right, agreeing to the, terms and conditions. So at the end of the day, it was resolved amicably. and the complainant received partial award because we applied the principle of fair, just, and reasonableness. So that was agreed by the complainant and was resolved. Over to you, Suhana. Yeah.
All right, thank you so much, Marina. Sorry, I was muted. So I think we have come to the end of the session and we have a few minutes left. Perhaps I'd like to invite final words by Shamila, Marina, just a few words before we clock out. And before I do pass on, thank you again to everyone who has viewed us and hope to see what potential queries from you. Go ahead, Shamila.
Okay, thanks, Suhana. Well, I understand that there was some form of technical glitch when I was making my presentation and a lot of people couldn't see my slides. I think they will be shared by the organizers later. So if you're interested, please take a look at it after this session. But to end, in line with the theme of InvestSmart, I would say that, be a smart investor, do your homework, look through the documents, really do not pre-sign forms. It's quite difficult for us to assist you if you do that. So just like in a pandemic, stay safe where your investments are concerned.
And you, Marina?
Thank you. Anyway, thank you very much for your participation this afternoon. I hope you find this session very informative. And now you know whom to reach out to if you have a dispute against your bank, insurance company, or the capital markets providers. So we at OFS will try to resolve disputes as quickly and fairly as possible. Of course, the outcome is much dependent on the facts and circumstances and the available evidence. I would like to again reiterate the need to be vigilant and to safeguard your banking credentials and not to reveal them to anyone so as not to fall prey to scammers. So my last word, do drop by our booth at our silver booth section as we have got more materials and information to share with you. Our representatives at the booth will be very happy to assist you with your queries. With that, thank you once again. Stay healthy and stay safe. Over to you, Suhana.
All right, thank you. Stay safe, everyone.
everyone. Welcome to the grand finals of InvestSmart Fest Youth Public Speaking Competition 2021, brought to you by Securities Commission Malaysia in partnership with MIDP. My name is Amir Ishak and I will be your host for today. In case you've never heard of MIDP before, well, frankly, I'm shocked, but there's always a first time for everything. MIDP is a leading institute on soft skills education, which works on improving soft skills literacy and accessibility across the nation. We have programs in various formats in almost every state in Malaysia, which include public speaking, debating, Model United Nations, storytelling, poetry, drama, and many others. Since our inception in 2010, we have empowered more than 12,000 students and 1,200 education institutions across Malaysia. Check out our website, www.midp.edu.my. That's www.midp.edu.my to learn more, or give us a follow on Facebook, Twitter, and Instagram at MIDP Today to get updates on things that might interest you. Now that you've met me and you know more about MIDP and the awesome work that we do, it's time to talk about InvestSmart Fest Youth Public Speaking Competition 2021. MIDP and Securities Commission Malaysia have joined forces to improve awareness on fundamental knowledge on financial literacy and investment amongst the youth, while simultaneously creating greater accessibility to soft skills programs. This public speaking competition is part of InvestSmart Fest 2021. InvestSmart Fest is Securities Commission Malaysia's annual flagship event on investor empowerment that also features talks, panel discussions, and fireside chats by leading industry experts. Let's watch a short presentation on what InvestSmart Fest is all about. Wow, that looks like a lot of fun. Stick around throughout this weekend to join those events. Do check out InvestSmart's social media for latest updates. If you're catching this on Facebook, hi Facebook viewers, do head on over to www.isf2021.my to not only watch this event, but all the other events as well. That's www.isf2021.my. Now, back to the program. InvestSmart Fest Youth Public Speaking Competition 2021 had more than 100 participants who registered. After judging their video submission in the preliminary round, the top 10 from each category were selected to give their speech live in the semifinals. Today, we have the top 3 speakers from each category that will give their speeches for the grand finals. The best out of the top 3 will be crowned the grand champion and receive a cash prize of 1,500 ringgit for each category, trophy from Securities Commission Malaysia, and e-certificates. The runner-up for each category will receive a cash prize of 1,000 ringgit with e-certificates, while the second runner-up will receive a cash prize of 500 ringgit and, you guessed it, e-certificates. Before we begin the grand finals, let's get to know our panel of esteemed judges. We are really honored to have such high caliber individuals joining us today. I am personally excited to not just watch our judges in action, asking thought-provoking questions to our finalists, but also to hear their feedback at the end, because I am sure there's so much to learn from them. Having said that, let me introduce our first judge for today, Miss Emilia Sharif. Emilia was a corporate advisory and litigation lawyer turned compliance executive for a multinational GLC in Malaysia. In 2019, she left her corporate job to serve as the CEO of the Malaysian Institute for Debate and Public Speaking, or MIDP. Under her leadership, MIDP cemented its role as a leading institute on soft skills education, addressing education inequity and improving soft skills literacy and accessibility in the country. It is always good to see you, Em. Thank you for being with us today. Our second judge for today is Yang Amat Mulia Tunku Dara Tunku Tan Sri Nakia. Tunku Dara Nakia is the eldest of the 6 children of Almarhum Tuanku Jaafar Ibni Almarhum Tuanku Abdurrahman, ruler of Negeri Sembilan and the 10th King of Malaysia. She is very active and has done a lot for the community. To name a few, she is the patron of the Dance Society of Malaysia, chairman of the Board of Trustees of the Tuanku Najihah Foundation, chairman of the English Speaking Union Malaysia, and president of the KL Speaking Club. Thank you so much, Tunku Dara, for taking the time to be with us today. Joining her on the panel is none other than Miss Chi Fei Meng. Chi Fei Meng is the Executive Director and General Counsel for the Securities Commission Malaysia, responsible for advisory, law reform, rules and regulations, and the Consumer and Investor Office. With over 25 years of experience in corporate and capital markets, Fei Meng has worked in key positions such as legal practitioner, in-house counsel, and equity capital markets banker. Thank you for being with us today, Ms. Chi. Now, let's move on to the reason that we are all gathered here on a Saturday. The grand finals of the InvestSmart Fest Youth Public Speaking Competition 2021. I am really excited to hear the speeches, and I am also so nervous on behalf of all of our finalists. So let's not waste any more time. Just to inform you, every speaker in the grand finals will deliver a 5-minute prepared speech based on the theme that is given to them. The theme is different for each category. After the speech, there will be a Q&A session with the judges. To our panel of judges, a quick reminder, each of you will take turns to ask one question to the finalists. Please keep your questions concise and clear for the finalists to answer. You are not allowed to ask follow-up questions after the finalists have given their answer, and there will only be one question per finalist. Now that's out of the way, let's begin with the secondary category. The theme for the secondary category is Building Financial Literacy from Young. Building Financial Literacy from Young. I now invite the first speaker for this category, Afrina Husna binti Azril Imran, to present their speech.
Am I audible?
Yes, you are.
All right. I still remember when I was 7, right after I finished counting all of the 200 ringgit of my aid money with my parents, I poked my mother and told her, I want to put all of these in the bank. Confused, we still went to the bank and opened a bank account for me and allowed me to place all the money in. As we stepped to the bank, I opened my bank book and asked my mother, why is there still 200 ringgit? Shouldn't it be 250 ringgit since I put it in the bank? 10 years have passed. Last week, my mother reminded me of this event. I insisted her to check the same account, and turns out it only had a total of 310 after 10 years. In those 10 years, I was exposed to the application of time value of money and risk and return. Now, I understand the difference between placing your money in a savings account and an investment fund. Members of the virtual floor, it has shown that I have acquired financial literacy, where I understand savings don't help your money to grow, but investments do. It was lucky of me to be exposed by my parents when they invite me to follow along during discussion with their financial planner. However, not everyone has the privilege that's the same as mine. FEN had the incentive to nurture financial value in our youth, but forgot the most important thing in providing an efficient method to nurture it: application. Do I mean the agency needs to develop an application? Does the agency need to innovate in technology? Well, that could be one of the alternatives, but let's look at an old school perspective. Ladies and gentlemen, so what's lacking their efforts? Theory-wise, they managed to allow us to have basic knowledge about daily finance, including consumer maths in our syllabus and example. Skill-wise is what's lacking, and the most crucial aspect in polishing our efficiency. I was exposed to savings and Form 3 maths, but still, questions lingered in my head about how does savings work as I answered questions on an exam paper. How do we solve this then? By providing a monthly spending book at school. Let's make a comparison between something that we have now and the idea that I'd like to propose. We have the NILM program, where we encourage students to read books and they can apply it by making summarizations. We have a specific subject in primary school where they focus on road safety and they can apply it in their daily lives. How about financial literacy? Well, there were indeed programs talking about saving and spending money, but do we have schools talking about practicing programs now? We used to have Taha, Nuri, which gives our youth awards if they save well. But we don't have those anymore. It's the same as NILM, where we encourage students to do a certain activity. In this case, we keep track of your savings and spendings, and whoever can spend and save money wisely, they shall be rewarded. Moreover, they don't have a certain legal age to start this. To add it up, it can help those whose family may not be able to afford nurturing financial literacy to their children at home. Ladies and gentlemen, why is application so important than knowledge? Let me ask a simple question. Do you know how to ride a bike by reading, or do you know how to ride by doing? Exactly. It is the same with financial literacy. Even if you know the whole history of our economy's development, but you don't know whether it's better to save in an investment fund or a savings account, it's no use. To wrap everything up, with due respect, knowledge is useless without applying it as a skill. In my opinion, it is the best alternative to do so our youth can understand and do their spendings better, as they have been exposed to this habit since young and done it by their own hands. As the saying goes, knowledge comes from learning, wisdom comes from living. That's all from me. Thank you.
Thank you, Frina Husna, for that very nostalgic speech. Brings me back to I don't know where my eat money mysteriously disappeared to. Let's ask our judges for their question. Miss Emilia, the floor is yours.
Hi, Afrina. Thank you so much for a wonderful speech. I really enjoyed that. My question for you is, well, investment can be complicated for young people, and you started this realization when you were 7 years old. What would your suggestion be for young people to start with investment? Is there a specific investment product that you think they can explore? What would be the first step that young people can start when it comes to investment beyond just saving their money in a bank?
Is it possible if you could try to simplify that question again?
I'll try. My question is, where should a young person start with investment?
Since you've mentioned about me understanding about investment since I was young, 7, I think a possible suggestion for these young people to learn about investment is that their parents should actually try to do this trick. And this thing has been going on in my family over and over again for the past few years. We save a amount of money, and after a month, they would actually try to top up about this percentage of interest. So let's say we have agreed to have an interest about 1%. So if I were to put 10 ringgit monthly, I would have about more than 10 ringgit than that, because my family, they actually practice this simply so that I can understand this method when I grow up.
Thank you, Afrina Husna, for that answer and for your speech. Good job, well done. Next, I would like to invite the next speaker, Cassie Dent, to present their speech.
Hello. Is my audio and video working?
Yes, they're fine.
Okay. All right. Financial literacy. Billionaire divorcees who want to give you all their money and budgeting with babies. These are the 3 main points I'll be going over in my speech. And with just these 3 easy points, I'll be solving all future financial illiteracy and sending us into a golden age of reasonable financial decisions. Just kidding. As with every other speech I've given, this is meant to be a crash course. There are terms I'm going to oversimplify. There are details I'm going to skip over completely. Honestly, my brain's kind of fried from reading like 20 articles all saying basically the same thing. So please do not take this as gospel and make me the messiah of teaching you or your children financial literacy, as I'm absolutely sure many of you were about to do. Instead, take this as more of a guideline and adjust it for your family's needs. Now, enough with the buying myself more time. Let's get into it. So, number 1, financial literacy, the what. So what is financial literacy? Well, in a nutshell, it's basically the ability to understand and use a whole range of financial skills, like budgeting, investing, etc. Definitions are all well and good, but real-life examples and applications are probably better, which leads to my second point. Billionaire divorcees who want to give you all their money, the why. Scams, accidents, retirement. These are all things that we will inevitably encounter in our lives, but how much money we have or are left with when these encounters occur all depends on our financial literacy. Scams can leave your wallet a couple hundred or 1,000 ringgit lighter. Accidents you don't have the funds to pay for can leave you scrambling to try and figure out what to do. Unexpected pandemics can leave you possibly without a job and very tight for cash. And retirement, well, I don't want to think that far ahead yet, but depending on what country you end up living in and your occupation, there might be the risk of you being unable to acquire a pension and possibly outliving your money. Yikes. And fine, I know the example I mentioned in the title doesn't quite apply so much now, as scammers have switched from lies such as billionaires wanting to donate all their money to you as their final wish or whatever. They've switched from those types of scams to more believable ones like impersonating Google or who. But the point that we're almost always at risk of getting a scam still stands. We are in this incredible era of technology where nearly everyone has access to some sort of device. And though these devices can do a lot of good, this also means a whole lot of bad intentions can also do a lot of bad. Inexpensive luxury goods and callers pretending to be from banks or other credible institutions are all too common, but keeping in mind the advice that if it sounds too good to be true, it probably is, and the fact that your bank probably won't just ask you for personal details out of the blue should leave you a little bit safer. Investopedia has a lot of articles about the most common scams that teens and adults can encounter, so I'd really recommend giving their site a check. though after I'm done talking, please. Basically, by building good financial habits from a young age, the sooner and more consistently, the better, and becoming more financially literate, you can spot scams and financial fraud a lot better in general, while also leaving yourself in a good position if you ever can't keep earning an income. And finally, budgeting with babies, the how. Budgeting with your babies is the way we're going to preemptively solve all future financial illiteracy. Well, not quite. Okay, so the baby thing is surprisingly true, as Guy Schoen, a research director for the British government's Money Advice Service, said, the window for building financial habits is 0 to 7 years old. It's very hard to reverse those habits later in life. But older kids and teens and parents of those children, don't worry and think you've missed your shot, and that 20 years from now, you're going to be uncontrollably spending all of your money on online shopping or in-app purchases. There's still hope for you. So what habits can you build to improve your financial literacy? For younger kids, it's more simple things, providing them with money for chores so they can start to associate earning an income with putting in effort. It's recommended you give them 1 ringgit per year of age on a weekly basis, but parents can substitute that for whatever fits their family. The second thing they can do is involving them in purchases. Asking children to save their money is probably like a little bit difficult to do, but keeping aside a little bit of cash from birthday parties and Christmas and other such holidays where they can earn cash and providing that for them whenever they want to buy their own toys lets them know that money is not an infinite source and you can't just keep giving it to them whenever they want. And for older kids, keeping track of our spending and other similar things are probably the way to go. Though again, I'm not qualified to talk about this, so please go check out Investopedia. And I swear I'm not sponsored. I just think they're very useful. And start budgeting with your babies. Thank you for listening.
Thank you, Cassie, for those guidelines. Let's see what our judges think. I invite Tunku Dara Nakia to ask her question to Cassie. Please welcome.
Wow, that was very interesting. You know everything. You've covered everything. Well done. Anyway, I'd like to ask you this question. Normally, right, for Chinese New Year, for Hari Raya, children get ang paos, right? What if suddenly a millionaire comes and gives you 10,000 ringgit this 1 year, this once? What will you do with that money?
Okay, my first instinct is to blow it all off, but I know that is not the answer you're looking for. So I'm sorry. Yeah, okay. Yeah, 10,000 ringgit. Okay. Oh, that's a lot of money. One of my parents is thinking of opening a savings account for me. So I think I'd probably put it into that. I think, yeah, I might save like 1,000 for myself just because I can't handle the temptation. But yeah, I think I'd give the 9,000 I'd put the 9,000 in a savings account that I have. Yeah, thank you for your question. I hope I answered it.
Okay, thank you very, very much. Yeah.
Thank you, Tekudara, and thank you, Cassie, for your insightful speech and your great answer. Next, let's invite the third finalist for the secondary category. I would like to invite Hanif Abdullah Borhan bin Hamdi to deliver their speech.
Hi, am I clear? Can you see me?
Yes, you are.
Oh, all right. Here goes. As a child or adolescent, all we do is dream. As a child or adolescent, all we do is dream. With our lives out there waiting for us, there isn't much we can do about it. Or is there? Close your eyes and picture this. You're lying in your living room that overlooks the pool and your 8 cars parked up front. You look to your left and you see your butler waiting for you to confirm your last purchase on that $1 million yacht. To your right, you see your family packing for your next trip to the Bahamas. The power of an adolescent mind. Your imaginations, your goals, your desires. What if I told you your wildest dreams can all become your reality? I'm Hanif Hamdi from MCK, here to talk to you about building financial literacy from young. Let's dive into it. First and foremost, what is financial literacy? It is the understanding of financial concepts one must have in order to make informed decisions with their financial resources. Ugh, too wordy. To put it simply, it is the ability to choose what to do with your money based on what you know. The problem is, a large majority of the youth in today's world don't have the slightest idea on how to manage their own money. Now, being taught in schools, children have to turn to their parents for financial advice. Sometimes not even the parents know what they're doing. The point is, the younger generation have a difficult time building their own financial literacy. However, it's not the end of the world because there is still hope. We'll get back to that in a second. Now, why do we need financial literacy? Money is very important in the modern world. As much as we'd like to brag that money can't buy happiness, we have to begrudgingly admit that money determines our fate. With financial literacy, we can learn to manage that hard-earned cash. It is important to have financial literacy because it prevents us from wasting our money on expensive items we don't really need. Being financially literate will teach us the importance of budgeting, saving, and keeping ourselves afloat in the everlasting journey through life. But then again, you are just a kid. Nothing you do today can have an impact on your life in the future, right? Sorry to break it to you, but actions have consequences. When financial literacy is not taught at a young age, the youth will be missing out on opportunities of a lifetime. The main difference between a 30-year-old and an 18-year-old is precious time. Investments and savings take time to grow, and it isn't an overnight job. With time in your hands, the opportunities that are presented before you remain unmatched. Having many years ahead of you gives that money to undergo sweet compound interest. Even waiting a single year to invest can make the difference. Don't believe me? Let's have a look. Let's take two people, Jake and Charles. Both of them are 18 and eager to start investing. They both start with $1,000 in their initial investment with an annual return rate of 6% per year. Jake starts today, and Charles wants to wait until next year because he wants to live life. Around 40 years later, they both cash out at 60. How much did they make? Jake looks at his account and sees $11,557. Not too shabby, considering all he put in was $1,000. Charles, on the other hand, checks his account, and now he has $10,902. That is a $700 difference between Jake and Charles. He may not have literally lost money, but that is $700 he could have easily made if he had just started earlier. The moral of the story is, having time on your side has its perks, and there is no point in holding anything off because it is an opportunity that doesn't come around twice. Another problem with the lack of financial literacy is going broke. I'm sure you've heard that money doesn't grow on trees, but sometimes people spend it like there is no tomorrow. When most adolescents turn 18, the first thing they do is get a credit card, and down goes the spiral. They look at the most eye-catching pair of Jordan 1s or the fanciest Rolex and immediately go into credit debt. Jobless and completely out of money, they become desperate to find any means of financial support. A study by the Pew Research Center found that only 24% of young adults are financially independent. 45% of adults between ages 18 and 29 say they receive financial help from their parents. Overspending is a real issue that can be tackled with just a little education. This can be easily avoided with a smidge of financial literacy. Here's how. In the modern era, almost everyone has access to the internet. With Google and YouTube, you truly have the information you need at your fingertips. Throughout quarantine, I personally have delved deep into the financial community through YouTube and content creators such as Graham Stefan and Mark Tilbury. Even if you don't have the internet from the get-go, there are always amazing books to read on financial literacy. Rich Dad, Poor Dad by Robert Kiyosaki is a book on personal finance and is the perfect example of this. These sources barely scratch the surface on learning the ropes in achieving true financial literacy. There's so much more to learn, and it is not going to be easy. However, this is effort and time you must be willing to put in for the sake of your financial freedom. As time goes by, so does our childhood. It won't be long before we become independent adults where our parents won't be there to cover our rent. Dare to dream. Dream of your future house, dream of buying your dream car, dream of flying in your own private jet, because your future is built on dreams. And what you decide to do in life can forge your reality. Last but not least, have a little faith in yourself, because the richest man in the world was just a kid selling books from his garage. Thank you.
Thank you, Hanif Hamdi, for that inspiring speech. But it doesn't matter if it's inspiring or not. It matters if the judges think that. So let's go over to Miss Chi for her question.
Thanks, Hanif. I really like that speech. I thought it's very engaging and relatable. And you're very right to say, financial literacy should start from very young. So in your view, what are the basic financial knowledge and skills that preschool children aged 4 to 6 years old should have?
Okay, that's a very interesting question. In my opinion, for a 4 to 6-year-old starting out with just barely $100 in their pocket, there is a lot they can do to build up that money. First of all, since they don't exactly have the sense of maturity to understand the values of money, the parents can teach them to do small things like saving into a savings account. Because I personally have a savings account under my mother's name since I'm still underage. My mother takes my money and puts it into a savings account. And I find this very helpful, and it teaches me a lot about how I can understand financial literacy. Also, a 4 to 6-year-old should understand budgeting. When they have, for example, when a parent gives them $10 and they go to school and they want to buy something for $5 and their lunch is $7. So right off the bat, the 7 plus $5 is only about $12, and he won't have enough to buy both. So he should be able to understand that he has to budget some of that money to buy what's important. And I find that very important for a 4 to 6-year-old.
Thank you, Hanif.
Thank you, Ms. Chi, for the question, and thank you, Hanif, for your speech. Fantastic speeches from the secondary category finalists. But now, let's move on to the next category, the varsity category. The theme for the varsity category is the importance of financial planning in youth. I repeat, the importance of financial planning in youth. To kick off the varsity category, I invite our first speaker, Anisha Kaur Joel, to present their speech.
Am I audible?
Yes, you are.
By failing to prepare, you are preparing to fail. Wise words that we all follow in life. After all, we plan our studies, our careers, even our outfits when we want to impress our crush. But one thing a lot of us don't plan is our finances. Mainly because it is so easy to think you have so much time to create a plan later. You get stuck on this very negative mindset of, "Ayya, do tomorrow lah." But as the saying goes, the early bird gets the worm. So you need to start planning your finances as early as possible. But before that, what is financial planning? It is basically a comprehensive picture of your current finances, your short-term and long-term financial goals, and any strategies you can set to achieve those goals. It includes details like cash flow, savings, debt, investment, and insurance. Now, why is this so important? Well, firstly, you can manage your income and cash flow. Picture this. You just came back home from buying your favorite boba pearl milk tea. You stand in horror as the realization hits you that you've bought one too many of those this month, and now you can't afford rent. With financial planning, you can avoid situations like this. This is because with proper budgeting, you are able to prioritize essential expenses and monitor your spending patterns. A good plan would be to put 50% of your take-home pay towards needs, such as housing and utilities, 30% towards wants, such as clothes and entertainment, and 20% towards savings and debt repayment. You can also rectify possible financial oversights because you are constantly informed about the state of your finances. For example, you may identify some outstanding credit card balance, or maybe you are paying for a newsletter you never read. This will lead to an overall healthier cash flow, and you can make the most out of your assets. Secondly, you can be prepared for emergencies, whether it's a family emergency or a job loss or even a global pandemic, as ridiculous as that would have sounded 2 years ago. Life is unpredictable, but with a financial plan, you will still be able to cover all of your expenses. A conventional financial plan encompasses savings for 3 to 6 months of essential living expenses. But financial security comes from not only having savings, but also proper insurance policies. Make sure you have coverage in accidents, illnesses, and anything else you deem essential. This way, you won't have to burden others or worry about becoming homeless. Thirdly, saving up for retirement. Sure, it can seem like centuries away, but time may catch up to you before you know it. Reports have shown that 67% of Malaysians were unable to meet the minimum amount in savings on retirement. Don't want to end up like that, right? So make a plan to secure your future against financial uncertainties. Figure out how much you need to retire comfortably, taking into consideration things like inflation. If you need extra help with this, you can always hire a financial planner. Make sure they have a license from the Security Commission Malaysia though. Furthermore, you invest lesser amounts if you start early and gain from the power of compounding, which helps you build a large enough corpus over your working life period. And there you have it, ladies and gentlemen, the importance of financial planning in youth. Sure, it can be daunting and so incredibly boring at times. I mean, even before this, the only thing I knew about money was how to spend it. But it is important. And remember, by failing to prepare, you're preparing to fail. Thank you.
Thank you, Anisha Kaur. Let's head over to our judges to see what they think. Miss Emilia, I invite you to ask your question.
Hi, Anisha. Thank you so much for that informative speech. I agree with you. Financial planning in youth is absolutely important. My question is, what would your suggestions or recommendations be for the Malaysian education system to include financial planning in our schooling years?
Thank you for your question. I think in general, schools don't really teach much about financial planning because they are focused on other subjects like science and maths. I think they could make a new subject which encompasses all basic knowledge that every adult should know, like finances, how to do banking work and things like that. And they could properly educate them on how to spend their money and how to handle all their financial businesses when they are older and when they go into their working life. Thank you.
Thank you, Anisha.
Thank you, Emilia, for that question. And thank you, Anisha, for your speech. When Anisha was talking about the only thing she knows about money is spending it, I felt like, oh, are you talking about me? Because that's definitely something we have in common. The next speaker on the varsity category that I would like to invite to the stage is Arif Firdaus bin Azmi.
Thank you very much. Am I audible and visible? Hello, am I audible and visible? I will begin my speech in 3, 2, 1. The good life. The life where there are no worries. The life where happiness is accessible. The life full of security. This is the ideal, taking the necessary steps like working part. These are, of course, necessary steps for the good life. But what if I tell you there's one step so crucial, so important, and so fundamental so you can get that good life, yet our youth is not talking about it a lot? Hello, I am Arif Firdaus. The step I was referring to is financial planning. This step includes the ability to invest and save properly, spending money in a controlled and reasonable manner, as well as to blueprint your own financial target for the future. Now, it is understandable to see the youth not really talking about all of this because, let's be real, finance can get complicated and scary sometimes. Stuff like saving, investing, and planning, oof, it sounds so tough. But my fellow youth, just because you hide, it doesn't go away. Therefore, in this speech, I will give you 3 reasons why I think financial planning is important and how you can start at this stage of life. Firstly, financial planning can give you an ample saving in the future. Sure, you might say, hey, money is for spending. But what happens when you run out of money to spend? When money is spent, it is spent, gone, and cannot be refunded. Financial planning from an early stage can help you to have an ample, sustainable, and livable amount of money during times when you need it. You can start by saving up a quarter of your allowance in a bank or subscribe to a private retirement scheme offered by trustworthy organizations which can make you save according to a plan. Of course, it's not easy to discipline yourself when it comes to money. Trust me, I know. Sometimes the Shopee vouchers, they're so tempting. Or you want that new shiny character in Genshin Impact. But if you sacrifice a little today, you will not need to sacrifice a lot tomorrow. Secondly, financial planning can protect you from bad financial decisions. Sure, you are young and you think you're too smart to get bankrupt. But the hard truth is, financial literacy is still low. To give you some perspective, about 84,000 people were declared bankrupt from 2015 to 2019. 26% of them are below 34. Or in 2018, when 47% of Malaysian youth had high credit card debt. Dear viewer, are you willing to see your car getting pulled away because of bad credit or your house getting revoked because of bankruptcy? Hence, why the youth should be proactive in financial planning. Empower yourself. Visit the Securities Commission or SC's website and follow their programs like InvestSmart to make you a more informed citizen when it comes to financial literacy, because an empowered youth is a protected youth. Finally, and most importantly, financial planning is important to make sure you won't make the wrong financial decisions. Whether you earn money or lose it, you are exposed to a lot of predatory schemes. Financial planning is one step to make you more cautious with the finances. If you just choose to do whatever you want with the money you have without any planning, chances are you might end up losing it. And losing money will make you do crazy things, like Squid Game. You probably remember this scene. If you get caught moving, you lose your life in the game. But if you get caught in the wrong financial decision, like borrowing money from shark loans or bets from gambling, you will lose your entire life. I'm not asking you to stop, but I'm asking you to go. Go think about financial planning deeply. Strategize your money with real knowledge and a real plan so you won't make these wrong decisions. Because sometimes you might be just one wrong decision away from burning away the good life you can have. So there you go, my fellow youth. Financial planning. It sounds complicated, but it's really not. And when you do it, for sure, you will be more prosperous, more informed, more secure, and most importantly, have the good life you really want. I know it's not easy because it requires discipline with your finances, but it will be worth it for sure. Because ladies and gentlemen, financial planning is not just a way for a good life, but it is also the way for the good life. Thank you very much.
Thank you, Arif Firdaus, for that speech. Let's see what questions that speech has inspired. I invite Tunku Dara to ask her question.
Well, that was a very, very interesting speech. I enjoyed that very much. Now, my question is, okay, you say it's very difficult for the youth to try and save or, do what you have been telling them that what they should do. So how would you go around trying to persuade the youth to save their money or to advise them on what you have been saying yourself?
Thank you very much for the question. In my opinion, I think the first step necessary to make sure the youth really engage in financial literacy and also financial planning will be to engage them via the networks necessary, like social media, because most of our youth does use social media. And by using social media and utilize it properly, I think we can promote the idea of financial planning and financial literacy very well amongst themselves. We can use YouTube, Facebook, Twitter, all of these mediums with infographics and also real life statistics so that we can give some perspective for them and some sense inside of them so they can see what exactly is financial literacy, how they can participate in it, because most of them don't really know the proper mechanisms or the proper channels to participate in the idea of financial planning. But if we promote these proper channels to them, they are able to see an alternative much more secure. And I think that can help them to participate and also be financial literate citizens for a better future for all of them. That is my answer. Thank you very much.
Thank you very much.
Thank you, Tunku Dara, for the question, and thank you, Arif, for that speech and for your answer. Oh, yeah, Squid Game has been becoming very famous, and it's something that is very scary as well if we were to be stuck in that situation. The third speaker that we have for the varsity category to present their speech, I invite Deepan Raj, anak lelaki Sundram.
Thank you. I'll start my speech right now. Youths are a staggering 45.8% of our population, or approximately 13.9 million Malaysians. And all of us present here today make a minuscule part of that. However, it's without a shadow of a doubt that the people of our age group that determines the future of ourselves, our country, and our standard of living. Ladies and gentlemen, my name is Deepan, and the topic for today is the importance of financial planning in youth. First off, before I explain the concept and the significance of this, I will define two key words. Financial planning is the activity of making decisions about how someone manages their financial wealth. Youth in Malaysia is people between the age of 15 and 40 years old. And this has been defined by the Youth Ministry in Malaysia. And I believe that most of us here are youth. All right, so I appear before you today to demonstrate the importance of financial planning in two different areas of society, which I have determined based on my research. First, my personal surroundings, my family, my society, and secondly, the national macroeconomic aspect of society. So I believe that finance, this personal finance, is something that has been neglected in our society. Schools rarely teach this, and a lot of us barely hear about this, and that's why we're not that educated about it. And I believe that it is important going forward, our country has to properly teach the youth about this. On the personal side, a comfortable, decent standard of living, educated kids and family, generational wealth, opportunities to give back to the community are all areas where it's only possible only due to financial planning. This gives us a sense of control in our lives, prevents our money just from flying out of our pockets when we get our paychecks, especially with the advent of Shopee and Lazada. Like tonight, there's a 10-10 sale. I know for sure I'll beat to this and I have to buy a few things. And it's not just me. A lot of youths have this problem. And it's simply because they're not taught about how to budget and how to spend their money. In fact, 47% of youth are in high credit card debt because of loans, excessive spending. They don't know where to buy and where to sell stuff. They don't know what to do with their money. The buy now, pay later schemes have further exacerbated the situation. People are buying things using instruments they don't understand. They're buying things by Shopee, by Grab, using these schemes, using credit cards, using limits. They don't understand how this works, but they're doing it anyways because it's easy. That's why it's more important than ever that we teach them how to use it. Knowing the basics of finance helps us control our finance, helps us know what to prioritize. For some of us, we want to increase our income passively or actively, whether through unit trusts such as Amanah Saham, where I put money in, or vaccine stocks, or if it floats your boat, Dogecoin, whatever you like. When it comes to spending, some people like to secure their wealth. It can be through insurance, it can be through life insurance, death insurance, it can be through rainy day funds, whatever. The fact is, by knowing these things exist, then only will you actively pursue it. That's why it's important for people to know what's the importance of financial planning before actually learning how to do it. For me, it has helped me to manage my funds in uni. When I was overseas, when I was doing my 2 internships, I barely had to request money from my parents because I could manage between my scholarship money. I didn't request as much money from my parents compared to my peers because I knew how to budget what I was spending and where I was going. Now, moving on a societal and national level, financial planning puts back money into a society. If the youth of Malaysia have basic education about money, less people will be bankrupt, have heavy debt, and be better able to contribute back to the economy, contribute back to the society. They'll be decent people, and the Malaysian government doesn't have to bail them out. They will have a happy and higher standard of living. That's a one simple line. And I know this is kind of a far-fetched idea. How can this happen even? And I completely understand that. But look at Japan. They, from a young age, have been taught manners. And now they have one of the lowest crime rates in the world. So why not try this in Malaysia? And Malaysian government, we are doing this. The Malaysian government in the past 2 years, they have implemented this in children in the high school system. However, it's not enough. It's only been 2 years. We cannot see the effects. We can only see it in the next 5 or 10 years or 20 years. And I believe that we're not gone far enough. We need to make more efforts. Parents have to be involved. Private companies have to be involved. To sum up, money is important in a society that focuses on wealth. And whether we like it or not, Malaysia has more and more become a capitalistic nation. And we need to recognize that to better prepare our youth to face the future of the uncertain future and to make Malaysia a better country, they have to know financial planning. They have to recognize that their actions not only impact themselves, but their families, their descendants, their communities, the larger society, and even their country. Then the question comes up, how do we ingrain financial planning within our youth? But that is irrelevant. It's only relevant once everybody recognizes the importance of financial planning. With that, it's safe to say that financial planning is important for the youth of our country. Thank you very much.
Thank you, Deepan, for that speech. Let's see what Ms. Chi has to ask in regards to that speech. Please welcome.
Thank you very much, Deepan, for the speech. It's actually very insightful. You have actually highlighted that there isn't any curricula occurring right now in terms of how youth can do financial planning.
Correct.
So there is a gap. So in your view, can you give us 2 examples of initiatives that could be undertaken by the government or other government agencies that will have a very impactful outcome in cultivating positive financial behavior among youths to encourage financial planning?
Okay, so the government of Malaysia in 2019 under Dr. Tun Mahathir has already proposed a financial literacy scheme in high schools. However, it's part of the maths curriculum. We need a separate subject, and on top of that, we need to have it from a very young age so that they constantly learn the importance of this. When they go to uni, what's the point of titas and whatever? They need to know how to manage their finances, their tax, and etc. On top of that, what is the point of this school? Robert Kiyosaki said that money is learned at home. The managing money is learned at home. So parents have to be involved. They have to come and learn, teach whatever they know to their kids. Private companies have to invest their money because, believe it or not, at the end of the day, someone is paying for the debts or the bankruptcies, and companies, one way or another, they may be off the hook. So we have to understand that everybody in Malaysia has to come together. So 2 initiatives. We have to have this subject throughout primary school, secondary school, and high school, and every private company and parent has to hold hand in hand and try to educate youth about financial literacy. Thank you.
Thank you very much.
Thank you, Ms. Chi, for the question, and thank you, Deepan Raj, for your speech. I think that the time for this competition is very appropriate, mentioned by Deepan that the 10/10 Shopee sale is coming up. I hope that we are more mindful of our spending later tonight. So let's move on to the next category, amazing performance, by the way, by our varsity speakers. Our final category for this afternoon is the youth category. The theme for the youth category is Silap Labor, Duit Lebur. The theme for the youth category is Silap Labor, Duit Lebur. To kick off the youth category, I invite the first speaker, Kishan Anak Lelaki Dipak Busani.
Thank you, Amir. Am I audible?
Yes, you are.
All right. Silap, labor, duit, labor. This is the words that I should have framed up in my room before I started investing. There is a story behind this statement. When the coronavirus decided to become the star of our lives, disrupt our lives, financial markets around the world crashed or at least took a significant beating, including Bursa Malaysia. And during that time, all around social media and people all around me were saying that this is the best time to invest in the market because every crash is an opportunity. So what did I decide to do? I decided to take out my savings from the job that I was working part-time to actually use that money to invest. Was that a good or bad decision? I'm getting to that. My first few trades as a beginner investor, I made 600 ringgit. I was a big man, 600 ringgit, first few trades. And I was putting money in this stock, collecting profits from that stock, all up till the 7th of August of last year. That's when all my labor became labor. So actually at that time, this is something that youth would refer to as I was balling until the 7th of August. On that day, the best thing I remember of that day is Malaysia only recorded 25 new COVID cases on the 7th of August, but it was a disaster for me. My financial fortress, I thought of actually, I don't need to work, I can retire with so much money I'm making. I was even thinking, because the week prior to that, I made so much money in the market that I thought, Malaysia could just invest in the market and everybody could retire rich. And then the 7th of August hit. And I was thinking, why people wouldn't just invest and do this? And that was the same week that Bursa actually recorded the highest volume of trades in Bursa Malaysia. And that date, 7th of August, will never ever leave me till my grave. I learned a lot of lessons on that day, and I hope that these lessons are beneficial to you today. The first lesson is there's no free lunch in the world. We are told over and over again, if something sounds too good to be true, it is too good to be true. It probably is too good to be true. The stock prices in that week when I made a lot of money made no sense or little sense based on the current market situation and economic situation at that time. So basically it was just a hype that was pushing the stock prices up. And with money I made, I just kept putting it back in because money makes money, right? That's what people say. So it is very important to understand the what and why. It is important to understand what is happening and why is something happening in the market. And this is something everybody should be cautious about. When you are making too much money, you're making a lot of money in a short time span, it is something to be worried about. It is something to be cautious. It is something to take caution about. Because you could end up losing all your money, more than you've ever made, like what happened to me. The second thing is, investing is patience. If you think that investing is something that you put in and tomorrow you're going to become a millionaire, there's Genting or there's the Empat Ekor to go to. All right, do not panic buy, because that's one thing. When the market is up, there are many people or many groups or individuals who will give you tips for a certain price. That is something you should be wary about. And just think about it. If these people actually knew what is going to go up, when to buy or sell, why can't they just take their own money, put it there, multiply it, and keep doing it? Why do they need to take your money to give them those tips? So there is something known as the Security Commission's Investor Alert List, which is something you can check out on their website. This is basically a list of individuals or groups that are not authorized by the Security Commissions to give investment advice. This is something y'all can check out. The third lesson is always do your own research. Research is the fundamental to investing. There are many blogs, analysis, articles, videos out there which you can get a lot of investment advice from, especially when the market is up, especially when the market is green. There are many gurus which can come out and they'll give you advice for a price. And just think about it. If all this was right, if all these things were right, do you think, then anyone could just follow these reports and everybody would be a millionaire, right? So that it is very important to research and read all these things. It is good to read all these things, but it is more important to come to your own conclusion and not just blindly follow one. Or not all of them are bad, but even to find a good one requires research. Ladies and gentlemen, today I hope you go back and start and frame up the words silap labor, duit labor. It is the root. Investing is the root to financial freedom. It is a beautiful journey. So keep an open heart and open mind. Take my experiences and lessons and do not lose your hard-earned money. Happy investing. Thank you.
Thank you, Kishan, for that speech. Let's see what burning question Miss Amelia has for you.
Hi, Kishan. Thank you so much for sharing with us your journey. I was thinking, throughout your speech that sure, it is important to learn, to research, and avoid taking uncalculated risks when it comes to investment. But ultimately, there will always be risks attached to investment. And just like yourself, making those mistakes have brought you to a place where you become wiser and smarter. So my question is, when it comes to engaging youth, how do we balance out telling them that, explore, it's okay to make the mistake sometimes, but at the same time avoiding this silap labur, duit labur from happening and ruining their lives? Where's the middle ground?
I think what youth can do, I think right now, actually, Malaysia compared to 10, 20 years ago, there are many programs. For example, this is one program where InvestSmart, where people and youth can learn about financial literacy. But another thing is, if someone was maybe interested to trade in stocks, I think, if I'm not wrong, Bursa Malaysia or Security Commission have actually come up with like a dummy app, or even some banks have it, where you can actually trade stocks using that app, but not actually using real money. I think that is something that will actually teach them how it feels like. But again, even after trying that, I have to say, trading with a dummy app and actually experiencing it is two different things. So maybe what I would advise or suggest is, while doing your research, try to put a little money, risk a little money, and have a feel of what it's actually like. Because trading from a dummy app and doing it in real life, the whole emotional toll it takes on you is totally different, because that's your hard-earned money. So I think reading is one, and if there are opportunities out there, they should all explore these different opportunities. Yeah, thank you.
Thank you, Kishan.
Thank you, Em, and thank you, Kishan, for your answer and for your speech. The next speaker that we have for the youth category, I invite Muhammad Muhaimin Rosman to present their speech.
Am I audible?
Yes, you are.
Thank you. Investment scam. This thing become popular lately. I read the newspaper. The number of cases really worried me. Tremendous. It feels funny, when people can just barely trust on them. The cheap marketing and WhatsApp, the advertisement of this kind of scheme is widening. Just like a mushroom after rain. People give their money to the scammer without taking any relevant consideration. They even barely know them in real life or by their business background. It doesn't make sense. How can you give your money to someone that you not even know? There is a reason why government impose law and regulation, especially in advising people on financial and investment. Because we want to avoid this kind of fraud, this kind of scam. Some of my friends asking, why? How to know the product introduced is a scam or not? How to know that person providing investment services is a scam or not? I say, go to check on SC, Security Commission, SC alert this. The regulation, especially on capital market or investment under Security Commission. If someone want to give financial and investment advice, he or she should have credibility. And the easiest way to know they are credible is by the certification, the licensings. Nowadays, there is a lot of capital market product introduced to us. The problem is people does not have any time or do not have any knowledge with all that kind of instrument. Stock market, unit trust, P2P, ECP, forex, futures, bond, so many lah. They hear all that, people lazy and unconscious to make decision. They are confusing. So let me give this solution. If you do not have time managing wealth, go for authorized financial planner. If you want to participate in the market activities like stock market, go look for marketing representative or remiser. If you want to trade derivative, go for future broker representative. Remember, silap labu, duit lebu. If you look on modus operandi from this scammer, they are so clever. The jargon word that they use give much hope. two people. First, short-term return dividend in 2 days. Second, they claiming that there is no risk. Hey, there is no faster return with no risk. Oh God. Let me give you the concept of risk and return. In investment, there must be uncertainty. I repeat, it is a must. The uncertainty is the concept of risk and return. Both terms is aligned. If you want to go low risk, you will get low reward. If you want high return, you need to tolerate with high risk. I tell you my experience as the analogy. Compare ASB with futures. Both legit capital market product. I do have my investment in ASB. I do trade futures. In ASB, it is a low risk investment. Unit trust backed by government. Guaranteed dividend paid by government. But the return only once a year. In 2020, 4.25% announced for ASB dividend. You hold for a long time, but you just get that kind of amount. Meanwhile, futures is a high risk market product. It can give you high return way faster, way better. But then you can gain 4.25% less than a day, maybe more. Sounds promising, right? But every time I trade futures, my adrenaline flows. My neck and head, they're anxious, they're nervous. Executing trade futures is different compared to the ASB. When investing, if you decide to take no risk, you must expect low return. Don't let anyone fool you into thinking you can get high return with low risk. Remember, silap labo, duit lebo. So the conclusion is, come on man, this is 2021. You should be better than scammer. Your money is your responsibility. Losing on capital depreciation is a lesson. But losing to the scammer is a mindless. You should be responsible in taking risks. Remember, silap labo, duit lebo. Thank you, everyone.
Thank you, Muhaimin, for that speech. I invite Tunku Dara for her question.
Well, thank you very much for all that advice. That was really very interesting. So my question to you now is, how would you advise a person who's just making their first investment? What should they do and where should they go for their first investment?
Okay, thank you, Tunku. For the first investment, the first thing that they should take into the consideration is by the instrument, look for the risk and return. How can you tolerate with the risk? If you cannot tolerate with high risk, how can you be so greedy? If you are losing 100,000 ringgit and then you can be income, that is your instrument. Thank you.
Thank you very much.
Thank you, Tunku Dara, for the question, and thank you, Muhaimin, for your speech. The final speaker that we have for this category, as well as for this afternoon, I would like to invite Salsabila Abdul Manan to present their speech.
Hi, just testing. Is it audible?
Yes, you're audible.
Okay, great. Okay. Hi and good afternoon to the sophisticated judges, hardworking organizers, and friends listening in. My name is Salsabila Abdul Manan, and today I'll be sharing my thoughts on how not to fall prey to any investment scams. Today, we'll listen to many kinds of achievements, especially those who becomes a millionaire just by investing. Among the top 7 millionaires for investing are the 2 famous people, Warren Buffett and George Soros, which I believe everyone here has at least heard this name once. Right? But what we don't usually talk about is those who didn't make it out, those who want to start investing, but all went wrong, those who end up experiencing huge losses due to investment. It's very hard to find information on these people. Royal Malaysia Police, PDRM, has reported that from a period of 2017 up until June 2020 last year, Malaysians has suffered as much as 2.23 billion ringgit with a total of 67,552 cases from the cybercrime scams. Now, the majority of these cases were in relation to e-commerce with a total of 23,011 cases, and followed by illegal loans with a total of 21,008 cases. And lastly, investment scams with a total of 6,273 cases because of the cybercrime scams. Now, as a potential investor, as a citizen, right, this is not a way to tell you, hey, stop investing, but rather, how do we go about it? How do we avoid falling into these investment scams? So this will then bring me to my first point. Always refer to reliable sources. Today, we are living in a digital world where using technology is the new norm. We want to go shopping, we order online, get it delivered to our doorstep. We want to learn new skills. There is a bazillion videos out there on YouTube, TikTok, where other users just keep on sharing new content every second of the day. We want to invest. New advertisement on investment just keep popping up. While the new world we are living in is opening us up to new opportunities, we have to remind ourselves that there is a risk on the reliability of the sources that we keep feeding day by day. And the only way to protect ourselves is simply research. We have to move backward. So the US Securities and Exchange Commission, USEC, has stated 2 steps that can help protect us from being swindled in an investment scam. Check the background of anyone offering you an investment, and second, confirm that the person is currently registered or licensed. So as a Malaysian, it's very easy to do. You can just check the Securities Commission website under the page regulation, under the page licensing and registered person. So there you can find the page that contains the database on general information, the status of representatives, companies, and individuals who are or were part of the SC. So this will be a good start. My second point would be one of the points that is highlighted in the InvestSmart platform that was created by Securities Commission. Good job, by the way, Securities Commission, for that. Yeah, the point is to ask yourself if the investment is too good to be true. If an investment opportunity that is presented to you seems too good to be true, then it is too good to be true. There is no other way of interpreting it. It is too good to be true. One of Warren Buffett's advice for the young people is that no matter how great the talent or efforts are, some things just take time. You cannot produce a baby in 1 month by getting 9 women pregnant, right? So this analogy is best for investment. When we want to grow money from your investment, you need to understand that your money simply need time to grow. Is it logical, for example, we invest 100 ringgit and we expect to get 2 million returns in 24 hours? Definitely not, right? So we have to understand that investing requires time, knowledge, and effort. Investing requires us to be patient. However, if we are not a veteran, we are just a beginner, how are we supposed to know what is logical, what is illogical? So this will then bring me to my last point. Surround yourself with peers who are good in investment. Much better. If you have time looking for a mentor, then I say go for it. So why is this important? As much as there are risks associated with investment scammers, we don't want to lose opportunity of a good investment. We have to accept that in investing, risk correlates to return. There's no investment without risk, and good investors are the ones who understand the risk and do risk mitigation. So concluding my point, I believe that we can address the risk of scam investments by how? Always refer to reliable sources. Ask yourself if the investment is too good to be true. And lastly, surround yourself with peers who are good in investment. Remember, silap labo, duit lebo, or in my own translations, you messed up your investment, you messed up your money. With that, thank you to all judges, organizers, and listeners today, and have a great day ahead.
Thank you, Salsabila, for that speech. Let's see what question that speech has inspired. Let's go over to Ms. Chi for her question.
Well, thank you, Salsabila. I think thanks for sharing your ideas and advising everyone to check the SC's website in terms of whether they're licensed on the list. Now, you know that there are many platforms that offer capital market services. Some are very useful. They offer a lot of securities and maybe very flexible for investors. But why do you think it's important, though, that investors should only deal with capital market operators who are not licensed or registered with the SC? Why should they only deal with those? Why is it important?
Okay, thank you for that question. So I would definitely say that I am one of the beginners who, have to ask for my friends and peers who are good investment. But I think the answer is simple enough because you see, my first point is to always refer to reliable sources, right? There will always be doubt and uncertainty about first, what is the knowledge of the person? And second, what is the outcome that, let's say, for example, we are facing huge losses. Will this person be responsibility or he will just disappear? Because, it's easy to disappear these days. You just went out missing. So I think it's simple for me is that, for general public, I would say that first, definitely make sure that this person are registered, because you have to have this peace of mind that when you give the money, this person will be responsible, no matter huge losses or profits, which is good, but it's important to have a person who you can rely on. So that's my answer. Thank you.
Thank you. Thank you.
Thank you, Ms. Chi, for the question, and thank you, Salsabila, for that speech. Those were all amazing speeches across all of the categories, but now it is time for the hard part for the judges, deciding the champions of InvestSmart Fest Youth Public Speaking Competition 2021. The performances were great and it was a really tight competition. I wish the judges the best of luck. I invite the judges to be moved to the deliberation room. Thank you, judges. While the judges are deliberating and deciding the winners, we have prepared a montage of the competition so far. From the preliminary round to the semifinals and now the grand finals, we have been so lucky to hear passionate, intriguing, and most importantly, informative speeches. Personally, I have learned so much from each and every speech that has been presented in this competition, and I believe that the experience for the participants, judges, and those watching us today, whether on the website or on Facebook, have been equally educational and interesting. Now, I present you some of the moments that we have captured so far during this InvestSmart Fest Youth Public Speaking Competition 2021.
And there you have it, ladies and gentlemen, digital investing. It is beneficial and so easy to use. Even an 8-year-old could do it. So the next time you're scrolling through your Insta feed, stalking your ex, why don't you also scroll through the market and make some money?
So if investors do not embrace this, it is equivalent to achieving a loss. So they should and must embrace the era of digital investing if they wish to survive and take up every advantage they can to achieve a profit. Thank you.
I would say young people here should be more active in participations, because we have to take this opportunity while it lasts.
I would say it's a combination of both in a sense, because thanks to my previous experience, I did manage to grasp the fundamentals, to articulate my points, and the previous experiences did in fact taught me a lot, especially in terms of what to deliver, how to deliver, and most importantly, how to persuade people so that they can, listen to you and actually support you. But it's also a new challenge for me, because investment and also finance in general has been a very tricky topic for me. I'm not really much of a finance expert myself, and to actually try out and learn this new domain of interest for this competition is a very productive experience, I must say. So yeah, I think it's a combination of both. It's easy and hard at the same time.
I've never entered a competition, And frankly, I joined because the topic is investing. So it's something that I am really, really, really interested in. And since, we are youth now, and I think it's time for us to start embark what's on digital investing. So I would say, yeah, my first time. And I'm just happy to join because it sort of organized my points, and sort of understand that my passion is in investing in finance.
I tried to use less of the terms, just walk them through how it works actually. Because if you look at some of the advice that are online for investments, even maybe by the more formal and regulated websites, it's kind of hard to understand sometimes with the terminology. They use like the very formal kinds. So I sometimes also, I look at that as a basic, and then I'll go to YouTube and see other people explain it. Then I understand, and then I'll just explain it after that.
I think the organization on this one is a little bit smoother and a little bit better, and it's a little bit more relaxed, especially with that mini game you made in the earlier. That was really it was very fun, and it made us very relaxed for the competition.
Right now, it's my first public speaking. It's like through online, but I still feel like the tension during public speaking, and I feel that this public speaking has been like a memorable one, because during the qualification I had to do like a recorded video, and obviously I was so nervous, like I didn't expect myself to be in the semi-final.
It really looks like everyone had just as much fun as I did. Thank you everyone for being part of this journey with us. We still have a bit more time to kill, given that the judges are still doing their deliberation, and I definitely do not envy the burden resting on the shoulders of our judges today to select the winners for each category. To pick the best amongst really, really, really great speakers with such an amazing performance that they've given us this afternoon. This is such a close fight, and every single speech has been impactful as well as entertaining. I can feel the nervousness in the air here through the Wi-Fi signals. So let's break the tension with a little chit-chat, shall we? I'd like to invite all the finalists from the secondary category to join me here in the spotlight. Hello, secondary category speakers. Afrina, Cassie.
Hello.
I think we have one more. We have Hanif. Yes, there we go. Hello. Hi. Yeah. So being in the finals, right, was in terms of level of nervousness or level of sort of, being that how you feel. Do you feel more nervous in this grand finals, or do you think that the first round or the semifinals was more inciting nervousness within you? Let's start with Afrina.
I feel like the grand finals felt more nervous for me because this is my first time being as a finalist in a public speaking competition.
Congratulations.
Thank you. And moreover, I'm basically exposed to everyone on the internet, especially by big organizations. So it's pretty neat. And it was kind of hard to keep my composure, but gratefully I did it. Yay!
Yeah, congrats. And you did well as well. So let's see from the other participants here. Let's ask Cassie. Out of the 3 rounds and the speeches that you gave, they were all different speeches for each round under different topics. Which one of your speeches would you say was your favorite speech?
I think, well, like in terms of the actual speech's content, or in terms of like the preparation for the speech?
Like in terms of how you feel about how you did.
Okay. I think I preferred my second speech actually, because like the first one was very last minute. I think I submitted it like on the like at midnight. So yeah, very last minute. So that was very stressful, and I wasn't quite sure about the quality of that. And I think the second one was better because I actually like wrote it in a little bit more in advance, and also it's like what got me into the grand finals. So I think that like it speaks to the quality of it. And this one is after hearing everyone else's speeches, I'm like, okay, this was no.
Yeah, everyone's speeches were amazing. And I think that all of the speakers would probably feel that as well after watching everyone else as well. Yeah. Yeah, great performances. A question that I have for Hanif actually is, so there wasn't much time to prepare for each of the speeches because every round was a different speech and the topic was released a few days before the rounds. So how did you cope with preparing in a very short amount of time for each round?
For me personally, the topic about finance and investments, I've already done, I was very invested in doing a lot of research about investment throughout the quarantine. So personally for me, when I had that short amount of time, it was kind of nerve-wracking because I had to come up with a long speech in a short amount of time. But at the same time, it wasn't as difficult because I already had all the information and the topics I want to talk about in my head. So yeah, it was a fun experience, but quite nerve-wracking, to say the least.
So maybe just one quick round of each of you. Which speech was the hardest to prepare for? So let's start with, let's do it in reverse order from how we did just now. So Hanif, which speech was the hardest to prepare for?
For me, the hardest one I probably had to prepare for was the last speech, this speech.
Grand finals, yeah.
Because, yeah, the grand finals, because for me, the previous speeches, not only were they not the final speech, but the final speech I had to come up with like something original that I didn't say in the first few speeches. So that was something I had to brainstorm for a while. And at the same time, the final speech, there was a lot of it was on the line. So there's a lot on the line. So for like the preliminary round, if I didn't get into the finals, then well, but now that everything is on the line,
Stakes are a lot higher. It's like investing, the higher risk, higher reward principle going on there. So let's hear Cassie. Which one was the hardest one to prepare for?
I mean, surprisingly, it wasn't the last one because I figured at this point, like, I can still get some sort of like cash prize. So like, I know that's bad, but I was like, okay, yeah, this is okay. But I think the first one was the hardest for me because like, I think I'm quite new to like all this investment like terminology. And like, I couldn't really understand what the speech title was. So I spent like so long just like trying to figure that out. And yeah, that's why I think that one was the hardest for me because I was just like being exposed to so many new terms.
Yeah, I bet you've learned a lot throughout this process, throughout the competition. So let's hear from Afrina. Which one was the hardest speech for you to prepare for?
I think I'm basically a mixture of Hanif and Casey because I find the finals hard because I had to come up with an original idea. But at the same time, I also thought, I'm still going to get cash prize. So, but overall, I think it was kind of impromptu for me for the finals because I was kind of packed with other things, including school. But even though there were a lot of things going on, I still had a lot of fun.
Yeah, thank you. And thank you for joining us. Thank you for making the time for this competition despite your busy schedule. Thank you to all our secondary category speakers. You may return and to leave or to be removed from the spotlight. The next category that I would like to call on is the varsity category. So all varsity category finalists, you may join me in the spotlight. Hello, welcome to the Spotlight. That's the name of this halftime show, the Spotlight. Yeah. So I want to ask, how do you feel in regards to like your speech and the other speeches of like your fellow competitors here? Let's start with Anisha.
I think it was okay. At the end of the day, I tried my best, and I think that's what matters the most.
It's not the destination, it's the journey, as people
Yeah.
say. Yeah. So let's hear from Arif. How do you think you did and your fellow competitors?
Well, I can safely say my competitors are amazing competitors indeed. They're super amazing. I've watched all of these speeches. I can safely say very experienced, very powerful. And as for myself, I did practice and prepare my speech. I would say not really the best I could give, but somehow that's you could say, most ample for this competition. So yeah.
Yeah. As long as we've put in our effort, now it's up to the judges to decide.
Precisely.
That's a positive attitude to have. Deepan, what do you think about your performance and the performance of your fellow contestants?
I think every competitor here is really high quality. Like the way they speak, their tone, their hand language is all there, and it's not something that you get overnight. So you can see that they put in effort over the past few years. And I'm really proud that today I managed to take my speech in a different direction compared to my competitors. So I hope that differentiated me a bit.
Yeah, I think that's also a big challenge, is how do you make your speech unique and different to the other people here? Open question. Who do you think is going to win the varsity category?
You know what? Let's wait for that first. After
I'm just messing with you. We shouldn't jinx it, right? Great. So thank you to our varsity speakers. You may be removed from the spotlight.
Thank you.
The last category that I would like to have a chat with is the youth category. So I invite all of the youth category speakers to join me in the spotlight. Oh, my hands didn't show just now. Lost the pizzazz of virtual backgrounds. Hello, youth category speakers. My question since I've asked about how you feel in the grand finals to the other participants, I want to go a bit more specific for this group. So my question is, in comparison, so you've gotten some feedback after the semifinals, after the first round, coming into the grand finals, what was that one piece of feedback that you're like, okay, I want to nail this. I want to get this right. And this is what is going to bring me to the next level. So let's start with Kishan.
I think so basically what happened was I'm more used to live presentations. This is the first time actually I'm virtual after 2 years. So the last semifinals was actually my first time giving a virtual presentation for a competition. So I was really, really nervous. And I think that's something I had to figure out, because literally at that time when I was giving my speech, I literally just forgot everything. So this time I tried my best to control my nervousness. That was something I worked on.
Yeah, and I judged you in the semifinals. I think that there's definitely been an improvement from there. A lot more confident and a lot more composed this time around. So great job. You got to nail that piece of feedback and improve on that. So let's hear from Muhaimin. What was something that you wanted to improve on coming into the grand finals?
Thank you, Amir. As I've heard the comment from the semi-final, two things that I've heard, the natural, I'm not so natural, that's a little bit weird. And second is, this is the first time I'm joining this kind of public speaking. So yeah, the nervous, like Kishan, is tremendous, but we need to fight with the nervous. Thank you.
So this is the first competition and you are in the grand finals. Wow, that is great stuff. Yeah, and I loved your speech for someone who first time joining the a public speaking competition. Very, very impressive. Let's hear from Salsabila. What was the piece of feedback that you wanted to improve on coming into the grand finals?
Okay, thanks for the questions, Amir. So I think I would like to improve on my closing. So if you notice, I do some kind of my own translation back then on Silap Labo Dik Bebo. But anyways, yeah, I mean, I was shocked to say 60 seconds. my heart is very fast, I would say. So I resonate well with Kishan and Muhaibin. I would say that because of online speaking, so I think maybe the anxiety is about technical issues, is the mic working, is people listening me, can people see me, So those kind of things actually brings out unnecessary anxieties. But this is also my first public speaking competition together with Muhaimin, I guess. So I'm just happy to be here, to be honest. And yeah, I learned a lot. And thank you for organizing this. Yeah, that's all.
Well, thank you for joining the thing that we have organized. I thank all of the youth speakers for taking time to chat with me. I invite them to be removed from the spotlight. Thank you again to all finalists. I hope that our little chit chat with you helped your nerves a little bit, and it definitely helped me with mine to take my mind off of the results that will be coming in. We still have a little bit of time to spare while waiting for the results. Please be patient. I know that the suspense isn't good for our collective blood pressures and heart rates, but we just have to wait a little while longer. In the meantime, we also have a video presentation from MIDP to talk about the things that we do best. Let's check it out.
Being a confident and charismatic speaker is not a talent, it's a skill. Sure, some people are naturally more extroverted and loud, but that doesn't make them good speakers. It doesn't mean that they are more confident. That's why when you're coaching someone, you don't just look at these things on the surface, but you look at the person and their personalities, and you empower the real person within. The question is, how do you do that? At MIDP, we don't just teach you speech strategies and techniques, but we provide you with the mental frameworks to be able to see an issue, understand it, empathize with it, engage with it, as well as problem solve in the most creative and effective way possible. Yes, it sounds complicated, but we've spent years breaking things down and developing them into smaller targeted modules. And we teach this to kids as young as 7 years old. Communication is not just about content. Over 90% of effective communication is how you say something, not what is actually being said. So we look at things like your body language, intonation, eye contact, your pronunciation, your diction, and clarity. So when the audience listen to you, they can relate to you. They feel like you are genuine and authentic. And that's how you persuade others. A lot of people think that soft skills training means getting rid of people's insecurities, make them fearless. But that's not realistic. It's supposed to teach you how to stand up and speak up despite your fears. That's why our trainers are not just teachers, they are mentors. They are some of the best speakers in Asia. We have empowered over 10,000 students and more than 1,000 schools. When kids come to MIDP, they're usually shy, uninterested. Some of them are even forced by their parents. But when they leave MIDP, they make us really proud.
The judges are back, but before we announce the results, I would like to invite our amazing and esteemed judges to the spotlight to say a few words. Please welcome.
Hi, thank you so much, everyone. I guess I'll begin. I'll give some feedback based on the performance that we've watched just now, but I will not be announcing the results. Generally, I feel like the speeches were amazing. I feel really comforted listening to all of the speeches because I know that you all had done your research. You put a lot of thought into, finding out what's the best way to deliver your speeches. I feel comforted that you will walk away from this competition knowing that much more about financial planning, financial literacy, and investment. So really, really, really well done to all of you who have gotten this far, but also not to forget everyone who have participated also in the preliminary rounds. I particularly enjoyed the speeches because they were educational, because they were inspiring, especially the personal stories. But a few tips I would like to leave you with. Number one, I understand that it's very normal to feel nervous in the grand finals. There's a lot at stake here. But remember that it's another round that you have to perform as per what you wanted to do, right? So if you were to deliver a 5-minute speech, so you don't want to speak too fast and end your speech a little bit earlier than what you had practiced before. I noticed that quite a few of you talk a bit too fast in the grand finals. That could just be your nerves. But thank God we could still understand you. We still enjoyed the speeches. So next time, be careful about your diction, your clarity, your pronunciation, because when you speak a bit too fast, you won't, pronounce every word as well as you should have. So that would be my first feedback. Secondly is, I know that this competition happens over Zoom, you guys, but we are still human beings. We still need to be engaged. We still need to interact. We still need to be entertained as someone who is watching and listening to your speech. So this box is your stage. So use it. Use your face. Use your hand. Go left and go right. Make the best of it, right? Don't feel limited just because this is an online platform. I do feel that a lot of you managed that quite well. I'm really proud. Thank you so much for sharing your speeches with me. I'm super happy, super proud of you all. Thank you so much. I will pass the floor to Tengku Dara next to give her feedback.
Well, congratulations to all of you for being here. You were all excellent. It was a very good effort. The facts were there. The delivery was good. You were very knowledgeable. However, I'd just like to advise you that in any public speaking, you must have an intro. Some of you did not, and also the attention getter was not there. You should, of course, have the body and the conclusion. Many of you did. And as Amelia said, yes, you should speak slower and always add in a short story or a fact to confirm your speech or the topic. That will make it more interesting for the audience. And of course, with humor, that really helps. So the eye contact should be there as well. Now, I must say that there always has to be a winner, but I think you are all winners because you are all chosen to be here today. And the fact that you are here, you are winners. Congratulations once again. Well done.
Now let's have the feedback from Ms. Chi.
Hi, thank you. I must say this is the first time I'm judging a speaking competition, and it has been truly enjoyable. I'm of the view that all the speakers are truly inspiring. The 3 topics actually were chosen by Securities Commission, and they do represent 3 out of 5 strategic priorities of the Malaysian National Strategy for Financial Literacy, 2019 to 2023. So it is to actually, the goal is to elevate the financial well-being of all Malaysians. So the question is whether today all of you manage to elevate awareness in terms of these topics. I think you all did very well in terms of making the audience aware of financial literacy and how important it is. The other thing is that I like the fact that you all share some of the personal experiences that is relatable. So that speaks to your peers. Nothing much more important than able to speak to the person, to your audience. That was good. I also like the fact that, you actually gave examples and ideas, which some of them I can take away with me to actually put in some of my initiative for investor education. That was good. So nothing was coming from the people on the ground who is actually used, giving us ideas how to do it. That was great. I think the content, most of you have the content. What makes the difference is the presentation. Some of you made it more engaging. It just grasped my attention straight away. I could not forget what you say. So it is actually really able to convince someone about what you're saying and be an agent of change to the person, to the audience you are talking to, that they will change their behavior. They will start doing what you advise them to do. I think that makes you a successful speaker. So one thing I would say is that some of you did not manage to answer the questions. I think it's important to listen to the question and to give some thoughts and then quickly answer them. But to do that, you must be very well versed with your topic. So research well, understand the topic very well, then you are well equipped to answer the question. But overall, kudos to all the participants. I think it was such an enjoyable, competition. Thank you.
Amir, if I can just add one more thing, I want to take this opportunity to thank Tengku Dara and Miss Chi for judging this finals with me. It has been an absolute honor. I mean, Tengku Dara is practically an expert. So it's been, a wonderful experience. I learn a lot. Tengku Dara, always, listening to you, judging with you is always a pleasure. And Miss Chi, for the first time, I must say, I would not have known this if you did not tell me that. You did excellent. The discussion with the judges were, there's a lot of things that we wanted to say. It's not an easy decision, but ultimately we agreed with the decision that we've made. So again, thank you so much to Gudara, thank you so much Miss Chi, and thank you so much to all the finalists. I will pass the floor back to our wonderful MC Amir.
Thank you, Em, and thank you to all of the judges for your wonderful and insightful feedback. I definitely learned a few things. I hope everyone here can take from that feedback and learn as well. Now that the judges have made their decision, I have the results in my hand with me. It is the time we have been waiting for, the coronation of the champions of InvestSmart Fest Youth Public Speaking Competition 2021. Whatever the results may be, all the participants today have given us outstanding performances. We hope to see more of your speeches in the future, especially in next year's edition of InvestSmart Fest Youth Public Speaking Competition. To remind everybody, here are the prizes that our finalists are competing for. The grand champion will receive a cash prize of 1,500 ringgit for each category. Trophy from Securities Commission Malaysia and e-certificates. The runner-up for each category will receive a cash prize of 1,000 ringgit with an e-certificate, while the second runner-up will receive a cash prize of 500 ringgit and an e-certificate. Time to give the awards. Let's begin with the secondary category. I would like to invite our secondary category finalists to join me in the spotlight. I will begin by announcing the second runner-up for this category. The second runner-up of InvestSmart Fest Youth Public Speaking Competition 2021 is Cassie Dent. Congratulations. And then there were two. Your champion for the InvestSmart Fest Youth Public Speaking Competition 2021 in the secondary category is the champion, Hanif Abdullah Burhan bin Hamdi. Congratulations, well done and well deserved. That leaves us with the second runner-up. Congratulations as well to the first runner-up to, congratulations as well to Afrina Husna binti Azril Imran. Now I invite the secondary category speakers to be removed. Before that, congratulations to our champion and congratulations to all of the finalists. Amazing job and well done. Before I remove you from the spotlight and you return to your seats, I would like to ask our finalists and our judges here to look at the camera for a picture.
Wait, I think they've been removed. Let's add them back in.
Yeah, add them back in.
Let's do a picture.
Okay, for a picture. Okay, everybody look at the camera. Smile. 1, 2, 3. 1, 2, 3. Okay. We got it?
All right, thank you. Yep.
Yeah. One more. Okay, another one. 1, 2, 3. All right, great. We got it. Congratulations to all our finalists. Well done. And congratulations to Hanif for being the champion. You may be removed from the spotlight. The next category that we have is the varsity category. So I invite the varsity finalists to join us in the spotlight. We have three amazing speakers with us here. However, only one can be the champion. I will again begin with the second runner-up. The second runner-up of InvestSmart Fest Youth Public Speaking Competition 2021 is Anisha Karjo, anak perempuan Pritam Singh. Congratulations. Well done. Now, to coronate the champion, which one of our two speakers will wear the crown? The champion in the varsity category is Arif Firdaus bin Azmi. Congratulations. Well done, Arif. And our first runner-up, congratulations as well to Deepan Raj Anak Laki. Just like we did for the secondary category, let's all look to the camera for a picture of our finalists and judges. Smile. 1, 2, 3. 1, 2, 3. Okay, we got it? Yeah, all right, great. Thank you to our finalists. You may be removed from the spotlight. And congratulations again to Arif for being crowned the champion. Now, for the final category, the youth category. Let's have all of our finalists join us in the spotlight. Oh, the suspense is killing me. I will announce the second runner-up as well for this category first, just like I did in the other two rounds. The second runner-up in the youth category of InvestSmart Fest Youth Public Speaking Competition 2021 is Muhammad Muhaimin Rosman. Congratulations. Now, the champion for the youth category in this competition, we have two speakers here. Your champion is Salsabila Abdul Manan. Congratulations. Well done, Salsabila. And not to forget, congratulations as well to our amazing first runner-up, Kishan Anak Laki Deepak Busani. Congratulations. I would like to ask our finalists and judges to make eye contact with their cameras for a picture. Smile. 1, 2, 3. 1, 2, 3. All right, we got it. Thank you very much to our finalists. You may be removed from the spotlight. And thank you as well for our judges that have been helping us to judge and have been paying attention to the speeches and giving us the results today. Deeply, deeply appreciated.
Okay, well.
On behalf of Securities Commission Malaysia and MIDP, we would like to thank the judges for taking their time to be with us today. Massive thank you to the participants without which this competition would not have been possible. And if you are interested in public speaking or any other soft skills activities, do give MIDP a follow at MIDP Today on Facebook, Twitter, and Instagram. That's MIDP Today on Facebook, Twitter, and Instagram to keep updated on our events, competitions, workshops, and classes. Congratulations to all of our champions, and congratulations as well to all of our finalists who have made it this far in this competition. We had a lot of great speakers in this competition, and as we can see from the performance of the finalists today, that these are truly the cream of the crop that have given an amazing performance here. I am Amir Ishaq, and I am signing off as your MC. Thank you once again to everyone involved and have a great weekend ahead.
Good morning, good afternoon, everyone. We are very delighted to be part of the InvestSmart Fest 2021. I'm Meichi from Bursa Malaysia. I'm the moderator for the session entitled Is There an Oil and Gas Future in Energy Transition? We are happy to have Mr. Alex Goh from AM Investment Bank and Mr. Sean Lim from RHB Investment Bank with us. Before we start, let me give you a brief introduction to our esteemed panelists today. Mr. Alex Goh has been an equity investment analyst for over 20 years, covering various industries, and was ranked by Asia Money, the Wall Street Journal, and the Edge Best Call Award. He currently covers the oil and gas and telecommunication sectors in AM Investment Bank. Our second panelist, Mr. Sean Lim, has 7 years of experience in equity research, predominantly covering oil and gas and utility sectors. He was a financial journalist with The Edge prior to equity research, and he's currently a senior analyst with RHB Investment Bank. Everyone knows that the crude oil holds a prominent position in the global commodities market, as oil price changes will impact the global economy. However, with the increasing use in renewable energy, is there an oil and gas future in this energy transition? Of late, we have been seeing headlines talking about the global energy crisis, a worrying shortage of energy across the globe caused by supply restraints, which is threatening to spread to more nations and reverse global economic recovery. So what does it mean for the investors? Maybe I'll start it off with Alex. What is this energy crisis all about?
Good afternoon, Meiji. Thank you so much for your kind introduction. And I'd like to take the time to also thank Bursa Malaysia and the Securities Commission for organizing this event. I am honored indeed to be invited to this discussion panel together with my esteemed colleague, Sean. To your question, what is the energy crisis all about? We will need to backtrack a little bit back to last year, 2020, to try to understand how this situation developed. If you remember, early of last year in March, there was a Saudi-Russia oil price war. Essentially, both Russia and Saudi Arabia could not agree on what are their production levels, right? So they started pumping oil like crazy, and that led to excess supply, right? It is a supply problem. Now, immediately 1 month later came the full impact of the COVID-19 pandemic. Basically, economies froze. Everyone couldn't move about. And that led to demand destruction. The first problem was excess supply. The next month was demand collapse. Out of nowhere, we saw global production or rather global consumption of oil drop by almost 30%. Right? Normally, oil demand is about 100 million barrels per day. It dropped to as low as 84 million barrels per day in May. Now, that caused oil price to drop. Well, the futures price, for that matter, dropped for the first time in history to negative levels. It dropped to minus $37 per barrel. Now, that has never actually happened. What a negative oil price mean is that I'm giving you oil and I'm giving you money on top of giving you oil. You know, and the reason is because there was no storage space left for the oil producers, so they need someone to take the oil off their hands, right? So they are paying people to take money off to take oil off their hands, right? And that happened in May. And with the kind of situation that had happened, all majors all started cutting capex right across the board, from 30% all the way to 50%. And even Petronas, normally their capex was around 40 billion ringgit. And in 2020, their capex dropped to 33 million barrels. 33 billion ringgit, right? And that happened right across the board. Now, under that kind of scenario where demand suddenly collapsed, shareholders became more active, or rather they became more environmentally conscious. seeing the demand has dropped, they try to take advantage of the situation, and we've seen companies like BlackRock coming up with carbon, net zero carbon targets. In fact, they have said that they will not invest anymore in coal, they will not invest anymore in, or encourage investment into crude oil, or even companies that are supporting them. Basically, if you are a bank and you are supporting or financing oil investments, they will not look kindly on such investments. Now, that made it more difficult for all majors to function. So that's why you see companies like Shell, Total coming up with net zero emission targets, and even Petronas has come out with their own net zero emissions target, saying that by 2050 they will aim to achieve a net zero emissions target. Now, fast forward now to 2021 this year, right? Now that we've seen vaccination rates rolling out, we are seeing more and more passenger traffic for cars. In fact, they are reaching pre-pandemic levels in Europe and US currently, right? And that has caused demand to reach, almost around 93 million barrels, right? About 5 million to 6 million barrels away from the normal pre-pandemic level, right? But unfortunately, supply has not caught up with it. The simple reason is because of one thing was because of underinvestment last year, and it wasn't just last year. There was underinvestment in 2015 to 2017. There was also an oil price collapse, right, because of excessive shale production, right? And the oil industry was only just trying to pick up in 2018 and 2019 for 2 years before this current downturn happened again, right? So what we've seen, this huge underinvestment is such that there's a natural decline in oil production if you do not have sufficient operation and maintenance capex, and that is why it is difficult at this for all majors to immediately ramp up production. So that is why we are seeing oil price moving up to above $80 per barrel. Currently, it's now about $82, $83 per barrel currently for Brent, and for WTI it's about almost 80. Now, with that happening, it is the current supply chain has also been disrupted by many other things. All along the value chain, suppliers now are finding it difficult to get parts. Container rates have gone up because of MCO and SOPs. Ships, it's hard to find ships to move cargo across. And you're seeing things like even solar panel prices going up because container ships rates have gone up. And that is the current situation we are facing. And on top of that, because of government policies that have actually becoming more environmentally conscious and they are moving towards renewable energy, we have seen that in Europe, for example, right, they are now beginning to realize that by placing too much emphasis on renewable energy, you are exposing the electricity grid, your power grid, to higher risk. For example, the fact that you're moving into renewable energy, it means that you are actually exposed to weather changes. For example, in UK, when there's less wind or wind patterns have changed, their wind turbines have stopped moving, right? So there's a supply shortage for wind power, and even solar power, right? Because of the intermittent nature of solar energy, right? When it's cloudy or during monsoon, the production of solar energy will also vary, right? And even hydropower in Latin American countries, because of drought, right? Dams are not having enough water, so they are not able to generate enough electricity. So even hydropower, which is also a form of, which is also considered a renewable energy, is also facing weather-related impacts. So that is the current situation. Now we are seeing a complete effect of all these factors that are taking place, and that's why we are looking at oil price where it is, and that's why gas prices in Europe currently, if you were to try to match it in terms of energy equivalent to oil, gas prices is actually now being priced about almost US dollar 200 US dollars per barrel, right? That has never been reached before.
Okay, thanks. So let me get it right. The usual demand was 100 million barrels per day. But however, the demand has dropped due to pandemic, and also the industry now currently due to underinvestment and also the supply disruptions. The industry now produces 84 million barrels per day, and and now currently reaches about 93 million barrels per day, right? So maybe back to Sean, understand that the OPEC being the largest producer of crude oil, which has a huge influence on international oil prices. Can you tell us more about the OPEC's production target?
All right, thank you, Meichi. Good morning, good evening, everyone. First of all, thank you very much for the invite for this event, and thank you, Bursa Malaysia. Very honored to be one of the panelists today. Okay, maybe just putting things into perspective, right? OPEC, it's an organization that is currently, consists of 13 countries, and they have this organization is basically, they help to maintain, the balance of the oil market, and in the past, OPEC has been producing around close to about around 30 million barrels per day, and it has accounted almost 1/3 of the global oil supply. So it's very important to understand that this organization has been, deciding, I would say, has a very strong influence over the oil market in the past, few decades, and we are seeing that, in this time round, they have this productions back, in March, just to support the oil prices, when the whole global crude demand collapsed. And at this point of time, they are actually slowly, gradually ramping up their productions. And what their target is to increase, 0.4 million barrels per day on a monthly basis from now onwards. And they want to phase up the remaining around 3.7 million barrels per day all the way up to September 2022. And they are also able, have the flexibility to discuss this on a monthly basis, whether they want to increase the productions or reduce the production to accommodate the market. So, that strategy gives them, the flexibility of, avoiding the oversupply to the market, as well as, to actually ramp up productions when needed. So I would think that, at this point of time, this strategy is actually very much all positive, because if you look at the past 1 year, their compliance are very, very strong. I mean, they see that their overall compliance more than 100%, because they have been cutting more than what they are required to. So that is the reason why we are seeing oil prices has been firmly recovered, because they can also ride on crude recovery. At the same time, the market is kind of like assured that we won't have to face a lot of global oversupply gladness. Yeah, so this is how they think. I would say that's how they control the prices.
So given that situation, what is your Brent crude forecast, and why do you think that it will reach your target?
Okay, for now, we are assuming that the fourth quarter would stay on average around $80 per barrel. We think that oil prices are still looking good, because as we know, we are entering a winter season, right? So we expect the overall crude oil demand will improve. And for next year, 2022, at this point in time, we do have a relatively conservative numbers, as we could see some of the price moderations. That is given premise on the few factors. First of all, we do expect crude demand continue to increase or recover in 2022. However, the growth of the pace of the recovery will start to moderate. The projection is around 6 million barrels in 2021, and it would moderate to around 4 million barrels in 2022. On the other hand, for supply side, as I mentioned earlier on, the overall crude supply will start to increase because of OPEC. And besides that, right, you have to understand that there are 3 countries under OPEC that are actually not subject to this production cut agreement, and these countries include Iran. And we have seen that Iran, they have they are at this point in time, they want to recover their lost ground subsequent to the impositions of the international sanctions a few years back. So they have, their production has cut below around 1 million barrels from the peak productions of around 3.5 million. So what they want to do is they will increase. So I guess this is one of the few factors that we have to monitor. And the last factor that we always want to remind ourselves is the US shale productions. Do bear in mind that the previous round of industry downturn is mainly due to the ramp up in the overall shale oil productions, and that's when the OPEC decided to kind of like let the productions to ramp up, and they want to kill off the shale players. So I would say that at this point of time we don't see a switch in the strategy, but there is always a risk that if OPEC want to unwind whatever, they could still do so.
What about Alex's view on this, on your Brent crude forecast?
Sure. Currently, on average, since the beginning of this year, the Brent crude oil price is trading around $68 per barrel. We think it will at this current price, it will probably reach around $70 per barrel for this year. For next year, we are looking at still looking at 65 to 70, because as what Sean has mentioned, we are still cautious, given the fact that actual demand currently is still around 95 million barrels per day. Right, it's still about 5 million barrels per day short of the pre-pandemic levels, and the reason is because air travel is still nobody is flying on planes nowadays, right? And that is the big reason why that demand has not yet picked up. But we are seeing other parts of demand picking up in terms of petrochemicals, in terms of gas, right? That is significantly increasing. But as what Sean has mentioned, we need to be very careful on whether Iran is going to be admitted back into the international market, right? We are potentially looking at another 1 million barrels of oil coming in from Iran, right? And the other thing is, once demand has reached back 100 million barrels per day, I have a feeling that US shale producers will come back in an aggressive way, right? And you've seen back in 2015, 2017, where US production has gone up to almost 13 million barrels per day from where it is currently about 11 million barrels. So there is a big potential production coming in, right? And also we are also conscious on the increasing measures being taken by governments, right, trying in their movement towards renewable energy as well. So my view is about 65 to 70, and there is a very wide volatile range that oil can move. There is always the possibility that oil can hit about 100 million barrels per $100 per day in December, depending on the weather. As I mentioned, the weather is a big impact on oil price. If it's a harsh weather, the northern hemisphere countries are going to need more oil, right? And that is going to push prices up to that kind of levels.
Okay, so despite the current lockdown, the less air travel, demand is still below the typical 100 million barrels per day. So both of you still think that there's a possibility that the oil price hitting the $100 per barrel, or perhaps closing into their all-time high in 2008, right? Yep. So thank you for the global landscape of the oil and gas sector. Maybe let us zoom into Malaysia. How can the Petronas benefit from this high oil price? Let me get this correctly. So Petronas spends about 40 to 45 billion per year on capex, like both of you pointed earlier. How much of it is allocated to the renewable energy? Maybe Sean can take this question first. Yeah.
Okay, just putting things into perspective, they do spend this 40 to 45 billion is their 5-year annual capex forecast. That means they're looking to spend around this. And this year itself, they tend to spend around 40 billion because it's actually lower end because of the COVID-19 pandemic disruptions. And this year itself, they have allocated around 9 to 10% on new energy segments. So not necessarily on renewables, but some of this green technologies are included as well. We are seeing this allocation will increase over the years because as they have also pledged themselves to become net zero carbon emissions by 2050, they have to start considering all the alternative ways to achieve this target. But back to today, what is happening is when we have higher oil prices, right? The direct beneficiary would definitely be the E&P companies who does actually own the oil field and they sell oil products. So every dollar increase in oil prices would definitely have a direct impact to the bottom line. However, if you look at the entire oil and gas Malaysian landscape, right? There are a lot of listed companies that they are not in the E&P business, which means that they are not directly benefited from the higher oil prices. However, you do bear in mind that when Petronas or even the other oil majors start to have increased cash flows because of higher oil prices, they have extra budgets, for them to increase their spendings. In the spendings usually comes in two ways. First of all is the capex, where they start investing in the greenfield projects. They want to expand in the downstreams, and also the other part is the OPEX, where they're doing a lot of the maintenance, or they do some of these infill drillings. So all this can be related to the day-to-day operations, and that would is also essential, to maintain certain to maintain existing platforms so that they can maintain certain number of productions. So this will actually help to actually benefit the services players if the oil majors or the clients, I would say oil clients have a larger chessboard to actually spend. So ultimately, we will see, if Petronas are willing to increase the productions, maybe the drillers will be the beneficiaries. And if they want to increase their maintenance capex, then you would see the maintenance players, upstream maintenance players like Dayang, Charimin, Petra Energies, they will benefit. So it depends on how Petronas want to spend, and it will always cascade down to the services players. I hope that I made it clear for the audience.
Okay, so let me repeat this. So for the benefit of the audience, so the types of players, there are a few types of players in the oil and gas sector, is it? So there will be the E&P, which is the exploration and production companies, which most like would be like someone like Hibiscus and all, right? So
Yes.
then the OSVs will be the service players. How many service?
The services players are actually very wide. You really have a lot of different segments. You have the maintenance players who actually maintain the platforms,
right,
or you have the maintenance players who maintain the plant, and you also have OFC players they actually own the vessels, and these vessels are used to perform the different kind of jobs depending on the function of the vessels. So like AHTS actually help to pull the rigs to the designated area so that they can perform drillings, or maintain. You have this utility vessels, you can do different kind of jobs. So that is another. And then you also have FPSOs. FPSOs basically is a vessels, they take out the engine, but they usually stay in a certain oil field so that they can process and function as a storage. So every kind of a company will have different functions. So that's why it's a bit wide to say, but generally, the idea is that if they are willing to spend more, then you would have you will have all these services players being benefited.
So maybe let me direct this question to Alex then. Then how should the investors position for this sector? I mean, especially during these high oil prices. So they should be focusing on the E&P players, perhaps.
Okay, let's backtrack a little bit over the past 6 months in terms of how oil and gas stocks or companies have performed on Bursa. And there is, in fact, a sort of disconnect with where oil price have actually moved and where the share prices of all companies have reacted. Oil price have actually moved all the way to 80 from around 40 price over the past 6 months, right? It's more than double. But you don't see the same impact on oil and gas companies. In fact, they're very, 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 very stable, right? But part of the reason is because many of these companies' earnings are still being impacted by earlier low prices. That's one thing. And some of these companies also have heavy debt in their balance sheet, right? And so given the downturn, many of these companies, whether it is Sapura, whether it is Bumi Armada, they are still looking at ways to how to manage their long-term borrowings and how to defer the payment of their loan installments further down the road, right? And that's one thing, of course. And Malaysia has its own particular issues in terms of political changes in the country. So that is the reason, right? But over the last 1 to 2 days, we've seen a bit more reaction coming in for oil and gas stocks. Companies like Yinsen, Dialog, they are beginning to react to the higher oil prices. And I think this kind of reaction will continue to take place when, or maybe perhaps in the third quarter or fourth quarter, we see significant or substantive improvement in terms of the earnings, right? As oil prices goes up, the profitability of these companies improve, no doubt about it. For example, companies like Serber or whether it is Hibiscus, their performance will continue to improve, and that means they were able to spend capex, especially for Petronas, right? And with that coming in, you're going to see the revenue flow increase, and that has an immediate impact onto their profit performance. And as profit performance improve, I think investors will become more confident of their prospects going forward, and I think that we will begin to see the disconnect that we saw in the past 6 months begin to narrow down, right? I think in terms of overseas or energy companies in the US, that sort of disconnect is not as so obvious, right? And I think, well, now, which segment should you begin to invest in? I think those companies that are more exposed to the upstream, for example, Hibiscus, you'll see the impact straight away to their bottom line. The other companies that will begin to see the flow will take a bit longer to filter in, whether it is Sapura, whether it is companies like Usma, right? It will take a bit longer for it to filter down. So that they are not apples to apples comparison, because they're all different providers along the value chain. Some of them are upstream, some are midstream, and some are downstream, right? Even the downstream players have different earnings dynamics. For example, if you are talking about refiners, it depends on how much they can actually pass on the higher crude oil cost to the consumer, right? For example, whether you're a Hingwan or whether you are Petron, right? It depends how fast that your selling price can adjust to your higher cost of material, right? So yeah, I would say you need to be selective in your choices for oil and gas stocks.
Okay, thanks. So with the increasing demand for energy, the demand for renewable energy will be inevitable. So do you think that it would be a disruption to this oil and gas sector? Yeah. So what are the Malaysian players doing in this space, and are they invested in the renewable energy? Yeah, maybe Alex can take this question as well.
Okay. Malaysia has a renewable target, right, to reach 31% by 2025 from around 18% currently, right? But bear in mind, even the 18% that we have now, more than half of it is coming from hydropower. You just look at Bakun Dam in Sarawak, you have an idea of the scale that you are looking at, right? So in terms of solar power, it's still quite a small segment of our renewable energy. So to move from 18% to 31%, right, it requires a lot more significant investment into solar. Wind is still a bit an if factor because of you don't get very strong winds here in this part of Malaysia, right? Perhaps Vietnam you may have offshore, but not in Malaysia. So you are talking about the kind of a renewable combination is more on solar. Hydropower is a bit more geographical constraints, right? You need a certain elevation in order to have enough pool of water in order to have generate hydroelectric power, and there's not many places available to do that currently in Peninsular Malaysia especially, right? So we are looking at solar power. To move that level from 18% to 20%, it requires a lot more incentives by the government, right? And we always have seen feed-in tariffs being given out by SEDA, for example, right? And there has been a round of of large-scale solar power awards that were given out to several companies earlier this year, right? That include companies like Busma, right, and many other small players. So, yeah, I think there will be more players becoming involved in renewable energy. But I must say that at the moment, this kind of production that we have is quite small scale, right? Compared to what we are seeing in India, which has actually been awarding much bigger capacities in terms of megawatt generation, right? And in order to be profitable, you need a certain degree of scale, right? The smaller you are, you can't generate the kind of economies of scale to make it profitable, right, for operators. But increasingly, I would think there will be more awards coming in if you are going to achieve 31%, 31% share of the energy market in Malaysia.
Okay. So, okay, understand that the 12th the 12th MP was recently announced. Was there any policies that could benefit the sector, and how do you think that this policy would impact the sector overall? Maybe to Sean?
All right. If you look at the announcement of 12 MP, I would say the biggest surprise or the biggest good news is the pledge of a net zero emissions by 2050 for Malaysia. I think finally Malaysia have announced this, and if you look at the regional peers, if you look at Thailand, they are looking to achieve a carbon neutrality by 2065 to 2070. And because the economy is still, or the country is still growing, they do look at a carbon peak in 2030, which means they will try to reduce the overall carbon consumption, the carbon emissions starting from 2030. If you look at the growing economy, it's kind of similar. Indonesia and China, they both have a net zero emissions target by 2060. Particularly in Indonesia, they hope the statement is 2060 or sooner, which means they will try to accelerate this target as soon as possible. As for the other peers like India and Philippines, they have yet to commit the net zero emissions. So I think the first step for Malaysia is, Malaysia have done at least the first step is to have a pledge. Then we need to have a game plan on how to achieve this, right? So this is also good that they have also announced that they won't be investing in a new coal plant. But of course, this is the execution wise is really very technical in my opinion, because if you look at the development plan released by Energy Commissions back in March, actually they do have allocated certain additional capacity for coal plant between I think 2030 to 2037. So there are I think 2,800 megawatt being allocated. But following this announcement, we are not too sure whether this new coal plant additions will still materialize. Because it's, to understand the latency, you have to make sure not just increasing the RE capacity. Ultimately, you also need to make sure that there is a grid stability in order to avoid a blackout, or to avoid any malfunctions for the entire grid stability. So that is the first biggest good news that we have seen so far. And you look at the report, right? There is also a quick review on 11 MP targets, and only out of the 10 targets, only 3 targets are being achieved. That also shows that there are a lot of efforts needed to actually accelerate or to achieve the energy transitions. But overall, what we have seen is actually a continuation of the 11 MP plan. They continue to look at low carbon nation journeys, and there's no change in the RE capacity target, 31% by 2025. But apart from the solar and hydro, right, I think there's also a greater call on the growing on other RE, which is such as biomass and so biogas. I think the total investment in the biomass industry is targeted to at around 10 billion ringgit. And besides this, they also are calling to form a very comprehensive national energy policy. I think this is also very important. When you have targets, you need to have the game plan. I think this policy should give a good clarity on how Malaysia could achieve its long-term carbon targets. So overall, I think we are still quite positive. Along the way, we have, for oil and gas, there is also a comprehensive chemical roadmap to be developed. I think this is also quite important so that we do strengthen our domestic petrochemical value chain. So, it really depends on whether they want to still prioritize the development in Pengerang, given that Pengerang have actually, you have the PIBC over there. But in my view is that probably they wouldn't have something similar size, or they want to attract, all the foreign chemical players to actually build more plants over there to develop as a regional petrochemical hub. So this is something that we are willing to see how it develops over the next few years. I think last something to highlight is also that they are looking to prioritize the utilizations of the locally produced petrol and also diesel. I think this is it will actually benefit the local refineries like Adrian and Petro Malaysia's, and that will also gives a little bit more clarity on how they want to distribute if the refinery plants in Pengerang start to commercialize end of the year or beginning of next year. Yeah, so that's basically a quick summary on how we see the 11 MP. Oh, sorry, the 12 MP.
Right. So maybe just and maybe an opinion from you as well. Taking back from what Alex mentioned earlier, that the oil and gas companies, we must be selective on some of the oil and gas companies because due to their balance sheet, etc. So, and also with the rising demand in ESG, rising ESG mandate and all that, would that deter the investors from investing in this sector? Actually, that's why, and hence, and also also resulted in the increase in the renewable energy related sector.
I think this is a very interesting question. If you look at how investors react towards ESG, right? I think this impact is much more prominent in the utility sectors. We have seen Tenaga foreign shareholdings have been on trending low, very low, in the past 2 years, and ever since the increase in the ESG awareness, a lot of funds that do have some restrictions whether they want to invest in companies with coal exposure. Oil and gas, I do, whenever we're doing our communication with the clients, yes, they are, but it's not so apparent as compared to coal, because whenever I speak to clients, Tenaga is always a no, because they have a relatively high coal capacity. So what is interesting is that, whether you have high coal capacity is one thing, or secondly is how you manage your game plan from a high coal capacity all the way to low coal capacity. Do you have any interim targets? Do you have any long-term targets? This is what investors will be looking at. And from the very basics, I think this is also across similar to the oil and gas sectors players. Do you have a very good disclosures on your GHG emissions? Do you have targets? How are you going to reduce all this? Do you have plans to divert yourself into renewables? So I guess this is also very important. I think one of the companies that have done pretty, at least I would say among the players is Vincent. I think they have done pretty well. They have pretty good plan, targets, what they have done, what they want to do. And also, I think in the past 1 year, you have seen them starting to invest in solar projects in India. And also they have started investing in a lot of green technologies. So recently, they have just announced, having some exposures to invest in the companies that invested, then actually, involved in the battery solutions for marine batteries particularly. So these are the strategies that we want to see. Even though we do understand that at this point of time, these earnings may not be very significant, but at least they know there's strategies moving towards. I think these are all very, very important. I think if you are in E&P players, you probably also need to have a game plan, how you want to achieve your net zero carbon. Do you want to invest in the carbon captures, or do you want to actually acquire more gas projects so that, as interim fossil fuel, because gas is a relatively cleaner fossil fuels as compared to oil. So I think this is also very interesting. We want to see all this, and I think companies also are forced to jump on this bandwagon. They can't really ignore the voices of pressure from the shareholders, because they are really, I think we do see that a change in how analysts ask questions or fund manager ask questions, because these are the key priorities they want to see, apart from just making money from the conventional fossil fuels.
Right. So what about Alex's view on this? Do you see that the fund managers are now looking into ESG, like increasing the mandate from perhaps from no position to like much higher percentage in ESG companies or ESG related companies?
Absolutely, I do agree with Sean. Even the biggest fund management company in Malaysia, EPF, they have a whole department set up just to look into ESG component, right? And many of the GLIC companies, like even PNB, right, are also moving in that direction as well. So yes, increasingly ESG will be a significant component, right, in assessing whether a company has plans to move towards a carbon neutral position, right? That's one thing. And as what Sean says, at least they want to see you have a plan, right? Perhaps it is based on hope, right? But at least you have something in mind to move towards that direction rather than nothing at all, right? And I think, yeah, that is the current situation. And like I said, companies like BlackRock, well, they are the largest fund management company in the world. They have $9 trillion of fund, right? And they have a huge impact on moving markets anywhere in the world, right? And that is the reason why even Petronas, as the national oil company in Malaysia, have to move towards that direction of moving towards net zero emissions by 2050, right? I mean, Petronas is not listed, but even then also they have to move towards that direction because if you want to secure project financing for many of your oil and gas projects, you need to tap it into international banks. And international banks now are being pressured not to lend to oil and gas projects, right? So all of them need to come up with some plan to show that, they need to be an ESG compliant, right? But one thing I want to highlight also, right? The current fact that, as what I mentioned earlier, there's a disconnect between oil price and the share price of companies. It's because the results of many of these companies are still being impacted by the recent downturn. But increasingly, as you begin to see the results begin to improve, especially for upstream players, and later when orders start to come in from other service providers like Sapura, right? I hold the view that investors will come back in again, right? As long as there's money to be made, as long as dividends will start to improve, we will begin to see a bit more correlation between the movement in oil price and the share price of these companies, right? So I am overweight on the sector. I am positive, all right, and I do have buy calls on companies such as Bumi Armada, Yinsen, Petronas Chemicals, Petronas Gas. Those are the companies that have solid, have a balance sheet or improving balance sheets that are able to capitalize on the upturn in oil price.
Okay. So what about Sean? What would be your top buys then?
Currently, we have three topics. My topics, the large cap would be MIC and petrochemicals. Petronas Chemicals, sorry. Petchem has done really well because the petrochemical prices are actually on a very strong uptrend, and we recently see that the fertilizers and methanol prices have actually reached record highs in the third quarter. It seems like the uptrend is able to be sustained, if this commodity rally were to continue. And even the olefins and derivative numbers, the PE prices were also slowly, creeping it up again after the tapering off from the recent peak in March. So it seems like, there is still room for it. Of course, based on our forecast, we actually projected a relatively a conservative price trend in 2022. Actually, there is almost like a 20% downturn in decrease in earnings forecast in 2022, after our recent review. But however, we have been seeing this moderation of price then being delayed, quarter by quarter. It seems like the downturn, the turning point have yet to materialize. That's why this is the reason why we see this price trend continue to there's still room for it. If oil price were to hit 100, of course, petrochemical companies will continue to benefit because higher feedstock generally there's pressure for them to up the ESP. So I'm quite positive on that. And I think the smaller pick that I have chosen is Bumi Armada. Bumi Armada has done pretty well. I think their share price have suffered a lot. I think in the past 2 years because of they have certain issues with Armada Kraken, and this have been resorted, and they have demonstrated I think almost 6 quarters of very strong earnings, and with this strong earnings and also with the continuous asset monetization from the non-core assets, this will also help to strengthen their balance sheets, which is also one of the concern for a lot of investors. So I mean, this would actually be my topic.
Okay, thanks. So hearing this, so Alex, what is your wish list for the upcoming budget?
All right. For the oil and gas sector, which is kind of matured, normally the budget does not have any special incentives for the industry. I mean, Petronas has been in Malaysia for past 30, 40 years, right? So, but the only thing you probably get is probably some capital allowances for spending on plant and machinery, most likely, right? But what you probably want to see is more on the renewable energy segment, right? I think you need to bear in mind, if you are moving towards a higher percentage of renewable energy production for electricity, the cost of electricity generation will go up. There's no doubt about it, right? Because solar power, like when you put it into the grid, it will cost more to tenaga, and that cost may be passed down to consumers. So that you need to bear in mind that the people who are going to be impacted most will be the low-income group, the B40, right? So there must be certain element of subsidy, right, up to a certain level of kilowatt per hour that need to be provided for that segment of the population, right? The other thing we need to be aware of is, of course, in terms of adoption of solar technology like rooftops installations. Currently, there is a feed-in tariff where if you have a solar panel on your house, you can actually sell power to tenaga based on a certain scale, right? But at the moment, most people are actually using that kind of structure just to reduce their electricity costs, right? Because the net excess energy that they can actually supply to tenaga is actually quite small, right? So what we'd like to see is actually perhaps some incentive in terms of tax deduction, right? If you to install solar rooftops, that can cost easily 60,000, right? But there are new schemes that are being proposed by suppliers, in terms of installments. You can actually pay per month or on a monthly basis instead, right? Now, if those monthly installments can be used for income tax deduction, I mean, that will encourage more such installations in Malaysia, and that would take up some of the load off in terms of retail demand for electricity, right? The other thing, of course, is on the adoption of electric vehicles or hybrid vehicles. We'd like to see perhaps a complete waiver of import taxes. Currently, there is import duty exemption for CKDs, but for CBUs, there's about 10% import duty still, right? And as well as for excise duties, it'd be good to have such extension of those exemptions going forward. We also like to see perhaps road tax exemption also. If you are driving a solar car, right, for example, you don't have to pay road tax, right? And that will encourage adoption. But I just want to highlight that at the moment, if you look at a Tesla, a Tesla is more expensive than a Mercedes, all right? So even with all these tax waivers, so it is actually more a luxury car for the higher income group, right? It is currently out of the range of most lower income group, and also because there is not enough charging stations in Malaysia. You need to set up those things and in enough area in order to make it commercially viable, right? For those in the middle income group to actually look at.
Yep. Okay. So this will be the last question. I'd like to direct this question to both of you. Do you think the oil and gas sector will still be around by 2050? Would you stay invested in this sector? Yeah, maybe Sean. Maybe Sean can start. Yep.
Hello.
Hello.
Should I take the question first?
Yes. Can you hear
All right.
me?
Yeah. Okay. All right. Okay. I think this is definitely a billion-dollar questions. In my view is that I think all these big companies will still be around, but in what form and in what kind of mixture. If you look at the current, a lot of current strategies, right? all the companies have started, moving, having this pledge of 2050 and all those. But I mean, evidently, you have seen that actually the Europe companies have a more aggressive goal target in terms of the emissions targets as relatively to the US, because this is also driven by the country policies. I think Europe countries do have a relatively more aggressive in terms of the climate change goals. So I guess, in essence, what we can see is what would change, the landscape is really very much dependent on two things. First of all, is the respective country, overall global country policies. We have seen, if the policies are more aggressive, then you see the companies follow suit. So I think it's a matter of time, US will catch up, because US eventually they will be more aggressive, following with the president Joe Biden, come into the picture. Then we will see a more pickup. So definitely, the global policy will be in place. But if you look at the EIA reports, they do mention that if the current policy continues, right, I think the overall energy related consumption will still increase through 2050. So what we need is a change, or a change in the global policy. And I think the second factor that will driven is definitely the technology advancement, how fast the technology can change. I think this is one of the things we have seen of looking at the current energy crisis, is that I think the world is still not ready for a very clean emission at this point in time, because growth or the daily consumptions are still need energy, and we do not have a very good technology to actually support the grid, so that all the RE can fit in nicely. So what is needed is, first of all, we probably need a very good battery storage systems, so that this, all the solar power or solar electricity that has been gathered during the daytime can be nicely transmitted or can be utilized during the nighttime, and this can be done in a cheap way. That means it's a very affordable way. And this one, I think we do have this technology, but these are very, very expensive, and it can't be widely used at this point in time. So what we need is a technology advancements, similar, to different strategy like carbon captures. Are we going to have a very strong or commercialized viable carbon capture technologies? If yes, we maybe will see, that even the coal or even the oil and gas maybe, existed in a much cleaner way, because carbon capture can be done, all the carbon dioxide or the GHG emissions that emitted out can be nicely managed. So I think these are I think it's a moving scenarios, but I would think that yes, oil and gas probably will still be relevant, but maybe this company would have, just like how they transform themselves, calling themselves as an energy company instead of an oil and gas company, they would need to transform as well. So yeah, that is my so-called long and short answer.
Okay. What about Alex?
Yeah. My answer will be, it will seem to be politically incorrect, and it may even seem to be environmentally not the proper answer. But I would say that there will still be oil and gas industry by 2050, right? I think the death of oil is greatly over-exaggerated, right? The simple reason is, even the EIA on Wednesday came out with a report for its international outlook. It says by 2050, oil and gas demand will still have increased from current levels. The simple reason is because of global population growth. That's one thing. The second thing is the population growth is coming a lot from Asian countries, and these are less developed countries. And as they develop, you're going to need even more electricity, and because of that, right, you are also looking at renewable energy going into the mix, right, or using more electric cars. That would mean even more demand coming in from developed nations, right? So the increase in energy demand is going to be a lot more higher proportionally to even the increase in population growth, right? And the illustration I can give is similar to you are dangling a carrot in front of a donkey, right? And the donkey is always trying to reach towards that carrot, but it can never reach it because the carrot is moving forward even as the donkey is trying to stretch for it. And that's actually what's happening in industry, and that's why there is an energy crisis currently, because there's a mismatch between economic reality and what technologically we can actually achieve at this point in time, right? So I do agree with Sean. Yes, there will be some some shifts towards renewable energy or some changes, but eventually everyone, right, will still need oil and gas, and it will still be relevant by 2050.
Thank you. Thank you both. So let me close this session. But before that, let me just summarize the conversation that we had earlier. So the energy crisis that we have today is due to the supply shortage given a mismatch in production as a result of the lockdowns and also the surge in demand for the reopening of economies globally. The climate change as well as the ESG mandate from global funds have also pushed for cleaner energy, hence the interest in renewable energy. However, both panelists have a view that the oil and gas sector is here to stay, and the renewable energy will be a complementary energy source to the oil and gas sector, as population growth and urbanization will continue to push for higher energy demand. Yep. So yeah, for that, we would like to thank you both, Alex and Sean, for your time. It was a great session for the understanding of the overall oil and gas sector. With that, thank you and stay safe.
Thank you very much, Mechi.
Thank you very much, Michi, and thanks for the invite.
Good afternoon, everyone, and thank you for joining us in today's panel session on investing in sustainability for a better future. Globally, we are seeing calls to tackle climate change challenges and adopt sustainability practices as we recover from the COVID-19 pandemic. As we're speaking to an audience of retail investors today, this session is for everyone to learn about how we can make a positive difference through the investment choices we make today. To learn more about sustainable and responsible investment, or SRI, I'm pleased to be joined by a panel of investment experts. We have here with us today Encik Najmuddin Muhammad Lufi, CEO of BIMB Investment Management Berhad, Mr. Alvin Tan, CEO of UOB Kay Hian Wealth Advisors, Ms. Elaine Lokman of Atta Plus, and finally, Mr. Wong Kah Meng, Funding Societies Malaysia. Now, before we start the panel session proper, I would like to invite each one of my panelists to share a little bit about SRI from their respective industry segment. So, Encik Najmuddin, can I start with you first? Can you share with us what is SRI from the fund management industry's perspective? Over to you, please.
Sure thing. It's good to be here. So what is SRI in asset managers' perspective? The term SRI or ESG are often used interchangeably. SRI fund refers to funds policy and investment strategies that adopts one or more sustainable considerations, such as the United Nations Global Compact Principles, one or more of the SDGs, or any other ESG factors. It covers broader base of standard as compared to ESG. ESG fund refer to funds policy and investment strategies that adopts systematic assessment of quantitative and qualitative data on environmental, social, and governance factors in its investment analysis. The ESG analysis in general focus on ESG issues. Simply put, ESG can be considered as SRI fund, but not all SRI funds are ESG funds. BIMB Investment defines sustainability as a system of corporate strategy, business model, and operations that integrate ESG factors to create long-term economic and social value. ESG data enable us to assess the sustainability performance of companies. Effectively, ESG information provide us with insights on the management quality of a company and the strategic decisions taken to position the firm for long-term financial success. Consequently, ESG integration enables us to take better informed financial decisions. Also, we believe there is alignment between Islamic capital market and Islamic finance and SRI. SRI exhibits several similar facets of Islamic finance. Both SRI and Islamic finance value-based approaches and strong on risk management.
Thank you, Encik Najmuddin. I really like what you mentioned earlier on about the commonalities between SRI and Islamic finance. That at least indicates to us that SRI is actually not new to the Malaysian capital market, and there is already some similarity, some familiarity with SRI. But we'll dive deeper into that later. But now, can I invite Alvin to talk a little bit about the broader capital market, other than the SRI fund management industry. Can you share with us your perspective as a financial planner about SRI? Over to you, Alvin.
Yeah, thank you so much. For SRI, basically, it's not something that is new. In fact, I think Naj actually have put it earlier that if you base on the principle of Sharia compliance, it's actually quite similar to Islamic financing. Yeah. Because both the Sharia compliance product in general have a little bit aspect of SRI already. It's what the principle of Sharia compliance basically applies ethical and extra financial criteria that represent potential crossover with the SRI. and bear similarity in the social responsible purpose and exclusion of business deemed unethical. Yeah, that's actually the general perception on SRI.
Thank you, Elvin, for that. Now, can I invite Elaine? Can you share briefly about how retail investors can participate in SRI through ECF platforms?
Okay, thanks Ting, and thanks Securities Commission for inviting me to be part of this InvestSmart panel session this year. Okay, so interestingly, I think we've seen quite a number of, I would say, impact enterprises or social enterprises participating in equity crowdfunding. If you look at, I think in the past, right, when you talk about ESG investing or ESG funds, these are, I would say the major players would be the asset management companies, you know, with big funds, right? And only sophisticated investors would be able to play the game. But now, when you look at equity crowdfunding, because it's so inclusive and it's also democratizing investing, the smallest, I would say, investments that we have accepted to date in equity crowdfunding in Malaysia is 10 ringgit. Yeah, and I'm pleased to say, and that is specifically was for a fundraising campaign done by, I would say, a social enterprise and impact kind of business. I can share a little bit more about that later. But moving on, what is interesting is that we are seeing more and more impact of businesses, you know, ranging from social enterprises that affect a socioeconomic, that provide socioeconomic impact goals, right? Number one. Number two, also in green sector, specifically recyclable, I would say bio items, organic, looking at, we have one coming up, very nice one on reforestation. And what's interesting is that these kind of investments, aside from the retail investors or general investors, you know, being able to contribute, right, and make an impact, whether it's, you know, for the earth or to society, they can also make quite, I would say, handsome returns. Yeah, and especially now, it's not, Securities Commission has liberalized, yeah, the guidelines, not just allowing for ordinary share structure for, you know, issuers, but also preference share structures, whereby, you know, they can get interesting or handsome, I would say, above market returns, anywhere between 8 to 15% or even more, depending on the type of business. Thanks.
Thank you, Elaine. I would definitely want to hear more from you about social enterprises through ECF. So we'll definitely talk more about that. But finally, Kameng, can we hear from you about your perspective about SRI through the P2P platforms? Over to you, Kameng.
Thanks, Ting, for having me and on this panel discussion. Glad to be here, and also broader thanks to the SC as well for organizing this very consistently over the years. I think it's a very important platform for us to share some of the ideas and some of the developments in the market, and also always really a pleasure to be here with the rest of the well-known panelists as well. I think for us as a P2P financing platform, it hits at the core at what these platforms are meant to achieve, which is really to help the underserved and unserved small and medium enterprises get access to financing in the previous whereby they might be underserved or unserved by the traditional financial institutions, despite contributing significantly to employment, GDP, and things like that. I think just to give a sense, the majority of the companies that are being funded and supported through P2P platforms in Malaysia are generally the micro and small enterprises. And this would be very small operations. And generally speaking, you would also say that they are highly correlated to perhaps lower income of the segment of the population. So I think overall it hits at the core at what P2P financing platforms are meant to support. I think in terms of some ideas shared by Najmuddin is around Sharia compliant platforms or asset classes. And I think this is an area that is also offered as well by P2P financing platforms. I think likewise from funding societies ourselves, we also be looking to launching Sharia compliant credit assets in the very near future. I think from an investment perspective, then how does this fit in? Is what, as Ilian was mentioning earlier, is allowing the small guys, right, the early investors who just started their investing career and does not want to start small and want to get a better understanding, and hence where P2P finance platforms like ourselves allow people to come in and start investing at small amounts and learn the process before they further expand their portfolios. I think that's in a nutshell how would I categorize the whole P2P financing industry from a SRI as well as from an investor perspective.
Thank you very much, Kameng, for that. That was very helpful, and I definitely would like to hear more about the opportunities within the P2P landscape. So we'll definitely talk more about that. But now I think we're off to a really good start to dive deeper into this topic. So first of all, let's talk a little bit about how we make SRI accessible to our retail investors. So Najmuddin, I would like to hear from you. What's your observation about the interest and awareness of retail investors in making investments that are aligned to their values? And can you share about the various SRI funds available in the market that cater to the diverse investing needs and values of our investors? Sorry, Encik Najmuddin, I think you're on mute.
Sure, I think we see the growing trend of ESG funds launched in the market for the last 2 years, where majority of the ESG registered under the SE's guidelines on sustainable and responsible investment SRI funds was launched in 2020 and 2021 during the pandemic period with average net asset value of 116 million ringgit. Average Islamic SRI fund is 134 million ringgit, while conventional is 69 million ringgit as of end August 2021. This evidence that more and more Malaysian retail investors are investing in ESG theme unit trust funds over the past 5 years since we started. We see a gradual growth prior to 2021. However, in 2021 alone, there are 16 SRI funds was launched. In other words, more than half of the current SRI funds are launched in 2021. In general, we see more sectorial funds such as Asia region that add on to our very own global equity, Malaysia equity, and also Asia Pacific equity space. Thematic-wise, we see more innovations lately that expand into specific sectors such as technology, low carbon economy, etc. Asset class-wise, more fixed income ESG funds are launched since our very first BIMB ESG Sukuk fund that was launched back in 2018. We believe the COVID-19 pandemic environment does change industry players' mindset by establishing SRI funds. It also meant that there is more demand in the markets by retail investors for SRI funds, as the average fund size for sustainable funds are quite substantial. Thank you, Tim.
Thank you, Najmuddin. So what I'm hearing from you is that we've seen a lot of interest from retail investors to invest in SRI, and because of that, the fund management industry is generating more products to cater to this demand. And you've also shared with us the various opportunities that can invest in regional or Malaysian equities in different sectors that are aligned to their values. Thank you very much. So Kameng, can we move to hear from you from the alternative financing space? What are the trends among retail investors that you're seeing? And what are the SRI or ESG opportunities that they can invest in from the alternative financing space?
So for funding societies, the majority of the SMEs or the companies that come to us for financing are micro and small enterprises. So it's really at the core of what I think part of the SRI agenda is trying to achieve. I think adding on to that is that there is a MYCIF program that is launched by the MOF. It was announced a couple of years ago, whereby the government is also co-investing in some of the social enterprises as they are certified by MAGIC, which is another government agency. So these are some examples. Some examples would be, it could be a batik manufacturer that employs women in B40 segments, for example. There's also a company that is providing technology to big corporations to reduce their carbon footprint or their environmental impacts. So I think these are some examples that I can share in terms of the opportunities that have been hosted on our platform. I think in terms of the retail trends, I think we have seen quite similar trends for across the board in terms of whether they are micro, smaller enterprises, as well as larger companies in terms of investing. But generally speaking, in terms of the retail investors, is that they invest typically low amounts, on average, median, perhaps a couple of thousand ringgit, right? And they invest in a lot of SMEs, thereby supporting a lot more SMEs in the country. So I think the majority of the investors that we have on board, generally speaking, they are typically early working professionals, and they typically invest through the mobile applications that we provide them. So I think the value proposition that we bring to them is really the ease of getting onboarded, as well as the ease of investing and keeping track of their investments. I think that's overall in terms of what the trend has, what is the trend that we've seen. I think if you backtrack when we first launched in 2017, I think the awareness was still much lower. So it could take hours or even weeks to fully fund a particular SME, but now it takes a couple of minutes. Obviously, it depends on the financing terms and so on and so forth, but I think we've definitely come a long way in terms of the awareness of the P2P financing sector.
Thank you, Kaming. So it's very encouraging to hear that there's also a lot of interest from retail investors to invest and support our MSMEs, given that they represent the backbone of our Malaysian economy. And and as you mentioned earlier, it's also to help to finance the underserved businesses. So I'm really interested to hear more about that later. So we've heard a lot about the opportunities available for retail investors to invest in SRI. But let's now move on to the next theme about the value proposition of SRI. Why should retail investors invest in SRI? What's in it for them? So can I invite Alvin and hear from you? What should retail investors consider when investing in SRI?
Yeah, thanks, Ting. What should retail investor consider in making SRI investment? I think it's important, first of all, for the investor to first understand what is a SRI investment and how this is actually different with other investment strategies or asset classes. Then I think second, also for them to understand what's the risk characteristics of this SRI fund versus their risk appetite. Yeah, I think, and also most important, whether the investors' social value is in line with the fund strategy or not. As what the general or panelists have been shared earlier on, basically social responsible investing, SRI, is actually an investing strategy that aims to generate both social change or impact and financial returns for investors. For example, some of the SRI investment, they carry the theme, for example, like Go Green, that you have EV, solar, clean energy, or basically also they have other themes, for example, like no weapons, arms, or probably alcohol. This is more social element. So I think for this, this could be some of the consideration that the retail investor should be considered in before making an SRI investment. Over to you, Ting.
Thank you, Alvin. Just to explore this a little bit further, is it true? How can SRI bring diversification benefits, especially if investors are looking to diversify their risks? Can SRI play a role in that?
I think answer is definitely yes. There's always I think the gist of the question would be asking whether SRI, by investing because of social ethics, whether the fund do actually perform. So the answer is actually yes, because based on SRI investment, the selection of our companies are actually based on financial and non-financial data, which in extra actually bring added value. For example, by reducing certain reputational or regulatory risks. And this virtuous process even tends to slightly improve the financial performance of the selected investment. Yeah. So in addition, SRS is often associated with long-term investment as it finances companies with values that will have a lasting impact on the future. For example, by supporting companies that meet the challenges of tomorrow, for example, like cutting our carbon footprint, clean engine, public transport, etc., we're actually committing to economic activity that will enjoy growth in the years to come. And as the saying goes, don't put all your eggs in one basket. This is actually a key rule in limiting risk and ensuring successful investment. So SRI funds are a great option and allow you to diversify your asset while securing a satisfactory return. This is evident through the economic crisis of 2008 and 2009, and 2020, sorry, that 2/3 of SRI funds withstood the market downturn better than traditional funds.
That's really good to hear that investing in SRI, while we can invest in positive impact, we actually can still generate positive returns. So there's actually not necessarily there's a trade-off when we invest in SRI. So that's really encouraging to hear. Encik Najmuddin, before we move to the next theme, can you just share briefly about the performance of SRI funds? Is it at par with conventional funds?
Sure. Long-term consistent return would be the key measure. An ESG fund should be able to weather the market volatility better than non-ESG peers in a given long-term investment period. Despite 2020 being a generally challenging year because of the global pandemic, it wasn't that bad for investing. Relatively, it was a good year for sustainable investments. If you look at the MSCI All Country World Index Sustainable Impact, in 2020, it delivers 44.96% return versus the MSCI All Country World Index, which is conventional, of only 16.25%. If you look at the 5 years return for the sustainable impact, is 16.32% versus the conventional of 13.2%. So, like any investment approach, sustainable investing will not always outperform over short-term periods, but over the longer term, ESG insights can help investors develop a more complete picture of a company, one not reliant only on financial indicators. ESG analysis can provide an early warning on environmental or social risks before they affect company value, and can help evaluate the sustainability of a firm's long-term business model and how well a firm treats its stakeholders. Companies who prioritize ESG factors have shown to be more resilient to shocks and could give better return to investors in the long run. This tilts the portfolio towards companies that are better equipped to manage ESG issues and therefore less likely to face financial risks such as fines, lawsuits, and reputational damage.
Thank you, Najmuddin. Thank you so much for that clarification. That was really clear. It's about SRI is really about generating long-term value. We invest in companies that can generate sustainable long-term returns. So thank you for that. I think that was a really good snapshot of what SRI is. So now let's move on to the next theme, to the crux of SRI. We've spoken about SRI is about making a positive impact to our investments. So Elaine, over to you. Can you share one or two examples of how retail investors can make a positive impact through equity crowdfunding platforms?
Thanks, Ting. Okay, so first and foremost, before I start with that, I think generally, just to have a clear distinction between P2P and equity crowdfunding, yeah, because P2P, generally the returns are more short-term, and with equity crowdfunding, it really depends on the investment instrument that's being offered by the particular company. So it can be a much longer term if it's an ordinary share structure, and of course with a pref share structure, it is a much of a medium or slightly less longer term, more medium term play. Yeah. So and obviously when you talk about equity crowdfunding, the investing, there is that level of risk. Yeah. But what we see is that the kind of investors who actually are interested in this space are those who feel very strongly about not only supporting good companies with good, I would say, business models, but also and looking at potential returns, but also having that impact, yeah, in whatever they do. So one campaign that I would like to highlight or give an example is actually one of the first campaigns that was successfully funded on Arta Plus. And mind you, when equity crowdfunding first started, not many people are aware, of equity crowdfunding. So they were still at the infancy stage. And there's this particular company called Sekolah Fund. And Sekolah Fund, I would say, was recognized in the industry as being progressive startups with an interesting model whereby they themselves are actually a donation crowdfunding platform whereby they support or help underserved university students to crowdsource for scholarships. Yeah, and the founders of Sekolah Fund were even recognized by the Forbes Under 30 as the entrepreneurs to look out for. Yeah, moving forward. Yeah, so very, very commendable achievement by these guys. However, they tried to look for funds, raise funds for their startup. And unfortunately, for 12 months, more than 12 months, they spoke to over 100 VCs and angels, and they were unsuccessful, unfortunately, until they met us. And at that time, I would say, I think ESG investing was not mainstream. So that was way back in 2016. Yeah, so it's pretty much early days. So so they came to us and we said to them, I think when you talk to a typical VC or angel at that point in time, most of them generally are looking for maximizing their returns. And to them, investing in your type of businesses, I would like to quote, and this was actually a real scenario whereby one angel investor actually said, oh, to me, if I invest in a social enterprise, it's as good as gone. I can say goodbye to my investment because, it's like investing in an NGO, which is, I was horrified when I heard that. But anyway, they proved a lot of people wrong. So they actually launched our platform. They successfully fundraised over 300,000 ringgit. And a very, very nice crowdfunding campaign, I must say, ranging from individual investments of 10 ringgit to 100, 300, 500, 1,000, 3,000, 20, 30,000, and they had 350,000 investors who really like what they do, who felt that education is important to actually lift out especially those underserved communities, out of poverty, especially. So, and what is even more commendable, or I'm very proud to say that they were also the first company that actually gave 100% exit to their investors in the ECF industry. Yeah, so, and because they were totally acquired by a regional player. Yeah, and they gave 10% returns, which is not great, but still, for the investors, it's great that they got returns. But what's also more commendable is the socio-economic impact that they created, for the country. So they actually crowdsourced over 1.6 million ringgit to 592 student beneficiaries. Yeah. and over 11,000 funders, contributed on their platform, and over 16,000 donations. So, for the investors, they were very proud also, and the fact that they could actually, through Sekolah Fund, created that impact for the community. Yeah, so it's over and above just the financial returns. Yeah, but the impact that you create. So that's for Sekolah Fund. Thanks, Ting.
Thanks, Elaine. That was really, really encouraging. It's great to hear that that we can actually invest and still generate positive social impact, especially as you mentioned, Sekolah Fund in the beginning, they have reached out to many investors, but fortunately they could come to Atta Plus and raise finance and also help students to further their studies. So very encouraging. Thank you for sharing that story, Elaine. Incha Najmuddin, can I hear from you a little bit more about Wakaf funds and how investors can make a positive impact through Wakaf funds?
Sure. The IB investment in supporting the country's Wakaf initiatives has been the first asset management company in Malaysia to have introduced a Wakaf featured unit trust fund called Makmur My Wakaf Fund. The fund is also an ESG compliant fund and gives out half of the return to Wakaf on a monthly basis, which combine the two components of ESG and Islamic social finance. It is our belief that the Makmur My Wakaf Fund is an inclusive economic instrument based on the philanthropic value. It aims to provide all members of society, particularly the underserved, access to quality essential services in fulfilling the needs of the community towards shared prosperity. We believe that Wakaf has great potential in developing the economy and can have an overall positive and sustainable impact on the Malaysian economy, community and environment. Specifically for our Makmur My Wakaf Fund, 50% of the fund's monthly income distribution will be channeled for the purpose of Wakaf into healthcare, environment, community and education sectors through IBIM's My Wakaf initiative. IBIM My Wakaf is the Wakaf administrator. So on education, we look at education that's related, services that's related to manage, provide or finance in educational or research efforts, such as in facility, infrastructure, equipment, research, learning, training, even scholarship or financial assistance. The Wakaf also look at or distribute also into health that manage, provide or finance health-related efforts such as in medical infrastructure, equipment, medical treatment and services. And lastly, on the economy empowerment, that we also look at those that manage or provide or finance economic empowerment effort such as business startup as well as existing businesses.
Thank you for sharing your sharing about Wakaf funds. So, so what we can summarize from here is that investors can actually invest in SRI and generate positive impact, social impact from the SRI funds and also through the equity crowdfunding platforms. So, thank you very much for sharing your examples, Najmuddin and Elaine. Before we continue with the discussion, I would like to remind our audience that you are more than welcome to ask any of our panelists any of our questions. Please do submit your questions through the InvestSmart platform, and we will definitely try to answer as many questions as we can. So now, moving on, we've heard a lot about the access to SRI, the products that are available. We've talked about the value proposition of SRI, how we can still generate positive returns while making a positive impact to the wider community. And we've also heard about some specific examples, how that is actually done in reality. So, but now I would like to move on to talk about risks, about how investors can manage risks when investing in SRI. So coming, as we all know, any investment has its risks and rewards. So from your perspective, are there any specific risk factors that retail investors should consider when making SRI investments through alternative financing platforms?
Thanks, Ting, for the question. I think it's a very important question and very important question to answer to ensure that all investors are aware of all the risks and rewards that are available on financing platforms. I think the first piece is to understand that as a financing platform that connects SMEs and investors, we are regulated by the Securities Commission after a very thorough due diligence in terms of putting together the application. And this covers the information around the platform and people running the platform. I think that's one. I think the other key piece is that as ongoing obligation as a platform operator is that we do have to do very thorough due diligence and risk assessment on the companies that are coming to request for financing. And not all SMEs would be allowed to list on platforms to raise financing from investors. So there is a strong obligation on the platforms to be doing the due diligence and risk assessment before any investment opportunities are available on the platform. I think once investors are able to view the opportunities on this on the platform, then the operators provide a very detailed fact sheet around the companies, the SMEs getting financing. So this could contain information around the directors, shareholders, as well as financial and non-financial information. Obviously, the information is anonymized, so that it doesn't reveal personal information, right? And I think that is an piece of information that investors should take a look at if they want to get a better understanding of the SMEs that are raising financing and for what purposes. I think beyond that, I think it's also very important to make sure that investors diversify, and hence the investment amount that we allow investors to invest is as low as 100 ringgit. And that allows them to invest into many SMEs in a way that is manageable, especially for younger investors, right, who might have limited capital to start off with. I think lastly is also to look at the different type of financing structures that's available. That's available on the different platforms, which carries different risk and return trade-offs. So there are structures whereby it is more of a unsecured financing that SMEs are going after, and hence the risk is higher, right? Likewise, comparable to then a receivables or a payables financing product, which is more secured in the sense that there is additional documentation that goes around getting the financing approved. I think lastly, then there are certain platforms that also provide guarantees, such as ours, for certain SMEs that's coming to get financing. So I think that different financing product and hence investment options for investors through P2P financing platforms.
Thank you, Kameng. It's really interesting what you shared with us. Just as although operators do have the duty of care to do their due diligence, investors also have to do their homework and also do their research to understand what are the financing products that are available and make sure that it suits their risk appetite. Okay, thank you very much, Kameng. Before we continue, we've already received some questions from the public. Do continue to submit your questions. So maybe Elvin, if I could pose this question to you. If we don't want to go to ESG, how do you foresee the sustainability of the company in the next 10 years? So I guess from this question, because we've spoken about how ESG, if we invest in SRI ESG, there's a chance that it shows that companies are likely to stay around longer. They'll be able to generate sustainable profits. But if we don't want to invest in SRI, so what would the company's future be like in 10 years?
Well, I mean, like, I would say that even if the company don't really follow the ESG concept, the company will still run. Yeah, it actually depends on the person, on the management team that actually run the company. So there's actually a lot of element why ESG and SRI is so important, because nowadays I think when we talk about impact investing, it's also a purpose that we want to achieve in our life. Besides investing with a positive so-called return, then what can you do to the society? What can you do to the environment? It's something that actually the newer generation will probably be more happy to do so. Yeah. So I think to that question, to me, whether you want to invest with the ESG company or not, the company will still run at the end of the day.
Thank you, Alvin. But I guess to maybe elaborate a bit further, although the company will run, could still be around in 10 years' time. But as you mentioned earlier, companies that sort of follow the values of SRI ESG, they are less likely to face regulatory risks, isn't it? And they're more likely to serve the wider community better, including their employees, their customers, and also the regulators. Okay, all right. We've got another question. Okay. Perhaps Inchat Najmuddin, if I can pose this question to you. Many ESG certified funds issued by global asset managers, such as BlackRock and Schroders, are very tech heavy. This is expected since tech companies by nature have low carbon footprint. What are the alternatives for retail investors who want ESG exposure, but minimal exposure to the volatile tech sector that are very sensitive to US 10-year rates? We've got some really, really smart retail investors here.
Well, very good questions. Like I mentioned earlier, we're seeing very diversified strategies, when it comes to ESG. No longer just, global equity focusing on ESGs, Like I mentioned just now, yes, we are seeing more, sectorial focus. One of it is technologies. We're also seeing, low carbon economy sort of focus. There's also Asia focus, there's also Asia Pacific focus, there's also Malaysia equity focus. So actually now, it's quite diversified. The investors actually have quite a wide options. Just for example, like for us at BNB Investment, we have, a holistic quite comprehensive options for the investors, across asset classes. If you are risk averse, we have an ESG Sukuk fund. If you are looking into Asia, that you like the Asia growth story, so we also have an Asia ESG equity fund. So like I mentioned earlier, we have about 30 ESG funds now in Malaysia across asset classes and across strategies. So there are plenty to choose from.
Thank you very much, Najmuddin. I think that's really the biggest takeaway, that there are actually a lot of choices for our retail investors. Thank you. Elaine, we have a question here. Earlier on, you spoke about social enterprises, how ECF can actually help social enterprises to grow. So this question is, how does a new enterprise set up towards ESG in Malaysia?
Sorry, can you repeat that?
How does a new enterprise set up towards ESG in Malaysia? So I guess the question is coming, if you want to set up a new enterprise and geared towards ESG, how can they do that in Malaysia?
Okay, I'm not sure what he or she means by that. I guess at the end of the day, right, it is really up to the business. To me, there's two types, right? One is the company's objectives and business is actually really primarily focuses on ESG and ESG business, or is it ESG related objective and vision and so on. And there are other types of organizations or companies whereby, because of the course of doing their business, then, and they actually create impact because of the way they execute. Yeah. So one is direct and one is indirect. So what we used to do when we started before, right, at the point of application, we do actually ask them, because we have this program for social enterprises or impact type of businesses whereby they do get like more attractive or competitive rates at that time, right, fee structure. So, whether, they actually impact the society, whether indirectly or directly. And I guess one way to also, do this, they can always work with organizations like Magic or even MEDEC now, whereby they have this program. I think Kaming mentioned that earlier, and they can actually get certified and get this matching fund, through crowdfunding activities and exercise. Yeah. But having said that, at the end of the day, you must have a proper business plan. Yeah. So again, when investors look at these kind of businesses, you must have a clear, plan of how you want to execute your business, executionable business model, a sustainable business model, and use of funds, and so on and so forth. So, you can't run away from, having all that in place.
Thank you, Elaine. And I really like your last point about ESG or SRI. It's not just a label, but it's also about how you set up a good and responsible business. Thank you, Elaine. So on that note, just to wrap up on the theme about managing risk, and here, how do we assess what is true to label? Encik Najmuddin, can I just hear from you very briefly? There's so many SRI funds available in the market. How can investors really understand whether these products are truly they truly fit the label and that they're truly SRI compliant?
Sure, Elaine. I think firstly, investors are advised to only invest with fund managers that are licensed by the Securities Commission Malaysia. The list of fund manager are available on Securities Commission's website and also on the Federation of Investment Managers website. All funds launched must be approved by the SC. Even for SRI, there's a special approval by the SC. Secondly, it's important to read and understand the fund prospectus, i.e. the offer document in respect of the fund before investing. Detailed information of a fund is disclosed in the prospectus, including a fund's investment strategy and policy, who runs it, how much it costs, its asset and geographical exposure, and what its major risks are. All the risks are listed in the prospectus or info memo. It is also important for investors to look into the investment selection process of an ESG fund and understand how the fund manager incorporates ESG factors into their investment process. So lastly, if investors in doubt, they may seek clarification from the related fund managers or seek clarification from their financial advisors.
Thank you, Najmuddin. That was really helpful for investors to understand that they can actually make an informed investment decision by reading the documents that are available, such as the prospectus. Thank you. So now we don't have that much time left. So let's move on to the next theme about the opportunities available in the SRI investment landscape. So Elaine, can we hear from you moving forward? What do you expect to see from the alternative financing space that providing more opportunities for investors to invest in SRI-related deals?
Okay, a very good question. And I think this is not just about whether it's in SRI specifically for equity crowdfunding, right? Because under equity crowdfunding, we do encourage the retail investors especially to participate, because there's a lot of I think coming up more exciting businesses to be listed on the platform. That's number one. Number two is also we hope that the government would also support the move towards encouraging more SRI type or ESG type of businesses, to actually fundraise on the platform, and so that investors are also able, to co-invest with the government. We, as an industry, the P2P and ECF operators have actually mooted a proposal on this for the next budget. So hopefully we have some good news from the government on this note. But I think, moving on, I think there will be more and more participation from the retail investors, especially when the government clearly detail out the 50% tax relief for retail investors who invest in crowdfunding campaigns. Up to 50,000 in a year, there's a 50% tax relief from this year, from 2021 until the end of 2023. So annual investment of 50,000 ringgit in a crowdfunding campaign. So we're looking forward to that, and we highly encourage the retail investors to actually look at the crowdfunding campaigns and what can be offered. But over and above that, I think I would like to echo what Cumming said just now, and also yourself, whereby you need to understand what you're investing in. Yeah, understand the risk. Please, look into every campaign and look at the offers, look at the risk profile, opportunities. Not just the excitement of the return, yeah, but look at the whole company as a whole, because these are high risk investments. But with that risk comes very attractive returns as well. Thank you.
Thank you, Elaine. So we can expect to see more interest from retail investors in the future. Do you think we'll see more deals from different sectors? Earlier you mentioned about the education sector. Do you think we'll see deals from other sectors?
Oh, for sure. I think, there's clearly a lot of growth in terms of the multitude of sectors that have been coming in. When ECF first started, majority of the deals tend to be very tech oriented. But over the years, we've seen, industries from F&B to green tech to education to food security, agriculture, like I mentioned just now, reforestation, yeah, manufacturing, construction. So, it's becoming mainstream, I would say, right? No longer what we call an alternative new way of fundraising or investing, yeah. But it is becoming mainstream. I'm very pleased about that. Yeah, thank you.
Thank you, Elaine. So exciting opportunities within the equity crowdfunding space. Alvin, can we hear from you? What other SRI products can we expect to see in the capital market?
Expect to see. I think we can expect more SRI products to cater for growing demand. I believe there will be a lot of demand, especially for SRI ESG team. What I perhaps would like to see that perhaps we can have SRI Sukuk bond, for example, the Sukuk, like the Sukuk Prihatin, which is tied to your social element, and then perhaps also ESG on ETF for ESG. That will cater for passive investors with lower fee.
Thank you, Alvin. Hopefully, we'll be able to see more of these SRI products in the capital market and giving more choices for investors to invest in SRI. Now, we're almost towards the end of the panel session. I would like to invite each one of you to just share your thoughts about why investors should invest in SRI. Can we start with Nashmuddin? Sorry, Nashmuddin, you're still on mute.
Sure thing. Investors should invest in SRI for our better future in terms of economy and social value. As what I have shared earlier, sustainable is a system of corporate strategy, business model, and operations that integrate ESG factors to create long-term economic and social value. I'd like to refer you to a public known case happened to a local company on allegations of being ill-treated its foreign worker, which resulted its products are being barred from entering a foreign market. Due to the allegation, its share price fell over 30% in 2 months. This is a good example of the power of investors who have impacted the change for good. That is the origin of SRI investment. Who cares win? Corporate must care about their ESG performance because one is reputation. Consumers and external stakeholders are increasingly diligent about ESG topics, and sustainability questions are the new norm. Knowing their own ESG profile helps to closely engage with customers and external stakeholders. Second, legislation. Increasingly demanding regulatory framework are pushing companies and investors to better understand, measure, and report ESG matters. Third, on risk reduction. Neglecting sustainability across the supply chain negatively impact business operations. Greater transparency helps mitigate risk. So
thank you, Najmuddin. Sorry, if you don't mind, we're almost towards the end of the panel session.
Okay, sure.
So, sorry, coming over to you. Why should investors start investing in SRI?
I echo a lot of the points Encik Naj was mentioning earlier. I think it's going. So I think the level of awareness and the level of impact for companies that are not following sort of ESG, SRI guidelines are much more pervasive these days, right? And I think that is a big trend that we will continue to see going forward. And I think that's something that is more top of mind these days, given the changes in the environment and socio-economic issues, probably exacerbated by the whole COVID pandemic as well. So I think that is an area that I think beyond just profits and returns, I think investors do also want to have a role that they want to play in terms of developing and supporting the socio-economic and also environmental agenda. So I think that's one of the more, I would say, idealistic reasons why someone would go into this. But I think some of the points that we mentioned earlier, it doesn't mean that you have to be shortchanged from a returns perspective, from a diversification perspective. So I think those table stakes are covered in terms of providing the right balance of risk and returns. But at the same time, you have this additional sweetener on top of having a non-financial positive impact on the broader country and also region.
Thank you, Kameng. Elaine, do you have anything else you would like to add? Sorry, Elaine, you're on mute.
Yeah, sorry. I think Najmuddin and Kameng covered quite a bit already. You know, I'm not sure what Alvin and I can top up to that. But I think agreed with both, Najmuddin and Kameng, what Kameng said. I think the key thing would be, I think investors should not, look at themselves, especially retail, right? They do have the power. The power of investors are pretty amazing. You know, like I think Najmuddin clearly said that, looking at the impact on share prices, if in a specific organization, did wrong, I think you also can see, I think there was one time, I think the most recent one was when I think Ronaldo, he pushed out this Coke, right? And then the next thing the share price of Coke just plunged, right? Because his view is that, it's bad for your health. Right. Yeah. Anyway, so to me, I think the power of the crowd, and they can, you yourself out there, you can make a change and you matter. That's all I can say.
Thank you, Elaine, for such a powerful message. Alvin, any last words?
What Elaine said was true. Actually, all the panelists have covered most of the part. Again, answer to short is why not? If you actually if the principle is actually in line with your social value, and at the same time you can make positive return, why not? Yeah.
Thank you, Alvin. Yes, why not? We've already spoken a lot about the value proposition of SRI, so that is a really good end to encourage investors to start investing in SRI. Thank you very much. We've come to an end to of our panel session. Thank you very much, Encik Najmuddin, Elaine, Kameng, and Alvin for sharing your thoughts and perspectives about SRI. I hope that all of you have enjoyed this panel session as much as I have, and thank you very much. Thank you.
Thank you. Thank you, everyone.
Thank you. Have a great day.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera tuan-tuan dan puan-puan. Selamat datang ke sesi taklimat Virtual InvestSmart Fest 2021. Dan terlebih dahulu saya perkenalkan diri saya. Saya Rizwan Abdul Rahim, pengurus kanan dari bahagian komunikasi dan hal ehwal awam PIDM. Dan kali ini saya bersiaran untuk berkongsi sedikit maklumat dan pengalaman saya yang menjurus kepada tajuk penyampaian saya hari ini, iaitu penipuan kewangan yang menyalahgunakan nama PIDM. Dengan itu saya mulakan dengan perkongsian tentang apa itu penipuan kewangan, kemudian barulah saya akan menyentuh tentang penipuan kewangan yang menyalahgunakan nama dan logo PIDM. Dan insyaAllah saya akan akhiri sesi ini dengan maklumat ringkas mengenai PIDM ataupun apa itu PIDM. So maka tanpa berlengah masa, mari kita teruskan perkongsian ini. Kalau kita lihat daripada slide yang kedua ni tuan-tuan, meskipun pelbagai laporan yang disiarkan di media, namun masih ramai yang menjadi mangsa penipuan kewangan yang mengakibatkan kerugian sehingga berpuluh-puluh ribu, malahan beratus-ratus ribu ringgit. Boleh saya katakan aktiviti penipuan ni berjaya kerana mereka ni menyasarkan individu yang terdesak, yang memerlukan wang, ataupun individu yang yakin mereka ni kononnya boleh menambahkan lagi wang mereka dalam masa yang singkat, contohnya melalui skim cepat kaya. Dan kalau kita lihat daripada slide ni, definisi yang diberikan kepada saya, apakah itu penipuan kewangan? Satu bentuk penipuan yang melibatkan aliran keluar masuk tunai, sama ada secara dalam talian ataupun luar talian. So maka tuan-tuan dan puan-puan, penipuan kewangan ni boleh berlaku dalam pelbagai bentuk, daripada mencuri maklumat peribadi, skim pelaburan cepat kaya, ataupun skim permainan wang. Skim permainan wang ni antara perkataan yang jarang orang dengar. Ada ramai yang bertanya kepada saya, cerita apa ni skim permainan wang kan? Skim permainan wang ni kalau saya boleh bagi contohnya, macam contohnya skim piramid. Skim piramid ni adalah satu kegiatan yang mengumpulkan dan menggandakan wang dalam bentuk pemberian bonus dan juga komisen. Bonus dan komisen ni datang daripada penambahan ataupun penrekrutan ahli baru. Dia bukannya daripada apa kata, berdasarkan kepada penjualan produk ataupun servis itu tadi. Tapi memang ada, walaupun ada penjualan produk pada skim-skim permanen tertentu, tapi ini semua hanyalah sebagai helah sahaja. Manakala pendapatan utamanya ahli ni ialah pada hakikatnya daripada kutipan yuran dan juga pembayaran lesen ahli baru ni. Tu yang biasa kita dengar, ada upline lah, downline lah, sponsor lah, macam-macam kan. Dan mereka yang terlibat ni sebenarnya kadang-kadang itu dah buat pinjaman 20,000, 30,000 daripada bank untuk menyertai skim-skim piramid ni. Dan apabila mereka gagal untuk menjual produk-produk tersebut ataupun mendapatkan downline, maka mereka terasa tertipu. Dan ini yang biasanya aduan-aduan yang kita terima. Kadang-kadang juga tuan-tuan, ada juga iklan-iklan profesional yang dipaparkan di media sosial. Yang ni pun sukar kita nak bezakan yang mana betul, yang mana tak betul. Bangsanya selalu tertipu sebab yang dipaparkan ni nampak macam very professional. Iklan-iklan ni semua sangat-sangat menarik. Tapi bila kita dah masuk, kita klik dekat link tu, kita dibawa ke satu laman web ataupun laman sesawang yang palsu. Dan di ketika inilah kita dihidangkan dengan kononnya keuntungan yang luar biasa dan sebagainya. Dan kadang-kadang kita secara tidak sedar kita dah memberikan maklumat peribadi kita, termasuklah kadang-kadang itu butiran perbankan kepada scammer ni. Dan seterusnya scammer tu lah buatlah kerja dia kan, dia pindahkan wang daripada akaun kita tanpa kita sedari dan tanpa authorization ataupun lulusan daripada kita. Dan kadang-kadang tu pengaduh kata, saya ni tak ada pun buat apa-apa pembayaran, tapi macam mana wang dia boleh keluar daripada akaun saya, tanpa mereka menyadari sebenarnya mereka telah terlibat melalui laman sesawang yang palsu tadi. Pendek kata, penipu ni kadang-kadang dia menggunakan nak menggoda maklumat ni melalui macam-macam cara. Kadang-kalanya dapat hadiah percuma, kadang-kalanya pemberian wang, kadang-kalanya beli barangan, kadang-kalanya derma sedekah ni pun kadang-kadang ada ramai yang scammer. Baik, kita teruskan kepada slides yang seterusnya. Dan di slide yang seterusnya ni, kalau kita rujuk kepada slide ni, kita nampaklah ada banyak orang kata apa, senarai jenis-jenis penipuan kewangan ni kan. Kalau kita tengok sini ada pinjaman tidak wujud lah, penipuan gores dan menang lah. Ni gores dan menang ni pun saya pernah juga. Jurujual ni datang kepada saya, dia kata, bang, abang gores ni kalau ada menang gores, ada hadiah dalam ni, abang akan menang hadiah ni. Saya tak nak gores, dia tolong goreskan untuk saya. Dia gores-gores, dapat apa nama, motor. Kemudian saya kata, saya tak gores, you yang gores, you menang, you lah pergi claim kan. Dia pun bengang dengan saya. Sebab kita dah tahu lah, ini semua gores dan menang. Apabila kita nak pergi claim motor yang kita menang tu di kedai, maka berbagai-bagai lah nanti helah yang dikatakan. Sebelum dapat motor, kena bayar itu, bayar ini dan sebagainya, sign borang itu, sign borang ini, sign surat itu, surat ini. Dan akhirnya, apabila kita rasa macam kita dah bayar beberapa wang untuk dapatkan motor tersebut, kita nak tarik diri, dan ketika kita nak tarik diri, dia kata kita tak boleh tarik diri sebab kita dah sign banyak surat. Ini pun semua antara orang kata apa, jenis-jenis scam. Ada banyak lagi scam kat sini kalau tuan-tuan tengok. Scam e-dagang lah, scam SMS lah, penipuan wasiat, love scam. Love scam ni antara yang paling orang kata yang paling bahaya, yang paling jahat sekali ni. Saya ingat kes ni memang tak banyak, tetapi sekali dia kena memang berjuta. Sebab kita tengok, kalau saya tengok dekat handphone saya ni, coretan akhbar ni pun April 2021 baru lagi April 2021, seorang wanita kerugian 2.7 juta dengan love scam. Yang ini dia dengan doktor. Ada guys, Jun 2021 2.7 juta juga. Yang ini dengan pilot. Ini cerita yang tak sudah-sudah. Memang ramai yang menjadi mangsa. Dan mangsa ni selalunya wanita kesunyian yang berdepan dengan masalah keluarga ataupun kematian suami dia pula meninggalkan harta yang menjadi sasaran kepada scammer dan sedikit ni. Mereka ni mengaut keuntungan dengan menggunakan identiti palsu. Tapi bukan kata wanita yang tidak bersuami, malah ramai wanita yang sudah bersuami pun mudah terpikat dengan pujukan romantik mereka, sehingga orang kata apa, sanggup melakukan apa saja yang diarahkan, termasuklah memasukkan sejumlah wang ke dalam akaun yang diberikan oleh sedikit ni. Dan selepas terperangkap dan terbabit, kadang-kadangnya baru kita tahu yang mereka ni adalah sebenarnya penjenayah cyber. Ada suatu perbualan saya dengan seorang pegawai polis yang berpangkat sarjan. Dia kata, kalau ibu anda sedang bersendirian di dalam bilik dengan telefon ataupun komputer, pastikan dengan siapa dia bersosial, kerana kita bimbang mereka mudah terpedaya dengan sedikit penipuan dalam internet. Sarjan ni kata dengan saya macam tu. Selalunya kita dengar ibu bapa yang kerap memantau anak mereka kerana risau apabila anak obses melalui internet dan sebagainya kan. Tapi bukan saja ibu bapa yang perlu risau dengan jenayah cyber, tapi jenayah cyber yang membabitkan anak, tapi kita pun sebagai anak kadang-kadang perlu risau, kena ambil tahu juga aktiviti yang dilakukan oleh orang tua kita. Saya rasa macam orang kata macam tak percaya kan, tapi perkara ni berlaku ya. Malah boleh saya katakan ada antara mereka yang menjadi akaun yang akaun mereka digunakan oleh love scam ni untuk akaun kedai. Sedikit ni membuat pembayaran keluar masuk menggunakan akaun mangsa ni, dan apabila jenayah tu terbongkar, yang menjadi mangsanya ialah si empunya akaun, iaitu akaun kedai ni tadi. Semuanya melalui media sosial. Love scam terperangkap dengan ayat-ayat cinta yang mengumpan mangsa sehingga akhirnya terpaksa kerugian beratus ribu ringgit sehingga berjuta ringgit. 2017 hingga Jun 2021, 67,552 kes penipuan cyber di Malaysia dilaporkan. 34% daripadanya ialah penipuan e-dagang, 31% pinjaman tidak wujud, dan 9.8% pelaburan tidak wujud. Kalau saya rujuk daripada akhbar-akhbar yang saya tengok daripada handphone saya di Google ni, berapa maklumat yang boleh saya kongsi, antaranya kalau saya boleh baca ni pun akhbar bulan April 2021. Katanya pada Disember tahun lalu 2020, seorang penternak ayam kerugian RM202,909 akibat terpedaya dengan skamer yang menyamar sebagai pegawai lembaga hasil dalam negeri. Sah-sah mereka ni menyamar sebagai pegawai LHDN. Dan modus operandi sama digunakan ke atas 18 lagi kes dalam 2 bulan pertama tahun ni, membabitkan kerugian RM636,000. Ini antara yang baru lah kan, boleh dikatakan awal tahun ni. Bermaknanya kebimbangan kita ni berterusan sebab scammer ni menggunakan alasan pandemik ni. Dalam keadaan COVID-19 dan pandemik ni, di mana banyak peluang untuk si scammer ni membina dahan subur lah, yang orang kata, untuk bergiat menggunakan alasan pandemik ni. Dia sebab apa? Sebab ramai orang yang duduk di rumah, mereka menggunakan website dan juga laptop mereka untuk bekerja. Ramai yang bekerja work from home. Jadi kita lebih banyak menghabiskan masa di laptop dan di internet. Dan ketika itulah scammer ni akan phishing kita. Cuma ni saya tak tertarik apabila saya baca tadi daripada akhbar tu, tuan-tuan, yang menggunakan nama lembaga hasil dalam negeri ni. Sebenarnya bukan sahaja lembaga hasil dalam negeri. Kalau kita tengok macam tu yang saya kata tadi, macam sewaktu pandemik ni ada yang mendapat iSina lah, iCitra dan sebagainya kan daripada KWSP. Ini juga berlaku banyak scam dan menggunakan ejen ataupun pegawai, kononnya mereka ini dilantik oleh agensi-agensi yang berwibawa seperti Lembaga Hasil Dalam Negeri, KWSP, Bank Negara Malaysia, Security Commission, PIDM, dan ini yang nak sentuh ni. Hari ni saya nak bercerita tentang penggunaan nama dan logo PIDM ni untuk dua, yang paling banyak dua, iaitu pinjaman tidak wujud dan juga pelaburan tidak wujud. Di slide yang ke-5 ni, di antara Januari sampai Jun 2021, 13% daripada pertanyaan dan aduan yang diajukan kepada pusat panggilan PIDM berkaitan penipuan kewangan. PIDM memang ada pusat panggilan 1-800-88-1266. Ramailah pemanggil yang nak mengetahui apa itu PIDM, apakah peranan PIDM, apa yang PIDM lindungi dan sebagainya. Tetapi dan panggilan-panggilan yang kami terima ni 13% antara Januari sehingga Jun tahun ini, yang berkisarkan kepada pertamanya pinjaman yang tidak wujud, pinjaman wang tidak wujud, dan yang keduanya pelaburan tidak wujud. Kedua-dua jenis scam ini melibatkan nama dan logo PIDM ya. Kalau saya nak sentuhkan di sini, kalau di slide yang seterusnya ni tuan-tuan, saya nak ringkaskan saja. Pinjaman tidak wujud ni sebenarnya kadang-kadang mudah saja. Kalau modus operandi dia, kalau saya boleh kongsikan pengalaman saya sendiri lah, saya bercakap dengan mangsa ni. Satu hari saya rasa tak lama jugalah, awal tahun ni ataupun tahun lepas, seorang pemanggil ni, nama dia Encik Man. Encik Man ni nama samaran lah, nama sebenar tapi nama singkatan. Encik Man ni buat panggilan daripada utara. Daripada utara, beliau membuat panggilan ke pusat panggilan PIDM, dan kebetulan saya bertugas pada hari itu. Bila conversation tu bermula, beliau bertanya kepada saya, dia kata berapa lama PIDM ambil masa hendak meluluskan pinjaman beliau. Jadi saya kata, Cik Man, PIDM ni agensi kerajaan, kami melindungi wang simpanan dalam bank. Kalau bank muflis, kami tak beri pinjaman kan. Jadi Cik Man ni pun beliau berusia 50-an seperti saya juga ni. Beliau rasa macam tak ada buat pinjaman. Dia kata tak ada, kita tak terlibat dengan pinjaman, kita adalah agensi kerajaan. Dan Cik Man terus terang dengan saya apa yang sebenarnya berlaku. Jadi dia pun buka cerita. Dia kata saya ni nak buat pinjaman 5,000 daripada syarikat peminjam. Bila saya dah mulakan dengan membuat pinjaman tu, beliau kata pinjaman saya dah lulus. Tapi bila sebelum nak lulus tu adalah proses-proses dia. Dia kata saya bayar untuk, orang kata apa, nak buka akaun bayar 300, untuk pendaftaran bayar 300, bayar surat lawyer 300. Kemudiannya akhirnya dia kata pinjaman ni dah lulus, tapi duit saya yang nak pinjam ni tersangkut di PIDM kerana perlu bayar perlindungan insurans untuk pinjaman yang dibuat. Jadi dia nak pinjam 5,000, dia dah bayar 1,000. Dan pinjaman untuk luluskan pinjaman yang tersangkut di PIDM ni kena bayar lagi 2,300. Dan sebelum-sebelum tu ada lagi yang dia kena bayar. Pendek ceritanya, beliau ni nak pinjam RM5,000, tetapi beliau telah membayar kepada ejen ni tadi sebanyak RM5,000. Kononnya apabila beliau mendapat pinjaman nanti, pinjaman itu akan dicampurkan semula dengan semua wang yang dia telah keluarkan, iaitu RM5,000 yang awalnya, maka pinjaman yang dia akan dapat nanti RM10,000. Di maknanya dia pinjam RM5,000 dapat RM5,000, tapi yang dia keluar awal tu RM5,000 dia akan dibayar balik oleh syarikat peminjam. Kononnya macam tu. Jadi saya kata dengan Cik Man ni kalau ikutkan perbualan kita ni, Cik Man ni dah berusia 50-an macam saya juga. Takkanlah Cik Man tak perasan yang Cik Man nak buat pinjaman tapi Cik Man dah bayar upfront kepada ejen ni. Dan lagi peliknya, Cik Man ni bayar kepada ejen ni ke akaun, orang kata apa, akaun peribadi. Akaun individu si ejen ni tadi. Bukan akaun company, tapi akaun ejen ni tadi akaun individu. Jadi saya kata Cik Man, nampaknya Cik Man telah menjadi mangsa. Saya sarankan untuk Cik Man membuat laporan polis. Tapi saya terfikir juga, Cik Man nak pinjam RM5,000, di mana Cik Man dapat RM5,000 untuk bayar semua permintaan ejen ni tadi? Dia kata dia dah gadaikan barang kemas isterinya. Jadi barang kemas isteri pun telah digadaikan, pinjaman pun tak dapat, dan akhirnya beliau rasa macam sedih lah kan, sebab nak buat pinjaman ada hal, tapi akhirnya tertipu. Ini antara satu daripada yang 13% tadi itulah, yang 13% panggilan yang dibuat ke PIDM tu ataupun aduan yang dibuat. Bermakna ada berbagai-bagai kes lagi kononnya nak buat pinjaman, berbagai-bagai bayaran telah dibuat. Ada yang bayar ke lawyer, ada yang bayar ke bank negara, ada yang bayar ke lembaga hasil, dan ada yang membayar kepada PIDM. Tapi kadang-kadangnya bila tak dapat duit tu, dia mula telefon PIDM, dia bertanya kenapa tak lulus lagi, kenapa PIDM tahan duit dia. Kat situ baru dia tahu yang sebenarnya beliau telah menjadi mangsa untuk pinjaman yang tidak wujud. Kalau saya sentuh kepada yang sebelah ni, pelaburan tidak wujud pula, yang ini pun memang lebih banyak. Syarikat yang mendakwa kononnya produk pelaburan mereka ni selamat kerana dilindungi oleh PIDM. Dakwaan ini tidak benar sebenarnya, kerana syarikat pelaburan bukan ahli PIDM dan produk kewangan bukan deposit seperti pelaburan dan juga pinjaman tidak wujud tadi itu pun tidak dilindungi oleh PIDM. Anda boleh menyimak laman web PIDM untuk senarai ahli PIDM. Ahli PIDM ni sebenarnya terdiri daripada bank-bank dan syarikat insurans sahaja, ya. Jadi kalau saya nak kongsikan kisah benar ni, Puan G ni bulan puasa itu dia datang ke pejabat PIDM, datang ke ofis PIDM. Dia kononnya nak melaporkan bagaimana dia nak dapatkan semula pelaburan dia sebab dia nak tarik diri. Jadi kisahnya bila dia berjumpa, dia kata dia berjumpa laman pelaburan ni di Facebook yang meletakkan kononnya kata apa, pelaburan patuh syariah. Kemudian di iklan Facebook ni meletakkan gambar-gambar ustaz-ustaz tersohor dan juga ustaz-ustaz selebriti. Gambar PU pun ada kat sana. Dan di sana juga di bawah tu ada logo PIDM, logo bank negara dan sebagainya. Kononnya pelaburan patuh syariah ni dikawasi oleh bank negara dan dilindungi oleh PIDM. Jadi apabila beliau ni, Puan G ni, klik saja kepada link tu, dia dibawa kepada laman sesawang, dan laman sesawang tu menyediakanlah berbagai-bagai maklumat termasuk brosur PIDM. Dan di brosur PIDM tu dia superimposekan pula kononnya pelaburan ni kalau letak 500 3 hari dapat berapa, letak 1000 3 hari dapat berapa. Jadi dia kata dia bermula dengan 500. Kononnya selepas 500 dalam masa seminggu beliau akan dapat pulangan sebanyak RM3,000. Sebelum mendapat pulangan tu, beliau kena daftar, dan daftar ni dah buat ada pembayaran, bayar legal pun ada pembayaran, buat surat pun ada pembayaran. Berbagai-bagai bayaran yang telah dibuat, dan termasuk juga PIDM. Untuk PIDM ni dia kata pelaburan tu pun dah sampai dah, sebab pelaburan ni melibatkan konon daripada Timur Tengah. Dah sampai, ada currency, pertukaran currency itu pun dia kena bayar juga charges je. Kemudian pelaburan ni tersangkut sebab perlukan juga jaminan insurans daripada PIDM, dan beliau diminta untuk membuat pembayaran lagi RM3,000. Jadi pada ketika ini Puan G ni rasa macam dah banyak sangat dia keluar, tapi pelaburan dia yang 500 tadi tu tidak dapat hasil pulangan lagi. Jadi masa tu dia datang ke PIDM, dia kata dia nak tarik diri. Tapi saya tanya Puan G, sebenarnya Puan G ni dah bayar berapa banyak? Dia kata banyak jugalah, dalam RM12,000. Tuan-tuan boleh bayangkan tak? Daripada 500, tapi oleh kerana percaya, sedikit demi sedikit ejen pelaburan ni telah meminta wang daripada Puan G ni sehingga RM12,000. Dan apabila saya terangkan dan kepada beliau dengan sewajarnya, saya kata Puan Ji telah menjadi mangsa buat laporan polis sebab kita tak boleh buat apa sebab Puan Ji begitu percaya dengan ejen ini yang sekarang ni bila Puan Ji datang ke sini untuk kita batalkan, sebenarnya kita tak ada kena-mena, PIDM tidak ada kena-mena pun dengan pelaburan patuh syariah ni. Dan Puan Ji ni datang susah payah ke sini, kenapa Puan Ji rasa macam kami boleh bantu? Dan Puan Ji ni kata sebenarnya apabila saya bercakap dengan ejen tersebut yang saya hendak membatalkan pelaburan ni, mereka telah mula mengugut saya. Mereka mengugut kerana kononnya saya telah, Puan Ji ni dah sign banyak surat-surat lawyer dan sebagainya. Kalau tak teruskan dengan pelaburan tu, maka pelaburan patuh syariah ni akan ambil tindakan pada Puan Ji ni. Jadi dia nak minta budi bicara PIDM untuk tarik diri. Tapi malangnya sebenarnya beliau telah terpedaya ya dengan pelaburan patuh syariah ni. Ini pun menggunakan nama PIDM. Dalam perjanjian pun ada juga logo bank negara. Jadi saya kata kalau nak melapor pada bank negara pun boleh sebenarnya. Tapi apa yang penting ialah Puan Ji telah menjadi mangsa dan saya minta Puan Ji melaporkan kepada pihak polis. Jadi dia kata ni macam mana, ni dah lah puasa dah nak raya, kata dia. Saya sebenarnya buat pinjaman tu untuk raya tapi dah kehilangan 12,000. Saya pun tak tahu mana dia dapat 12,000 tu untuk kononnya pelaburan ni akan memberikan pulangan lebih banyak daripada apa yang dia dah laburkan. Dalam kes yang ni Puan Ji ni bukan melabur tapi duit dia telah lebur. Saya nak berkongsi 4 langkah ni untuk menapasti penipuan kewangan. Langkah pertamanya, tuan-tuan boleh baca di situ. Saya bercelotel lah. Langkah pertamanya adalah memeriksa butiran terperinci pendaftaran syarikat. Pastikan sama ada syarikat berkenaan berdaftar dengan pihak berkuasa perkhidmatan kewangan. Syarikat yang menerima deposit seperti bank perlu dilesenkan oleh Bank Negara Malaysia, manakala syarikat pelaburan perlu dilesenkan oleh Suruhanjaya Security Malaysia ataupun Security Commission Malaysia ya. Anda boleh menyimak laman web Bank Negara Malaysia dan juga SC untuk melihat sama ada syarikat terbabit dilesenkan oleh pihak-pihak berkuasa tersebut lah. Anda juga boleh lakukan carian atas talian mengenai syarikat tersebut. Sekiranya ia adalah penipuan, tuan-tuan akan dapati ada aduan dan juga amaran daripada mereka yang telah menjadi mangsa penipuan syarikat tersebut. Untuk langkah kedua pula, kita perlu berhati-hati terhadap syarikat pelaburan yang menjanjikan pulangan lumayan pada masa yang singkat. Macam tadi itulah Puan Ji tadi tu. Contohnya macam dia kata tadi, syarikat pelaburan menjamin pelaburan awal sebanyak 500 boleh mendapatkan keuntungan sebanyak RM3,000 selepas hanya 1 minggu. Dan ini bersamaan orang kata apa 600% lah keuntungan. Jadi saya nak nasihatkan jangan tamak. It's too good to be true untuk mendapat pelaburan yang memberikan pulangan 600% dalam masa seminggu. Kan? Kalau begitulah semua orang boleh jadi kaya, dan ejen yang recommend kita untuk pelaburan ni pun sebenarnya tak perlu cari kita pun, baik dia je yang melabur kan, sebab 600% keuntungan dia. Jadi kita ni orang kata apa, bila ada sesuatu syarikat tu menjanjikan pulangan yang sangat tinggi, kita semak dulu. Kita semak dulu, kita tengok contoh lah kan. Kita semak kadar dividen tahun-tahun sebelum ni bagi skim-skim pelaburan yang sah. Contohnya seperti Amanah Saham Bumi Putra, Amanah Saham Nasional, Kumpulan Wang Simpanan Pekerja, Tabung Haji. Ini semua adalah badan-badan yang sah. Berapa peratuskah dividen ataupun keuntungan yang boleh diberi pada kita? Kesemuanya dalam sekitar bawah daripada 10% kan, 8% ke bawah. Kalau ada syarikat yang boleh menjanjikan orang kata apa 600%, kita kena nampak kan. Kadang-kadang ni saya yang terpedaya ni bukannya pelajar-pelajar sekolah, tapi yang seusia saya yang dah 50-an, 40-an, 30-an ni, itu yang kadang-kadang saya rasa macam kenapalah tak fikir lama sikit, fikir panjang sedikit kan. Jangan mudah terpedaya, jangan rasa nak cepat kaya, jangan tamak ya. Baik, langkah ketiga adalah dengan menjadi bahawa tiada pelaburan yang hadir tanpa risiko ya. Pada asasnya semua pelaburan, you know, you play with the risk already. Ya, semua pelaburan ada risiko. Tinggi risikonya, biasanya tinggilah pulangannya, dan rendah risikonya dan rendah pulangannya. Tapi kalau ada produk-produk yang dikata tidak berisiko, yang itu pun kita kena berhati-hati. Ya. Dan yang keempat ni, langkah keempat ni adalah lakukan orang kata apa, pemeriksaan dengan pihak berkuasa yang relevan lah. Barangkali ada individu ataupun syarikat yang mungkin cuba memperdaya kita semua untuk membuat pelaburan dengan mendakwa dua perkara. Satu ni dia kata, pertamanya dia kata individu atau syarikat ni disokong oleh badan kawal selia. Macam tadi lah, kononnya dikawal selia oleh bank negara dan dilindungi. Dan keduanya ni dia kata produk ni ataupun perkhidmatan ni dilindungi oleh badan kawal selia juga, dilindungi oleh PIDM. Kalau ada benda-benda macam ni, semak dengan bank negara, semak dengan PIDM. Jangan terus percaya, sebab kita dengar, oh bank negara mestilah betul, oh PIDM mestilah betul kan. Tapi macam kes Kak G tadi tu pun, dia terfikir juga. Dia kata, bila dia bercerita dengan saya, dia kata tak silap, dia kata iklan PIDM ni merata kata tak perlu bayar. Iklan PIDM kata tak perlu daftar, tidak ada pembayaran. Dia terfikir, kenapa saya kena bayar? Itu yang dia datang ke, tapi masih percaya lagi bahawa kononnya pelaburan tu di orang kata apa, dilindungi oleh PIDM. Dan ini adalah antara perkara-perkara yang selalu kita dengar lah. Sebagai saya, seorang yang bekerja di Perbadanan Insurans Deposit Malaysia ni, selalu mendapat haluan-haluan yang sebegini. Baik tuan-tuan, kita boleh menjadi lebih peka. Kita boleh menjadi lebih peka mengenai penipuan ni dengan orang kata apa, mendapatkan maklumat melalui bacaan akhbar maupun media sosial, ataupun melalui perkongsian daripada rakan-rakan, ataupun sesi-sesi seperti inilah yang dianjurkan oleh Security Commission ni. Bank Negara Malaysia ada menyediakan laman sesawang amaran penipuan yang mana Bank Negara menyenaraikan syarikat dan juga kes disiasat yang melakukan penipuan kewangan ni. Ada satu platform yang menyimak kesahihan sesuatu pelaburan, ataupun boleh saja call 1300885465 Bank Negara Malaysia. Selain itu, kita boleh semak latar belakang sesuatu pelaburan sebelum melabur. Kita boleh rujuk kepada platform yang disediakan oleh pihak berkuasa ataupun scam alert ni di laman sesawang agensi-agensi yang terbabit lah. PIDM pun ada scam alert, SC ada. Kita boleh pergi kepada Lembaga Hasil Dalam Negeri, ke WSP untuk menyimak dulu. Semak dan sahkan. Saya selalu sebut ni, semak dan sahkan, 4S. Tapi benda ni sama dia, semak. Maknanya semak sekali kadang-kadang tak puas hati, semak lagi. Tak puas hati, semak lagi. Sahkan, barulah teruskan. Kalau tidak, jangan. Modus operandi ni kebanyakannya sama. So kita kadang kalau kita dah dengar cerita ni, kalau tuan-tuan dengar cerita saya ni, dah ada trigger. Kalau lebih kurang lah macam Cik Rizwan cerita tu, dah ada trigger. So jangan mudah terjebak. Dan juga untuk PIDM, boleh hubungi PIDM. PIDM pun ada mewujudkan laman nasihat pengguna kewangan, ada scam alert juga yang menyiarkan beberapa contoh orang kata apa, bahan pemasaran dengan maklumat yang tidak tepat tadi mengenai pelindungan PIDM. Boleh ada kita letak surat-surat, kita letak brosur-brosur diorang, logo-logo yang diorang pernah guna, cuma kita delete lah dia punya nama-nama syarikat tersebut kan. Sebab mungkin syarikat tu memang didaftarkan, tetapi niat mereka dan tujuan mereka tu nak kalahkan, nak mengenakan. Dan sebagai konsumen kewangan yang bijak ni, kita perlu rajin lakukan semakan sebelum melanggan mana-mana produk ataupun perkhidmatan kewangan. Dan cek dulu, macam saya sudah kata tadi, semak dan sahkan. Dan kalau jadi mangsa, kalau sudah menjadi mangsa, biasanya saya sarankan buat laporan polis, Kemudian jangan teruskan transaksi, sebab kadang-kadang ada yang tak percaya kepada kami lah. Kalau saya bercakap dengan orang kata mangsa ni, kadang-kadang dia masih nak percaya yang mereka masih boleh dapat duit pinjaman tu. Ada yang masih percaya bahawa kalau dia teruskan, mereka masih boleh dapat duit pelaburan tersebut. Dia tak nak buat laporan polis. Tapi bila mereka teruskan transaksi, apabila scammer ni dah tahu yang mangsa ni telah menyedari mereka ni scammer ni akan mula mengugut Dia kata awak dah sign borang-borang ni semua, sekarang ni kalau tak nak teruskan, kita akan buat tuntutan daripada mahkamah sebab ada suat lawyer dan sebagainya. Dan kita akan kadang-kadang ni ketakutan kita akan terus bayar dan bayar dan bayar. Itu yang saya punya rekod panggilan yang saya terima seorang lelaki yang berusia 60 tahun. Cara cakapannya ialah mungkin orang yang berduit. Dia pun melabur di melalui Facebook ni tadi. Beliau telah membayar sebanyak RM160,000. Dan apabila membuat semakan di PIDM, saya beritahulah yang sewajarnya bahawa tidak ada pun kena-mengena dengan Perbadanan Insurans Deposit Malaysia. Dan beliau kata dengan saya, tapi benda ni betul, dia kata, saya percaya, saya mula-mula tu saya dapat untung sikit. Tu saya kata dengan dia, berapa peratus keuntungan? Dia kata 30% mula kan. Tapi saya kata, tuan, 30% keuntungan, tuan tak sedar yang 100% modal tuan berada di tangan scammer tu. Jadi dia kalau bayar tuan bayar 30%, duit tuan sendiri apa masalahnya kan. Jadi beliau kata sedikit-sedikit lama-lama RM160,000 beliau telah habis, tetapi keuntungan yang beliau dapat hanyalah RM3,000. Ini antara permainan-permainan skim pelaburan ya, berhati-hati. Oleh itu tuan-tuan mesti kata Cik Rizwan ni cakap banyak daripada tadi kan, tak kena bayar lah, tak kena charge lah, pelindungan PIDM lah. Tapi PIDM ni apa sebenarnya kan? Baiklah, saya terangkan seberingkas tentang PIDM ni. Di slides PIDM ni awak nampak ada bendera Malaysia kat atas tu. PIDM ni adalah sebahagian daripada orang kata jaringan keselamatan sistem kewangan di Malaysia lah, yang mana kami menyumbang kepada kestabilan sistem kewangan negara. Kami ni adalah sebuah badan berkanun bebas, suka dikenali sebagai agensi kerajaan, ditubuhkan di bawah Akta 2005 dan ditubuhkan pada tahun 2005 di bawah Akta PIDM 2005. Dan untuk meningkatkan kestabilan sistem kewangan ni, PIDM bekerjasama dengan Bank Negara Malaysia, iaitu Bank Pusat dan juga penyelia dan pengawas selia utama, dan juga Kementerian Kewangan sebagai kuasa keseluruhan untuk sektor kewangan dalam menggalak dan juga mengekalkan sistem kewangan yang stabil. Kenapa kita kata begitu? Sebab PIDM lah menjamin kita punya akses kepada wang simpanan kita di bank sekiranya bank mengalami kegagalan ataupun muflis. Maknanya bila bank muflis, PIDM akan pastikan kita akan dapat semula wang yang kita simpan di bank tersebut. Jadi kita ada bank-bank ahli dan sebagainya. Kalau di slide yang seterusnya, saya terangkan sedikit lagi. PIDM mentadbir dua sistem, iaitu pertamanya sistem insurans deposit. Sistem insurans deposit inilah yang saya sebut tadi, melindungi simpanan wang di dalam bank. Sekiranya bank mengalami kegagalan, sistem insurans deposit inilah yang akan pulangkan wang kita sehingga RM250,000. Dia tertaklulah kepada berapa banyak simpanan kita dalam bank tersebut. Kalau kita ada RM1,000, dipulangkan RM1,000 lah. Kalau kita ada RM300,000, RM250,000 telah dijamin oleh kerajaan melalui Perbadanan Insurans Deposit Malaysia. Begitu juga satu lagi sistem yang ditadbir oleh PIDM ialah sistem pelindungan manfaat takaful dan insurans. Dalam bahasa Inggeris kita panggil Takaful and Insurance Benefit Protection System ataupun TIPS. Ini juga melindungi polisi insurans kita ataupun sedia takaful kita sehingga RM500,000. Kalau tuan-tuan pergi ke laman web PIDM, tuan-tuan boleh tengok boleh semak dalam jadual yang tertera dalam laman web PIDM berapakah limit-limit pelindungan PIDM ni ya. Ada 42 bank ahli dan juga 50 ahli penginsurans. 42 bank ahli ni 26 terdiri daripada commercial bank, bank-bank commercial, dan juga 16 bank-bank Islam. Bank-bank commercial ni macam bank Maybank, Public Bank, Affin Bank, Alliance Bank, Hong Leong Bank, Hong Kong and Shire Banking, Citibank, ni semua bank commercial. Bank-bank Islam pula contohnya macam Bank Islam, Bank Muamalat, Affin Islami, Alliance Islami, Hong Leong, HSBC Amanah. Ini adalah bank-bank Islam. So kesemuanya ada 42 buah ahli bank. So untuk menyemak ahli PIDM ni, kita boleh pergi ke laman web PIDM untuk tengok senarai nama bank-bank tersebut. Dan juga untuk polisi insurans dan sedia takaful, kesemua syarikat insurans dan juga takaful di Malaysia ialah ahli PIDM. Baik, dan kalau saya nak terangkan secara ringkasnya, saya rasa info strip ni paling mudah nak difahami bagaimana PIDM melindungi simpanan bank anda. Apabila anda membuat simpanan di bank ahli PIDM, simpanan anda dilindungi sehingga RM250,000 sekiranya bank anda muflis ataupun bankrupt, dan pada ketika itu PIDM akan membayar semula simpanan bank anda. Semudah itu, ya. Tiada charge, tiada pendaftaran, anda ada akaun saja di bank, bank-bank ahli PIDM, secara automatiknya anda telah dilindungi oleh dijamin oleh kerajaan, melalui Perbadanan Insurans Deposit Malaysia. Betul juga dengan sistem manfaat insurans dan takaful ni tadi. Apabila anda memiliki polisi insurans takaful, manfaat insurans dan takaful anda dilindungi oleh PIDM. Sekiranya syarikat insurans dan takaful anda muflis, PIDM akan memastikan pelindungan manfaat yang berterusan kepada anda. Untuk maklumat lanjut, kalau ada persoalan tentang peranan PIDM dan juga perlindungan yang disediakan, tuan-tuan bolehlah singgah di booth PIDM hari ini untuk bertanyakan soalan-soalan tentang PIDM. Kita ada pegawai-pegawai yang bertugas, boleh chatting di chatbot tu, di chatbot booth PIDM ni, dan bertanyakan soalan mengenai PIDM. Dan juga di sini tertera nombor toll free PIDM, Isnin hingga Jumaat 8.30 pagi sehingga 5.30 petang. Boleh buat panggilan ke PIDM, tiada bayaran, toll free, kita yang bayar. Tuan-tuan telefon kami percuma saja. Dan juga selain itu kita juga ada Facebook dan juga LinkedIn dan juga website PIDM. Tuan-tuan bolehlah melayari website PIDM untuk mendapatkan maklumat lebih lanjut tentang peranan dan fungsi PIDM. Dengan itu tuan-tuan, saya harap perkongsian hari ini sedikit banyak memberikan gambaran keseluruhan tentang scam yang menyalahgunakan nama PIDM dan logo PIDM ni. Semoga kita semua tidak menjadi bangsa kepada scam yang berluasa di luar sana. Dengan itu tuan-tuan dan puan-puan, saya sudahi dengan wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Sekian, terima kasih.
Merancang untuk masa depan anda? Di samping menabung, anda juga boleh melabur dalam produk pasaran modal seperti saham, unit amanah, pendanaan ekuiti ramai, pembiayaan antara rakan setara dan skim persaraan swasta. Menafikan tanggapan umum, anda sebenarnya boleh mula melabur dengan jumlah yang kecil. Pastikan anda melabur melalui individu yang berlesen atau berdaftar seperti remiser atau perunding unit amanah. Anda juga boleh bertanya dengan broker cara untuk melabur dalam talian. Suruhanjaya Security Malaysia (SC) merupakan badan kawal selia yang menyediakan dan menguatkuasakan undang-undang yang berkaitan terbitan, pembelian dan penjualan produk pelaburan. Ini adalah bagi memastikan hak anda sebagai pelabur dilindungi. Apabila undang-undang atau peraturan ini dilanggar, SC akan mengambil tindakan penguatkuasaan. Sekiranya anda mempunyai sebarang pertanyaan atau aduan, hubungi SC dan sekiranya timbul apa-apa pertikaian keuangan yang berkaitan pelaburan anda, dapatkan bantuan daripada SEDRAC untuk menyelesaikan pertikaian anda. Dalam jangka panjang, pelaburan boleh membantu anda membina kekayaan. Seperti dalam apa jua yang anda lakukan, pelaburan juga mempunyai risiko dan ganjaran. Yang penting, mulakan dengan pengetahuan dan perancangan yang tepat. Mulakan perjalanan pelaburan anda sekarang. Layari www.investmartsc.my.
Tidaklah berhidup makmur. Semua mau gaya, tapi jangan salah langkahnya. Jika terpercaya, hidup sengsara. Macam-macam skim yang ada, mesti faham mana dilabur. Lesen SC pastikan ada, silam labur duit lebur. Ingin tahu berdasar yang ada, laman web InvestSmart jawapannya.
Pesanan ini dibawa oleh Suruhanjaya Security Malaysia.
Hai, saya Siti. Suruhanjaya Security Malaysia atau SC telah menerima banyak pertanyaan tentang skim pelaburan yang menjanjikan pulangan yang amat lumayan dalam waktu yang singkat. Walaupun anda sudah membuat keuntungan yang berlipat kali ganda hanya dengan modal yang kecil, anda akan diminta membuat pelbagai bayaran seterusnya sebelum anda boleh keluarkan keuntungan tersebut. Tetapi awas, ini hanyalah helah untuk anda terus memindahkan wang kepada skamer sebelum mereka menghilangkan diri. Oleh itu, jangan cepat terpedaya dengan janji yang indah kabar dari rupa. Ketika melabur, elakkan dari mendepositkan wang anda ke akaun bank orang perseorangan. Institusi-institusi seperti SC, Lembaga Hasil Dalam Negeri dan Bank Negara Malaysia tidak pernah membenarkan sebarang bayaran yuran atau cukai dibuat melalui akaun orang perseorangan. Pastikan juga pelaburan tersebut ditawarkan oleh pihak yang sah dan bukan oleh pihak yang diklon. Sentiasa semak senarai peringatan pelabur SC dan juga daftar awam pemegang lesen. Sekiranya anda masih ragu, hubungi SC di talian 03 62 04 8999 atau email aduan@secom.com.my. Ingat, silap labur, duit lebur. Pesanan ini dibawakan oleh Suruhanjaya Security Malaysia dan InvestSmart.
anda ingin menjadi kaya. Tetapi awas, terdapat banyak skim-skim pelaburan tidak sah di pasaran. Jika ragu-ragu, anda boleh jumpa kami untuk memahami formula TIPU. Apa itu TIPU? T, tidak akan rugi. I, indah khabar dari rupa. P, peluang hanya sekali. U, untung besar. Ingat dan berwaspada dengan formula TIPU ini. Untuk sebarang pertanyaan mengenai pasaran modal, anda boleh hubungi kami.
Merancang untuk masa depan anda? Di samping menabung, anda juga boleh melabur dalam produk pasaran modal seperti saham.